Okay, welcome everybody. Good morning to those of you that are here in the room. We're just about 15 minutes away from our start time to today's round the clock trader event. We've got an online day of trading talks, seminars, panels, prop firm CEOs, brokers, traders that have made a lot of money from the markets, and traders that are still getting started. So whatever sector you fall into, we'd be pleased to hear from you during the conversation with the chat box on the left. There are two almost chat boxes to be confused. One is a question box, which we don't really generally use. The other is just the chat. So that's the one that we use more for this event. So let me see if I've got that up. And I'll say hello. If you're there, we can say hello. Angela, I think you might be in the room. Maybe you can put something in the chat just to let me know it's working okay. And we'll see if we can bring our first speaker through, Jason. There we go. Okay. Just trying to test the systems, guys. Can everybody see and hear me okay? First of all. There we go.
Simon, hi mate.
Hi, good morning. How are you?
I'm all right. How are you?
I'm fine. I'm fine. Just getting the hang of the controls of this. I haven't done one of these webinars for, it's like jumping into a hire car. You're like, oh, well, the buttons. You're still driving an old version, and they've got
Yeah.
more modern. So a few tweaks here and there, but we'll get the hang of it. How are you doing?
That's exactly what it's like for me when I jump in a hire car. I'm like, sometimes I don't even know how to start the bloody thing.
Yeah, keys are old fashioned now, aren't they?
Yeah.
Oh, fantastic. Well, thank you for joining us. We've got a few here in the room already, which is great. we're just trying to make sure that everybody else can see and hear before we jump in. We're about 10 minutes away from getting started, so if you're okay, you're in and you're logged in, I can hear and see you. I'd just like to ask anybody else that's in the room to use that chat box on the right hand side. There are some symbols up the right hand side of the screen. The top one is the chat, and if someone can just say hello or yes, we hear you, we see you, that would be great. Angela, I can see you're here, maybe Tony as well, just to give us that knowledge. Okay. I've called everybody here. It all seems to be. Let me just. Oh, there we go. Gus. Thank you, Gus. You've confirmed the system's working. Angela, there we are. Hello. Yes, I can hear you, see you fine. Okay, fantastic. So people are coming into the room. Just before we get started, just give you a bit of a rundown. Some of you might have been on these round the clock trader events. I've been doing them for more years than I care to recall. The idea is to put a whole lot of good speakers in the room together, and from this we can sort of distill what's happening in the markets, what new sort of products and features there are for trading. Maybe do some sort of live market analysis. I think Jason's going to give us an overview of the markets when we get start. There we are, Nick. Thank you. Good to have you here. Good morning. And by the way, let us know where you're from in the chat box. Always interesting to find out where people are from. I think we're probably largely UK, but welcome to anybody that's joining us from. Let's see who we can get our furthest away attendee. Let's see what we can get from the furthest away in the world. Anybody from Australia might be just staying up late, so that would be fun. So yes, we're leaning more into prop trading, of course. This day, I'm doing an event this year focusing on the prop trading space. So it'll be interesting to hear that. But we're not talking exclusively about prop trading. We're talking about trading. So we're talking about how to analyze the markets, how to understand how to develop a strategy, manage your risk, and all these things that we hear about. And we're trying to. Oh, Zambia, fantastic! Welcome. There we are. Jib, we're not far away actually. Gus, I'm just along the coast a little bit from you, so welcome. Isaac from Nigeria, welcome to you. Great. Oh, this is fantastic. We do. It makes this. Jason, you'll agree with me when you get live engagement with people on these events. I know you do this every day, so it's like it's a daily thing for you. But it makes it more fun when you're talking to people and you get some questions.
Yeah, lots of questions, please. That's always good.
Botswana, Nigeria, Zambia. So people have been talking to me recently about when are we going to take the prop trading expo to Africa, and judging by some of the interest that we're getting already this morning, I think it probably we should start making plans for it. Well, welcome everybody. So we've got a full day ahead of us. Let me just run you over the schedule before we turn over to Jason to give us an overview of the markets. And as I say, Jason Sen is here. Long history that you've been a trader all your life. I think you went into the city as a young laddie and
age 19.
I know you've had great highs, made a lot of money, lost some money.
Had some lows.
You've seen it, you've done it, and experienced it, which is what makes you a great person to pass down the experience. So Day Trade Ideas is the website where I guess you could go if you wanted to find out more about Jason. All your links will be there. You just sort of Google Jason Sen, SEN, or Day Trade Ideas, and you'll find all the links. You do lots of YouTube videos and everything. Fantastic. So we're spending half an hour with Jason to get us started this morning. Then we're going over to Mark Halstead. Now, Mark is the founder of Traders Mastermind of the UK. He's built a huge YouTube channel over the years, looking at spread betting, of course, when it launched, and also now runs the fantastic sort of education membership group for, not particularly for prop trading, just general traders, live account and prop. So the gap between the good and the great and how to close it. I like that title Mark's come up with. It's a good title. 10 a.m. Our speaker will be Oliver Newland, who's the CEO of Fintive Funding. Fintive Funding are headline sponsors for the London Prop Trading Expo in October. They're a huge prop firm. They've been around 5 years plus, offering trading in all sorts of different assets. So we'll go. Oliver's joining us for half an hour to give us an update, because there's lots of exciting things going on with Fintive and Fintive Markets, the broker, and all sorts of things there. So we'll look forward to that. 10:30. Hot on the heels of Oliver, we have another prop trading CEO, Daniel Martin, again the co-founder of City Traders Imperium, where again one of the oldest prop firms, been around for 8 years, which is a long time in the prop sort of retail prop industry timeline. So there's sort of FTMO, City Traders Imperium. So Daniel's coming on to join us at 10:30. Get funding, stay funding, scale. He really wants to look at saying this is how the prop firms work. So you understand this, it will give you an edge in terms of how to understand the way to trade with a prop firm, because there are some nuances. It's a little bit different. Alex Chris, Tradify Crypto prop firm, giving us a talk on crypto trading, 11 o'clock. Then we're over to Rajan Dal, Mastering the Mind Game of Trading Psychology. There's a lot more, but that's this morning's schedule, so I won't bore you too much. But just to give you a flavour, we've got some great talent, hundreds of years worth of trading experience, probably combined with all the speakers. But let's get back to today. And Nick's saying that we could do the expo in Cape Town. I think there's just been a Finance Magnets event there, so maybe you went to that. I'm not sure. So it's great to see you. Jason, you and I have known each other for years. We've never really worked together that much, so it's great to get this chance to start to do this. You're helping me today, not just by being a presenter at the moment, but also moderating two of the panels. So you're interviewing some traders who have really cracked the code in terms of prop trading. Max van der Hagen, Alex Chris, Zaki, or Cypher as he's known online, and Zamco. They've all done extremely well and made a lot of money from the markets, from prop firms, that is, I should say, from payouts, and they also have extensive followings online, as you'd imagine. So really looking forward to these talks, and combined with your experience to try to understand some of the differences in the approach to the markets will be fascinating. But I thought we'd start off this morning. We're just about to turn on to 9 o'clock. We'll start off this morning by asking you to give us an overview of the markets. It's all been a bit choppy, of course, with the war, Trump, as usual, all sorts of things are going on. So can I ask you to give us an overview? Do you want to share screens and look at your charts?
I can share some screens as well. Let me see how I do that. I'll chat while I'm doing that. Well, as I'm sure everybody knows, the markets are completely dominated by what's going on in the Middle East. I think traders and investors are just hinging on every next comment from Trump or Iran. The beginning of the week, it looked like we were, well, according to Trump, we were hours away from an agreement, and that process is certainly being delayed. I think we had a bit of a reaction to that in the market yesterday. Gold dropped significantly. I think it was a total of $150 from peak to trough. I I've scoured the internet for reasons why that happened, and there aren't any clear reasons. I think maybe gold was the first market to react to the fact that this agreement just isn't coming yet. Gold was certainly higher at the beginning of the week in expectation of something more positive. Silver moved a little bit lower, not quite as badly hit as gold yesterday. We'll have a look at gold in a minute if you like. Stock markets seem to be completely ignoring the war. They're just very strong, keep going up, hitting new all-time highs. Bit of a correction yesterday, nothing serious. I'm a trend follower, so as far as I'm concerned, I'll buy in a bull trend until I see something that tells me I'm wrong. But right now, I wouldn't dream of being short the stock markets. I've been long all the way up. It's interesting because on social media there is a lot of chatter about markets are overbought, they're overdone, they're overvalued. The risks are all to the downside. I think we've even had central bank figures talking about that. I think Bank of England a week or two ago, someone was warning about downside
Yeah.
risks to stock markets. But as I say, I'm a trend follower. I follow the charts. I look at the technicals. I don't guess. I don't gamble. And as far as I'm concerned, the markets look strong.
Trying not to predict it. But, I mean, if we've heard all these lines. The markets can remain irrational a lot longer than you can remain solvent. So it just goes. I think trend following is the way to go. I mean, are there any markets that you favour over others in terms of the way the cycles they tend to repeat when they open or anything like
that? For some reason, I seem to be better at trading gold. The technical levels seem to work for me. I'm not sure why that is. I don't know whether it's just experience. It had been a great market when it was in a bull market, and that's just again going back to what I said about being a trend follower. Trading a bull trend is just so simple. And as you said, markets can stay, can follow these trends for way longer than you can possibly imagine. And I learned that the hard way a couple of decades ago. Kept selling the stock markets, kept selling things that were going up, and realized, okay, this is ridiculous. Just don't fight it. Just go with it. It might seem irrational, but
I read that in your bio. I mean, if it's not too painful, could you share what happened? Because I know that you, in your 20s, you made a huge amount of money. So what were the lessons that you learned? If it's not too painful to take you back there.
Yeah, no, not at all. Well, I did make a really big seven-figure sum when I was about 23 or 24. And of course, it was great to make that money. But this is one thing I would warn people against when they have an early success. And especially if it's a bit more through luck than your ability. You've got to be honest with yourself if that happens. Because after that, I wasn't satisfied with just going to work and taking normal sums of money out of the market. I was then constantly looking for this big hit. I wanted to keep swinging the bat, and I was just gambling and I was just guessing. And
Right.
I probably didn't make any decent money for another 2 or 3 years after that. So, I would warn people: be aware. If you've had a good piece of luck, be honest with yourself and say, okay, that was lucky. Let's get back to basics again. And after a bad run, of course, we tend to do that anyway. We tend to sort of withdraw, get our feet back on the ground. But it's really important to do that when you've had a really good run as well.
Yeah, I mean, this feeds into the trading psychology, doesn't it? In terms of just trying to keep your feet on the ground, like you said, because you do get a bit. You think, oh, that's me, Wolf of Wall Street, and I've had one payout or made one big.
And I can tell you, after 40 years, I've realised how little I've known throughout my career. Really. It is you've got to stick to the basics. I don't know where I now know that I don't know where the markets are going. I haven't got a clue. I wouldn't even bother guessing. People or my subscribers say, "Oh, I bought some gold. I bought gold. What do you think? Where's it going?" And so I haven't got a clue. Nobody knows where it's going within the next 5 minutes, 5 hours, 5 days. When you put a trade on, it's about risk versus reward, sticking to your system. It's not about guessing direction.
That's it. Well, let's go over to the charts, shall we? And
yeah. Now, how do I share this?
If you can, down the bottom right, there's a share media button.
Yeah, here we go. Okay, so can you see that? Is it coming up?
Perfectly, thank you.
Great. Okay. What have I got up there? I've got gold up there at the moment, so
I'll
that's
take
quite handy.
myself
Now,
out of here.
okay,
Actually, I'll take myself out there.
okay. So looks a bit confusing because I've got three time zones on my screen. So I'm going to start with the daily chart, which is on the right here, and this is a frustrating chart to look at because, as you can see, we've really gone nowhere since at least here 29th of December. So I could say for the whole of 2026 we've really gone nowhere. Obviously we've chopped around, we've gone up, we've gone down, but when you consider that on the 29th of December the open was 45.39 and we're now trading down at 43.65, so we're actually lower than we were right at the end of towards the end of December. Let me see, 31st of December we were trading at 43.46. So would you believe we're almost exactly at the same price as we were on the very last day of last year. And I struggle with these kind of markets where there is a lack of direction. We keep reversing, we're chopping backwards and forwards, and I think most people do. I've talked to friends who have algo trading funds, and some of them have just switched the algos off because they're just not working. So we've seen some declines in the last 2 or 3 days. We're breaking below the 200-day moving average, so I'm taking that as a more negative signal right now. You can see the last time we tested the 200-day moving average, my red line on this chart, we had a strong bounce off it, a very strong bounce, and we're not seeing that strong bounce at the moment. Admittedly, that last test was bang on also the 38.2% Fibonacci level, so there was a really good reason why we did bounce off that level. So who knows? We may be headed back towards there. The question is really whether we hold below the 200-day moving average, which is around $4,400. Yeah, in the short term at least, I'm sticking with this negative momentum and expecting further losses. This morning, just on the 1 hour chart here in the middle, I can just scrunch that up a bit. I use Fibonacci levels a lot in my trading. You can see very, very weak bounce. We're not getting very far. We're not even managing to beat yesterday's low so far this morning. Yesterday's low 4,400, and we have managed to get to 43.95. So you can see that that yesterday's low currently is causing some resistance in the market, and there's another reason for that too. If you can follow my different time scales. Just move that down a bit. So my Fibonacci levels that go all the way back to March the 23rd in gold show that there is a 61.8% level at 4,400. Now I believe that, if I can just grab this, I believe that is why we made a low yesterday exactly at 4,400. We bounced off the 61.8% fib, but as you can see on the 4 hour chart, we're now seeing some serious declines, some big red candles, some stability right now as I speak to you, but I don't think that, I'm not seeing that as a positive at the moment. So I think that the risks are to the downside in gold for the next, well, maybe into the end of the week at least. It's difficult to say longer term, isn't it? We just don't know what's going to come out of the Middle East to move the market. Gold has reacted very positively when we have seen signs of de-escalation of tensions, potential peace agreements. So I would imagine that will still be the case. It certainly was on Monday. Gold spiked higher in anticipation of that peace agreement, and since then we've fallen away.
I mean, we've got a president that's, let's face it, manipulating the markets every Sunday. He's putting something out, putting the trade on the Monday morning, and then realizing that, oh well, it wasn't true. There's no way that people can be expected to apply any kind of analysis, or I mean, even this even interrupts all the trends, doesn't it? Really, so it's a difficult time for traders. I've seen a lot online about people just saying, I'm done. My usual stuff's not working right now. It's not the experience of people in the room as well. We got some people that are maybe tired of Trump with these markets to sort of hark back to calmer times a few years ago, when all we had to do was deal with COVID and things like that, I guess. But at least there was some sort of what's the word? There was a way to anticipate how one thing would impact on this market, that market. You just
Yeah, we were focused on genuine fundamentals, whereas now we're
yeah
focused on the next words that come out of Trump's mouth, and we all know that we can't believe them. He's always trying to spin it positively, but the reality can be quite different, and it does make it it's almost impossible for investors, I would imagine, because you can't possibly have a view longer than 7 days. And certainly for short-term traders, retail traders, it's extremely difficult as well. You can get caught on the wrong side of a trade on a comment, and it's not really what we're in the game for.
Yeah, I mean, it strikes me that there's this old saying that the stock market is priced on perception, future, all the time, and what people think are going to happen. And Trump's great at talking about what he wants to happen and how he wants the economy to be and things like that. So you've got this stock market, but I think there is a danger that it's overvalued as a whole. But as I say, like you say, trying to predict what's going to happen it's been a costly mistake sometimes. So better to follow the trend like you do. So what are we looking at here in terms of charts? What are we on now?
Okay, so that was gold. I've just seen a comment which I'll reply to actually. Let me see. Berry Nick is saying that gold could go to 3,000. If we break below 4,000, could be a down year for gold. We've been bullish for 3 years. Well, maybe. Can't rule anything out. Right now, I wouldn't be at all surprised to see us head towards this moving average I've got here at about 41.35. Maybe retest that low from last month. It's only a month ago. We were trading down just below 4,100. So that's certainly reasonable. A reasonable target, a retest of that low. If we started breaking below 4,000, well, yeah, that would obviously. Hang on, I've scrunched that chart up into the corner of my screen, which isn't a very clever move, is it? If we were to start breaking below 4,000, then yeah, the downside could open up quite swiftly. What have we got down here? This is an October 29, end of October low, 38.86. So a break below there. Well, who knows? It could take us to the 50% fib, which is at 36.15. 3,000, I'm not so sure about. That's a heck of a long way down. I wouldn't like to project that. But yeah, so we are certainly seeing some downside momentum at the moment. If anyone wants me to look at a specific market, I'll be more than happy to do that. I'm struggling with Forex markets. I'll warn you in advance, purely because they're going nowhere. Really, really stuck in short-term ranges and medium-term ranges. Really going nowhere. We're just seeing gold actually hit oversold levels on the 4-hour chart. Now, historically, they haven't stayed. Gold has not stayed oversold on short-term charts for a significant period of time because we have been in bull trends, and when we've become oversold, we've bounced quite quickly. But this might be a warning that the downside is going to be a little bit more sustained, because you can see here on the slow stochastic, we've stayed oversold for quite a while. That might mean that any bounces are going to be more limited. Bounces to the upside might be more limited. We might reverse when we start hitting the first or second resistance levels. That can sometimes mean that. Anyway, just a small observation. Just check my screen, see if anyone wants me to talk about any particular markets. A question here: Do I trade stocks? I don't trade individual stocks, but I do invest in stocks. I've got a sizable amount in Tesla actually at the moment. I'm a big Tesla believer. Yeah, FX has been slow. It's really been a problem. Okay, so well, on that subject, let's have a look at some stock markets, because we are getting some developments in there which are worth noting. Just get my screen to update.
Yesterday was a good day to be short Ferrari. I noticed all
Yeah.
the Ferrari. A few brave voices saying that actually, no, this is the future of Ferrari. Don't know. I mean, we're kind of same generation, Jason, aren't we? Ferraris. You're a aficionado yourself, aren't you? Of the real Ferraris from yesteryear, but not so keen on the electric one, I have to say. Luce, I think it's called Luce or something.
Luce is it or something?
Luce.
Yeah, I agree with you. I think it's awful. I've got a nearly 40-year-old Ferrari 328, and I do love it. It's not a fast car. It's like the one that was in Magnum. For anyone who's old enough to ever watch Magnum, and I love that car. But so yeah, I was quite disappointed in that. But anyway, maybe I'm wrong. Maybe I'm just a dinosaur, and that's the future.
Netflix, next thing. Maybe we can have a peek at that chart. Netflix.
Okay, I'll try and get that up. I don't have too many stocks. I think I have access to stocks on this chart. But what I'll do is I'll just go through the S&P to start with. This is the 4-hour chart. 4-hour chart is pretty much my go-to chart actually when I'm looking for trends. This time frame suits my trading style. And if I go all the way back, well, I'm sure you already know the stock markets have been in a multi-decade bull trend, and buying the dips has been a strategy that's worked for a very long period of time. We obviously do get periods of time when there's sideways consolidation. That's perfectly normal. But this latest bull run has been going since the 1st of April, 30th of March, when we decided to stop focusing so much on the war, look through. That's what I was going to say. Whilst gold and maybe some forex markets are reacting into short-term developments in the war, we're starting to see the stock market see through that and look and be more of a forward-looking market, which is what you just said, Simon. I would agree with that. The stock market seems to believe that sooner rather than later there'll be some peace and oil price will drop. Inflation will be more under control. Bond yields have started easing off on that basis. So yeah, the stock market certainly is looking forward. Sideways movement today in the S&P. I think it's just a sideways consolidation to ease some overbought conditions. I'm looking at the E-mini S&P futures, by the way. I look at that because I think that's the most liquid contract, trades the longest hours, so it gives me the best quality data. Now, I've got some short-term moving averages around 74, 65, 74, 50, 55 when coupled with a short-term 23.6% Fibonacci level. I should really open that up, make it more clear. So I'm not saying we'll get there, but we could do. The market could do with maybe a little healthy downside correction. You're only looking at maybe another 1% drop to get to this level. So it's within the realms of possibility. I think the price action on the 4-hour chart backs up that this could be a good support level. We've seen some peaks on some candles, previous all-time high here, 74.55. So I'm sure I will be trying a long position if we do drop 1% and start to trade around here. And we've also got the 100 period moving average on the 4-hour chart gently making its way up towards that area. And I'm pretty sure if I open this chart up, we'll find that blue 100 period moving average has been quite a good support level in the past. We came close towards that almost 10 days ago on the 19th of May, but we bounced off it. I do find moving averages really helpful. You can see that the blue moving average here was working really well as a resistance level, and then once the price crossed over, it worked really well as a support level. So I do pay close attention to my moving averages. Look, going all the way back here, even you can see the blue 100 period moving average line doing a real good job of support and resistance in trending markets. They don't work so well in sideways markets. They don't work well at all. So that would be my buy level for the S&P futures. I'm just going to switch over now.
Stephen's asking a question, just touched on what we've been talking about. What do you think about indices, and do you think they're in a false position due to the market's sentiment, perception, and even manipulation? I mean, thanks, Stephen. Yeah, I mean,
good question. As I said earlier, I think the stock markets, at least, the stock market, as you said, Simon, is very much a forward-looking tool, forward-looking market. And I think that investors are seeing that the war will come to an end sooner or later. There has to be a peace agreement. I think both sides do want that. It's just the details that are dragging the process on. So I think that's what the stock market is doing. It's seeing that sooner rather than later, the oil price will come down, bond yields will come down, inflation will come down, and and it's still being driven by technology, isn't it? I mean, as I say, I'm a trend follower. That I haven't seen anything to indicate that the stock market will turn around. I don't guess. I don't gamble. I don't speculate. And right now, I see zero reason whatsoever for the stock markets to turn around and fall significantly. I might be proved wrong tomorrow, and we'll have a crash. But I can only do what I can only, you know.
Yeah.
I look at the chart. I read what's on the chart. I read the price action, and that's the only way I've made trading work for me over the last 40 years.
I mean, but people that are in the room, there's a good crowd in already. Just say bull or bear in the chat box. Just let us know what's the sentiment here on the global markets this year. I mean, are you a bull or a bear? Let's see on
Yeah,
the S.
that would
The
be
S.
really interesting.
It'd be quite interesting to see.
Oh, we can run a poll. Shall I do that? Can you do that? No. I think only
I
you can do that, Simon.
I
You're
think
the
we
host.
can, but I'm not.
No,
I know when I
don't know how to do
start touching buttons, I'll probably shut the damn thing down. We'll do it. I'll do a verbal poll. Just use
right.
just use the chat box, and see. Oh, fantastic! So, I mean, they do look quite healthy though. Like you say, it seems to go against the backdrop of where we are right now. So, there's optimism towards the end of the year. Obviously, when things go back to normal, wouldn't that be great? What a year it's been so far. Um, it's
Yeah. Well,
affected.
sorry, didn't mean to interrupt you.
No, I was just about to say it's affected us personally because of shows cancelled in Dubai and things like that. There's nobody that hasn't touched in terms of the price of gallon of petrol in the US and everywhere really. So long may it no, well, hopefully short may it come to an end and get back to normal. Terrific. Well, what platform are you on at the moment? Is that TradingView?
This is Metastock, but
This is
it's
a
powered by
Metastock.
TradingView. The data comes from TradingView, and I do find it very useful. TradingView, I believe, is as good as you need to get. I've had this platform for a long time, so I
Mhm.
just use it because I know the quality of the data is very good. But I believe TradingView is excellent and very good value. I'm looking at the Nasdaq right now. I can run through that if you like.
Yes, please.
Actually, further to the comment there by Stephen, I've I've been doing this a long time, as you know, and one of my problems was I kept selling the stock market, kept speculating that it would drop. God, I must have done that for years before I learned my lesson. And there was always someone who was saying that the stock market's going to crash. It's too expensive. I remember the days when Alan Greenspan, the Fed chairman, I don't know how many decades I'm going back there, but his very famous irrational exuberance speech where he was saying that the markets have got way too ahead of themselves. But, they just kept going. They've just kept going to this day. Throughout my whole 40-year trading career, they've just gone up, and buying the dips worked. We had the global financial crisis where the stock markets did fall very significantly, but they didn't stay down there for long. I remember the S&P hitting 666, and where is it now? 7,500.
Yeah.
They do just keep going up, and I think picking a top is a foolish game. Certainly didn't pay off for me. But looking at the Nasdaq now, we're seeing a small downside correction. I've got my Fibonacci levels on there. I've got a 23.6% fib at 29,726 on the E-mini June futures. And you can see we had a previous all-time high almost exactly there, 29,782. We've got some gaps there. I think it's a rollover gap, actually. So to me, this looks like a good support level. We've already bounced off it from, we had a low at 29,763 earlier this morning. So I would be watching that level. It looks like a good support. And if we break lower, we could be headed for the 29,350, 300 area. Again, that blue 200 period moving average could offer some more support around there. Those would be the two levels that I would be keeping an eye on. And I did promise to look at Netflix, didn't I? I'll just see if I can get that on my screen. Do you know what? I don't think I'm going to have time to find that one. Sorry, I don't already have it preloaded in my menu, so it's not. I'm not going to be able to do that. Apologies. Next time.
No problem at all. No problem at all. So, I mean, overall, but it looks like things are in pretty good shape. I want to ask the people in the room, actually, again, we're obviously doing a lot with prop trading firms. Anybody here who trades prop or live account? That would just be interesting to know if you're a live account trader or prop, just to give us a flavor for who's in the room. Michael Burries, yeah, the big short. Good point, Stephen. I tried to create that poll. I don't know if it's actually come up. I'm just not sure. I've created it, but I'm not sure if anybody can see it. So we'll leave it there. We'll just use the chat box.
Yeah.
Any experience with prop trading, Jason?
Sorry. Carry on.
Prop on live, Nick says.
Nasdaq can touch 32,500 this year. I think that's a reasonable target. Yeah, I think that's very realistic.
Oh, great. Nick says you can see the poll. Thank you. This platform's updated a lot since I last used it, so I'm not 100% in all the controls.
Yeah, I've got the poll as well. I've just voted.
Great, Jamie. Thanks. Yeah, I mean, prop trading is taken center stage the last couple of years as a great aggregator, the democratizer for people to get into the markets. When I started doing these events 10 years ago, these webinars, this chat box would be full of questions for every speaker saying, how much do I need to start trading? How much do I need to earn £1,000 a month? And the brutal truth, wasn't it, Jason, is that you should start with a considerable account size to be able to not have to take such big risks to earn that kind of return. Because what is a realistic return? Would you say in terms of percentage over, or on trading over a month? Should you be targeting 10%?
10% is not unrealistic, but
Yeah.
it's also not easy. It doesn't sound like a huge amount, 2.5% a week, but to try and do that week in, week out, I think a lot of people would struggle. I wouldn't say that it's easy for me to do 10% consistently month after month after month. I know there are people that will do that, but I'm risk averse, so I'm more worried about managing the downside than going for the big numbers. And I think more ambitious people that take more risk can certainly achieve that.
That's it. Well, when you're trading with your own hard-earned capital, you do tend to become a bit more risk averse, don't you? So step forward, proprietary trading, where you must have worked with proprietary trading firms, but in the older sense, I guess, before, where you were trading real live money from a firm.
Yeah, well, on the 90s and on the London International Financial Futures Exchange, I was a market maker, so I was a liquidity provider in an options pit on the floor, and that was capital intensive. So I was lucky enough to have someone financing my positions. He was a guy who had a company which was in those days it wasn't called prop trading, it was called a corporate local. So I was a local, in other words, self-financed, but I was actually financed by this company, this particular individual in particular. So yeah, I guess I was one of the original prop traders, even though we weren't called that at the time.
The pressure must be on, because if you had a bad day, it would be right on the phone to you. Well, it'd be a big mobile phone in these days. But
yeah, size of a brick. Oh, I called my boss at 2 a.m. in Chicago on the morning of the 1992 election in April 1992, to tell him that the market had just opened and I was down £100,000. And in those days, £100,000 was probably equivalent to about 500,000 now. It's not a nice feeling at 7 a.m. to be down 100 grand when you're 23 years old.
Wow. And not one grey hair on your head, which is just injustice.
You there.
Yeah, okay, all right. Listen, Jason, thank you. We're just that's us up to 9:30. We're going to go over now to another speaker. We
I'll leave you
will.
to it. Thank you so much.
We will leave it there, but we're going to see you later on at 12 o'clock to come back and help moderate the panel. So.
Indeed.
And see
Great.
you later.
Good luck with it all, guys. Thanks so much for today.
Thank you,
Catch
Jason.
soon. Bye-bye.
Fantastic. Okay, so we're going to go now out of this session into the next session. You don't need to do anything. I will sort of open up the next session and we'll pull you all into that. So just stay on. Okay, fantastic. So we're in session number 3 already. Our next speaker, Oliver Newland, is the CEO of Definitive Funding, the prop firm which we are pleased to have as headline sponsors for the expo this year. Oliver's just logging in at the moment, so I'll just give him a little bit of help there to log in. So we'll just give Oliver a second or two. He will join us. I hope you enjoyed that. Mark Halstead, it's the first time I've had him speaking at the Round the Clock Trader. I thought he was fantastic. Lots of, sometimes it's just focusing on understanding the days that are not working versus the days that are. Let's look at the thing. I'll see if I can find Oliver. There we go. You are in. Fantastic, Oliver. I'll bring you into the room now. The chat bot's back on. Oliver, good morning.
Hi, how's it going?
Very well, thank you. I've just switched the record button on. There we go. So welcome, Oliver Newland, CEO of Definitive Funding, which are, I'm pleased to say, are our headline sponsors for the London Prop Trading Expo this year. Terrific to have you on board, terrific to have you here. It looks nice and sunny in Dubai. It's
Yes, it is. Oh, I think England's not too bad as well at the moment, and I think where you are as well, it's always got the sun. So yeah, the sun's following us around.
Everywhere's getting a taste of summer now. So great to have you here. We've got a nice group in the room. The record button is on. Daniel, hi, good morning to you. Tony, good morning. Angela's here as well. Isaac, great. Very much. We've done 2 sessions already this morning. We've looked at sort of traders, psychology. Jason Sen's given us an overview of the indices and the gold markets. So we've got a mix of prop and live traders in the room as well. Most people are fairly bullish. Stock markets, despite all the wars and all the troubles going on, the markets continue to go. I mean, you're from the city. You started as a banker, an investment banker. Could I ask you to just give us a little bit of background?
Yeah, sure. I mean, I've been in this industry for as long as I can remember. I was schooled at Harrow. I went to London School of Economics, done my undergrad and masters there. Then I moved to Zurich. I was working in Nomura as one of the largest Japanese banks as an FX forward trader. I moved back to London to set a hedge fund up, which I sold back in 2020. Went very, very well. And then 2021, we started Definitive Funding. Completely kind of a different aspect of what I was used to. I was dealing in the institutional side of the markets, and now it's purely kind of retail trader base, so it was a bit of an to get used to. It was took a bit of a customization, but now I think it's a great industry. I mean, we kind of timed it very well with Definitive Funding. From 2021 to where we are now, the market's completely exploded. So it was quite good foresight there. So we're happy to be where we are.
It's very good. I'm obviously pleased to be working with you. We've got the expos coming up. We're going to be doing the expo in London and Miami, and then we'll get back to Dubai next April when all this war is over. But I wanted to. We've only got really a brief time, 20-25 minutes. I wanted to sort of drill in, because I know there's been lots of things going on at Finitive. You never seem to stop innovating and launching new parts to the business. So I thought I'd ask you, if we could just get started. And just there's people on the webinar here that may not have come across Finitive. I know you're one of the top prop firms already. You can find you everywhere online. But just in terms of mentioning the headline sponsor for the show and things, why was now the right time? To start sponsoring events?
I mean, for anyone who's new to Finitive, I would describe us as a trader funding business. That's how it started, but it's evolved into a much broader trading ecosystem. Finitive Funding is where the actual story began, but over the last 5 years, we've built far beyond that. And today, Finitive is more designed to support the full trader journey, from providing and accessing capital through funding to trading in better conditions with Finitive Markets, tracking performance, managing risk, with our top-notch dashboard we like to think of, and receiving payouts through Finitive Pay. So, and eventually, what we want traders to be able to do is move between the different products we're building within the ecosystem. And I mean, that's why now we felt like it was the right time to step forward as the headline sponsor across London, Miami, focus on Finitive Futures, and then back to Dubai next year, because we're at a point now where the business has evolved very quickly. We've got the new dashboard. Finitive Pay is becoming a much bigger part of the trader experience. Finitive Markets is moving into its next phase, as a standalone broker, and like I mentioned, Finitive Funding's just around the corner. So it's not really just about visibility. It's more about showing the industry what Finitive is becoming. We're no longer just a funding company. We are building this connected infrastructure around the full journey, and it just felt like the right moment to kind of be able to tell our story properly, in this kind of expo environment.
Tell the world face to face at expos. I'm a great fan, obviously. I mean, when we talked the other night, you were telling me about this survey that you've just run. I mean, 20,000 people took part in the survey. What did you learn from that?
Well, I mean, we ran this survey because as we're evolving, we wanted direct feedback at scale from the people who actually are using our products. And to be honest, we were actually expecting around 5,000 completed surveys, but we got, like you mentioned, over 20,000 responses. So it kind of knocked us back a little bit. We weren't really expecting that much. But when a lot of companies say they're trader focused, but if you really want to build something for traders, build this infrastructure and ecosystem, you've got to ask them, what's working, what's not, where the friction is, and what do they want next. So that was the kind of main purpose. And like we said, the response was huge, and the kind of clearest message was that traders want mainly three things. They want simplicity, clarity. They want rules which are kind of easy to understand. Dashboards that actually help them improve. Clarity regarding payouts, and to make sure they're trading within the rule sets, and then they're aware of what's going on. Secondly, they wanted speed and trust when it comes to payouts. But they don't want any unforeseen surprises, payout reviews, or deductions that seem unfair. If they weren't aware about any kind of rule or trading issue, which had it been alerted to them in the dashboard, they could have done something different, or whatnot. And third, they want more choice. And I'm not just talking about account types here, but I'm talking about across the wider ecosystem. So whether that's direct brokerage access, being able to use their funding profits to fund their own trading account where they can trade without rules. They want payment flexibility. We've seen a lot of traders requesting the futures. So this really fits into what we're building. And it's like another interesting fact was that the traders weren't really asking for just gimmicks or offers. They were just asking for clarity and less ambiguity, and more real-time updates. So, for us, the survey is only valuable if it does lead to action. So we've been going through the responses, and what traders will see in the coming weeks is continued work on the dashboard, and we're definitely taking into account everything they've said. So we're looking to kind of remove anything which could be deemed vague or unclear, in the terms and conditions. And what we're looking to achieve is to have every rule within the dashboard broken down into sections of what the kind of consequences would be, so they'll be updated in real time with warnings, alerts. So there'll be total transparency at every stage, and then this way there'll be no uncertainty when requesting a payout. Everything will be available to see before the trader hits withdraw, and then ultimately this should lead to 100% automated payouts, which is the speed aspect where they were wanted, and I think that's what we're looking to achieve.
You see, I think that gives you some confidence in the first place, just that you're actually going out to the traders and saying, listen, what do you need? And listening to the traders, listen to your customers, which is a great.
Well, yeah, I mean, we've got to, because we've seen so many prop firms come and go, and I think it's very important to build something what traders need. So that's why it's okay me just having an idea, but if it's not really what the consensus of the masses want, then it's going to fail. So that's why we really want to kind of get their opinion when we're looking to make changes or additions or whatnot.
I mean, that leads on to what I was going to ask you about. Really, where did traders go wrong when they're trying to choose a prop firm? I mean, obviously you've seen the market. You've seen that there's a lot of prop firms competing for traders' attention, but from the trader's point of view, like people that we have here in the room today, what are they getting drawn into looking at the wrong criteria? What should you?
Well, I mean, you've got multiple kind of comparison sites now, but I think the biggest mistake traders are still making when comparing prop firms is a lot of people just look at the cheapest entry point, or the biggest discount, and assume that means value. But in reality, the real value isn't what it costs to get in. The value is whether the model actually gives you a fair chance of passing, getting funded, and ultimately, making a payout consistently. So, I think traders need to look much deeper. They should be looking more at the drawdown model, the consistency rules, the payout structure, the execution environment, etc., and whether the firm has the proper infrastructure behind it. Ultimately, a cheap account, it isn't really cheap if the rules are designed in a way that makes long-term success much harder or unobtainable. So, I mean, but on the other side, a firm with fairer rules, better payout rails, and stronger infrastructure, can be much better value, even if the entry price is slightly higher. I mean, we released an article a couple of weeks ago regarding accounts with consistency rules and trailing drawdowns about the price. The prices are cheaper, but the pass rate and payout rates are significantly lower. So although you can buy a cheap account, the chances of actually making a payout, are much slimmer. So, I think the biggest mindset shift needs to be, don't just compare the firms on price. Compare them on the path to a payout or the quality of the infrastructure and whether the business is built to support traders over the long term.
I mean, you're running a promotion at the moment, 50% off for Eid, the holiday, obviously in the Middle East. Where do you think this offers real value though, from the chance for?
Yeah, I mean, the reason we've kind of run this offer, we moved to Dubai last year. And since kind of relocating here, we've seen a massive increase in the MENA region. Before we were hugely UK focused, and since moving over here, it's just gone ballistic with traders from Middle East and Africa and around this kind of zone. So we wanted, during this Eid is a very special time for them. So we wanted to kind of give back. But don't forget, a discount is meaningless if a trader can't really realistically get to a payout, like I mentioned, previously. And what we've seen is a lot of firms offer these huge discounts to attract attention. But if the rules behind the offer are full of traps or tight restrictions, then the models aren't really built for traders to succeed. So that's what makes our kind of offer different, is that it actually sits on top of our existing model, which we believe is generally trader friendly. We offer static drawdown across the board, no consistency traps on challenge or even instant funding, clear rules, fast payouts. We've got I think we're fifth or something on the long-term payout, verified payouts on prop firm match, and the companies above us are much bigger. So to have that, to be fifth there is quite impressive, and especially our payout time is sub 3 hours over the last 5 years. That's pretty something we're proud of. But yeah, I mean, it's not just the value that the account's cheaper, but the value is traders are getting access to Definitive at a better price while still trading on the rules, and the infrastructure that are actually designed to kind of try and help them progress. And that's how we think traders should be looking at discounts, not as a marketing number, but as a value attached to a model that actually gives them a genuine chance to kind of succeed.
A way to get in. I mean, you mentioned payouts earlier there, and payouts are one of these big drivers for traders in the prop space. The company that doesn't pay out or takes a long time to pay out is not a company, not a friend to the trader. You have Definitive Pay, obviously, as part of the ecosystem.
Yeah.
The ecosystem there. How does that help traders have confidence? Well, I mean, not clearly it does, but what are the features of that can give traders the sort of smoother payouts?
Well, I mean, payouts are the biggest trust test in the industry, and and that's exactly why we built Definitive Pay, and that's why Definitive Pay is so important to us. The goal when we set Definitive Pay up was to stop payouts feeling like a disconnected process. So when a payout's approved with Definitive funding, it's automatically credited to the trader's Definitive Pay account. And from there, traders have got full flexibility. They can withdraw through methods such as bank transfer, Revolut, crypto, and other supported options. Or they can use that balance within our wider ecosystem. They can use that to deposit into Definitive markets and again trade without any kind of underlying raw set. They're going to be able to purchase Definitive futures accounts with a discount. They can rebuy Definitive funding accounts, again with some beneficial offers. So we really want to kind of keep offer the traders a whole kind of one kind of ecosystem for the whole money flow, and that's the big point for us, because we don't really want to see Definitive Pay as a withdrawal tool. We want it to become a financial layer, across Definitive One, the ecosystem we're building, and that's what we really, that was the whole point of building it. And in terms of the timing side, the structure is designed to be both fast and reliable. The first payout can be requested on demand. It goes as soon as the account qualifies, and after that cycle, it becomes regular and predictable on a weekly basis. So, that's what we wanted to do. We think having our own kind of payment rail for withdrawals gives that kind of structure behind it. And looking ahead, we're actually expanding all the payment options available through Definitive Pay, and one of the things we're rolling out very soon is actual virtual IBAN numbers. So traders can deposit to their own IBAN accounts within Definitive Pay, which will make deposits and withdrawals a lot more flexible. So we're really, really excited about that.
I'm hearing more and more about traders who are using payouts to open up live accounts, to put money into live accounts as well. And I think this is why you mentioned you're opening up standalone broker, Definitive Markets. That idea that you can use Definitive funding, you can get payouts, you can put, I guess you can even probably take 50-50, you can put it into a live account or take 50 out of payouts. That flexibility is a great thing, because you can start to compound the profits in a real money account. It's a great milestone for you to be launching the broker.
Yeah, it is. It's a very important milestone because because it shows how kind of Finitive has evolved over the last 5 years. When we started Finitive Markets, we didn't start it because we wanted to launch a standalone broker from day one. It started because we wanted to, and we needed better control over the trading environment behind Finitive Funding. We needed, to be able to offer the best execution. We needed to have flexibility on our liquidity partners and LPs. And the overall conditions our traders were experiencing. So originally, Finitive Markets was built to solve an internal problem. It was kind of infrastructure built first, but as the business has evolved, it's become clear that we had built, value far beyond just supporting Finitive Funding, and we strengthened that on the brokerage side. We went through the regulatory process. We developed it into now a product which is can stand on its own, and that is important because the execution quality is a huge part of the trader's experience. So, traders care massively about spreads and slippage, latency, and whether the environment feels fair. And the more kind of control we have over that infrastructure, in order to offer the best liquidity, in order to kind of give the less latency, I think the better experience we can create for our traders. So, Finitive Markets becoming a standalone broker is not a separate story from funding. It's just a natural extension of it. So what started as infrastructure, behind the scenes, has now become a full product in its own right, and that's a big step forward for our whole ecosystem. And we should be launching that hopefully within the next couple of weeks. So the waiting list is now open, and that should be live, just around the corner.
Right. And I mean, that brings us neatly onto another launch, the Finitive Futures, which is launching. Now is the right time. I mean, there is a huge interest in futures in the US traditionally, but now it's more global as well.
Yeah, I mean, it was just kind of a next logical step in the ecosystem. As we've grown, one of the things we've seen very clearly is that serious traders want more choice. That was backed up with the survey we carried out. They don't just want one route to the market, but they want access to different products, different structures, and different opportunities depending on the strategy they're employing and the experience they have. So that's why the kind of timing for Finitive Futures makes sense, because we've already built the business. We've already the funding business. The payment infrastructure's already kind of been built. The back end is all connected, so the brokerage layerage is near enough there. So launching futures is really about adding the next part of that trader journey. And we've seen time and time again that traders who want a kind of more professional futures environment, these are the traders who care about the clear rules, the real market access, the path to live. They're not worried about what LP you're using, because all the data is coming from a centralized market CME, and the strong infrastructure what we've already built. So we think we could really reward discipline with that. And it's not about trying to be everything to everyone. It's about building something properly for traders who want exposure to the future space, as part of the rest of the Finitive ecosystem. So from our point of view, Finitive Futures isn't just another product launch. It's an extension of what Finitive can actually offer traders as they grow with us. We've already partnered with the biggest futures platforms in the business. So when we launch, we'll be launching with all the platforms that traders expect from existing futures companies which are already in existence. So we've got a strong launch plan for futures. We're hoping to have that done around the end of June. That's our kind of target. So hopefully we can get there. We're nearly there, but we're doing a lot at the same time. We've got a big development team based in Bratislava who are working their socks off, and they're doing as much as they can. So hopefully we can get that done as soon as we can.
You certainly enjoy a challenge. Just do it all at the same time. I think I saw something great on the internet the other day. It was about startups and founders, and it was all about you just start the business these days. The idea is to just start, and a lot of things you learn on the way, as opposed to the more traditional do your research and plan and all the rest of it, and then open the doors. we're in this world where we just start and learn on the way. I mean, it is amazing. We've talked about this, the huge survey that you did. I love the fact that you're talking to the traders themselves, giving their feedback all the time. The payment side, the broker side. Is there anything else over the next 12 months that might be coming down the line for Fintiv?
Well, yeah, I mean, we've still got some plans in the background. I mean, but the main thing what traders should understand is that, you know, Fintiv is moving in one clear direction. You know, we're building a more complete connected experience for traders. So, you know, everything we're doing right now points back to that. The survey, like, it helps to understand, you know, what traders want. The dashboard gives us the clarity, gives the traders the clarity and the control. Fintiv Pay strengthens the payout experience, and markets gives us the execution and infrastructure. And with a new launch of futures, that opens up the door to major US launch, you know, and the next layer of market access. So, you know, over the next 12 months, traders should be expecting Fintiv to become more connected, capable, and more useful across the full trader journey, not just at the point where they buy an account, but throughout, you know, everything happens after that. You know, for me, the real story isn't we're just not launching products for the sake of it. We're actually trying to build around the real problems traders face. We're trying to offer them the trust for clarity, the best execution, the best payout experience, the best access we can. So, if traders are looking at Fintiv today, you know, what I would want them to understand is you know, we're building for the long term. You know, the goal isn't just to be just another prop firm competing on, you know, short term noise. You know, the goal is to build the ecosystem with the infrastructure and transparency, the reliability to support traders, you know, as they grow over time. And, you know, now we have this roadmap laid out, you know, and fully aligned what we're looking to achieve. We're really stepping up our game for the marketing side and brand awareness. And I'm not just talking about ad spending here, but obviously we're headlining all 3 of your events across 3 continents. We've got some big announcements coming out with an English Championship football club as main front of shirt sponsors. We're in discussions with an Indian-owned 100 cricket team in the UK. And then we're looking to look further afield, potentially next year, the IPL sponsorship. So, you know, we've got a lot more plan moving forward, and with the foundations that we've built, I really think over the next 12 months we could you know, be included in the top kind of 3 of the prop firm space.
Top tier. Yep, fantastic. I clearly, if anybody's here, whatever you are, if you can get to London in October, that'll be an opportunity to meet Oliver and the team are all going to be there. Huge booth. We've got some exciting ideas for what we're going to do over the 2 days over the landscape in London. It's going to be terrific. Well, I mean, well done. Hats off. It's great what you're building. Delighted to have you, obviously, working with us as headline sponsor across the 3 events, like you said. And we'll just watch the space, and we'll watch and enjoy it grow. I think we've got some customers here on the in the chat.
I can see there's a few. Well, look, I'd like to say thank you for all the traders here who have used Fintiv in the past, and you know, I hope you've had a great experience. That's kind of what we're trying to offer, and you know, without you guys, you know, we wouldn't be able to build what we're building, and we wouldn't be able to, you know, continually look to evolve and look to move forward. So, you know, without the traders behind the company, we wouldn't exist in the first place. So, you know, it's a big hats off to you guys trusting us and using our services. So, you know, thank you for you guys there.
Great. Well, we're just about out of time. So Oliver Newland, CEO of Fintiv Fund.
Brilliant.
Sorry. Thanks for joining us again, and we'll keep in touch. I'll chat to you later.
Brilliant. Cheers, and thank you very much indeed, and I wish you all the best for your marathon round the clock. So
you'll be able to enjoy a nice lunch somewhere now. I'll be sitting here till 8 o'clock at night. But hey,
exactly. All right. Anyway, cheers, then. Thank you very much, guys. Take care.
Bye for now.
Bye.
Okay, welcome. We should be in our next session now. We are welcoming Daniel Martin.
Hello.
There we are. Daniel, you are live. I can hear you, and just we can't see you.
Let me do the fixing it. 1, 2, 3, testing.
There we go. Daniel Martin,
Yeah.
the one. Buenos dias.
Buenos días.
So Daniel is the co-founder of City Traders Imperium, prop firm based in London, and probably one of the I referred to you as one of the OG prop firms online yesterday. You've been around 8 years, which is a long time in the prop firm space. So congratulations with
Thank
that.
you for that. We actually the first three, or we are the three ones we created at the same time. So some people actually got this wrong, which is actually the history thinking some profile was created earlier. We created all of us, we created at the same time, on the same year, in different countries. So it was pretty much month different from each other. But some companies, they're older, not because as a profile was doing other things like myself, I was doing things from 2011, like a classic profile to give to traders, like, you give me 10,000 to 5,000 and you real testing with real money. So, but we actually was Czech Republic, one of the companies, another company in Israel, and us in UK. Now we are in Dubai. But yes, is that was we are actually the founders of the pro firms, pretty much. With was not me only. I go Martin with me. Martin Ajat was with me all the time, obviously from day one.
Martin, your co-founder, yes, yeah, fantastic. I mean, can we go back to just before we get into the talk? Prior to starting the prop firm, what were you doing? Were you involved in financial markets?
Yes, I've been trading for now 26 years. So when the time came for me to create a pro firm, it was the time that I was looking for a new target. I'm looking for to fix a problem solution that was in the market. So the main problem is that traders, well, I've been doing that. I've been coaching, trading. I've been successful trader for many years already. So it's a good point that you mentioned that, because we are, Martin and me, even our marketing manager, we are a professional traders. We make money from trading. So a part of the business of pro firms and building up together, this together. So, but I've been trading, coaching, and that's my main job. It's still my main job, but this is obviously I do as well, helping with others. Now, the problem I found myself was that you go into a broker and you do put money on it without rules. That is no rules. Poof, you blow up. By the way, you asked me for some tips for the traders, for the listeners. So I brought this. I was looking for a book for you. That was my book to actually make you to become profitable and pro-friends, if you want to know. This book, I don't know if you can see it.
Oh, Van Tarps, yes.
Yeah, okay. So with these books, it will be more than enough for you. If you don't understand, obviously you need a coach. But this book, it will help you. By the way, I have to clean it before I show it to the video. Also, it's been so old with me. So is helping you to become a profitable trader and pass more than people kind of profitable to pass an evaluation and to become a funded. People thinking that a funded is just the final step and they start to make money from it, but you cannot replace what is actually have been a broker, being with a broker. Is you need one step before. It's a thinking. I always explain this is like thinking about like a driver license. You need to have the theoretical, where there's actually somebody teaching you strategies, and you need to have the practical, where there's actually the pro firms. Now, we found before we didn't have that. So people spend hundreds and thousands of pounds in brokers with no rules, blow up the money plus education. So this is actually much cheaper option for you to be prepared for the real world of trading. So, and that's something that you mentioned earlier on the previous interview, people get from being funded, then they start to put into live accounts. And that is the key, is to people constantly, is not get stuck. You need to think in as educational. You can make a lot of money. We got people with 2 million. It's just not, you can make money with it, but it doesn't mean you will not be able to scaling up to the next level, which is actually add money, into your broker, and take care of yourself moving forward. We provide as well live accounts, by the way, but this is actually how it works. What is that? Sorry.
Isaac's just asking if you can put the book back up. So
Yes, no
you can see
problem.
the title.
So, it's no problem. I'll do it again. So as many times you want. By the way, I'm always online to help traders. So yeah. Sorry, it's backwards. I mean, so you cannot do change. No, I can't.
No, it's fine. It looks fine for us. Yeah. The position size.
So I can send it to you, the details later, the book. So this will help you because that analyze your data risk management to be able to adjust it to any strategies. So then you know if your strategy is actually working or not. So as been said that my background is trading, coaching, and that makes the difference between other profiles. We are actually helping traders with the strategies if you don't have any, and we do provide coaching too. So, and that's a very important part that you need to be aware of.
Daniel, I'm gonna just interrupt just now. I'm just checking everybody's here in the room. If you could just put a little yes into the chat box if you're here live in the room just now. Let us know that you're. There's two. There's a chat box and then there's a question box. And we're using the chat function, so a yes from everybody. Just we could let us know. I think because I think we had left some people in the old session that are saying where did texting me saying where did everybody go?
There you go. We go. Everyone listen to us. No problem. Fantastic.
There we go. No. It looks like everybody's here, which is great. Cool. By the way, everybody, if you have any problems with this platform, it's browser based. So if you do lose us or something glitches, hit the refresh in the browser, and it should reset and iron out any bugs that we get. But it looks like everybody's here. Ian's here, which is great. No special links for talkers. No.
So it's fun enough that people don't know City Traders Imperium, which we are the founders of the Pro Funds. So, the reason is that we are not we don't. There is okay. I'm gonna explain something. Maybe people don't like it. They ask me how Pro Funds make money. Yeah.
Yes.
So, and this is to be first. You need to be aware that Pro Funds we need it. It's better than actually go directly to a broker than actually doing it by yourself. But so it's something that is not going to go anywhere. It's not going to be disappear, and we need it. Yes, so yes. Now, my question for all of you is that, well, you need to be aware of this. There is 3 types of Pro Funds, and we are now about 2,000 of us, 2,000 Pro Funds companies. Yeah, every day the numbers.
Did you say 2,000?
Yes, we just I counted at one point. It was ridiculous. It's non-stop growing because people out there doing white labels is just crazy. So now thinking about that, there is 2 types of the way we Pro Funds make money is to if you put money into a Pro Fund and you lose money and make money. Yes, that's one type of Pro Fund. Everyone need to be aware of that. Okay. This is 1,999 Pro Funds make money this way, except one. Okay. Now, from 1,999 Pro Funds that actually make money this way, if you make money, they lose money. Okay. Now, not all of them, 50% of that, they will take care about you, even if you make money. The other 50% of you that will not actually willing to pay you. So make sure that you actually, for example, I check all the companies that you place actually on your event. I can say chapeau because 99% of them, they are good companies. They take care about traders. Even if they make money with losing money, they make money. Okay, be aware of that. Now, there is only one company that actually make money. If you make money or you lose money, they make money. We are the only ones. City Traders Imperium. Doesn't matter if you make money or you don't make money, we make money. And this is actually unique. And we actually try across everywhere. And sooner, we're going to launch another product for all the other Pro Funds to be follow the same principle that we follow. But this is something later. So, but be aware that's necessary to have this.
Can you go into that a little detail of that model? Because I mean, that's
still if I give it away like a kind of
all of a sudden there'll be 2,000 more prop firms.
It's like it's how I can say it's kind of secret for now.
Okay.
The way we're working pretty much is that if you make money with City Traders Imperium, We don't care. We pay you. We make money if you make money. And if you actually lost money with us, you lost money, we make money as well. So it doesn't matter, whatever happens. So for us, there is not a break our principle from day one. There is no breaking our principle to help the traders to move forward as a trader. Trading have to be something easy. Pro fans need to go in. You need to learn from trading. You need to be able to be aware of that, have an education, companies that provide education, companies that provide a coaching. We provide education, we provide coaching. Many companies do that as well, to supporting you to pass that driving lesson to become a trader. You see? And obviously you want to make as much money possible. Do you copy trades the proven profitable traders? Well, what we're doing is what is called A-book, B-booking options. So we play with that. It's a bit, just to give you an idea. Check it out, what is called, I'm gonna mention that to Steven there. It's A and B booking. Perfection. 100%. So we know who can make money, who is going to lose money. So we are about 100%, we don't actually lose any money. So for us, we don't care if you make it or you don't make it. Obviously, I prefer, from my principle, I'd rather if you make money. That's why I'm coaching, try to help you with education. We got strategies. And by the way, we are actually giving strategies for free for anybody get funded with us. So the strategies, normally you pay £2,000, but if you do get funded, even for $50 or whatever, you get the whole strategies for free. So this is how we work. So, and why are we doing all this for? What is my real target of this? I'm looking for traders that are profitable, they are constantly profitable, like me and Martin, that we can actually moving forward to create something bigger. We're looking forward to create a hedge fund. To create a hedge fund with traders that are profitable, I don't actually looking for typical traders that you coming from universities, from banks. We are looking for the opportunity for the ground people. Like we are in the street, no education, find an education, and we're looking to make money from YouTube channels. That we're looking for. That is what I'm looking for. Those people giving the opportunity, and it's unbelievable. Some people from Congo, they are very good traders. Somebody from the middle of nowhere that actually struggle with the internet is just in the middle of nowhere. Unbelievable. They try to, you see, and that is the beauty of the professional opportunities.
So you've built the platform there, but you use it as a sort of training ground for you to assess and pull the elite traders forward, and then you fund them at a higher level. Is that what you're saying? You look for the talent from the prop trading, and then you're bringing them forward into there's a journey for them to go to become.
Yeah, it's like okay. And myself, if I tell you a bit more about to understand and why I was created a profan, is that I got a problem when I went to JP Morgan. So I got a good track records from my own funds, and I make money 10%, 15% a year for a long time. And when I went to them, they was laughing at me like that. Simple like that, because say, well, you make from £10,000, you make 15%, 20% a year. Well, so what? That's nothing. You don't have an education. I don't have a degree. I'm dyslexia. I got dyscalculia. I got bad memory. Call it all that on top of that. So I make money, but they didn't give me the opportunity because I was no one for them. No education. You cannot come in. You don't have a friend there inside. You cannot come in. Say what? And then there was my head rolling and rolling and rolling until I find a solution for my problem, and then a solution for everyone that are in the street. Why those ones have to have more opportunity than us? Who do you think you are? Because you got a title, because you got a name, because you got, well, I don't care who you are. I don't care. I don't care. You see, it just pissed me off so much. It was so painful. And that's why I'm thinking that everyone have to have the same opportunity, because your intelligence nothing need to do with your position and where you are. That is, sorry for the bad word, bullshit. Okay? Sorry for that. But that is very painful for me to see people struggle with great intelligence, not able to move forward. Doesn't mean that you can actually have an education and going to profan to learn as well how we're doing it. But those ones, they didn't have the opportunity. Now they do have the opportunity. And that's where there was the beauty of this profan's creation. It was a gap in the market. It was a gap for opportunity. And that is what now brokers start to take our services, start to take the services of PropFence, because it was missing. It was missing the opportunity to help traders, to people. On the end of the day, many of you are going to lose money. 70%, 80% will lose money, but better to lose less than a lot more. Yeah. So it's better to have control rules. That's what people complain about, the rules. It's like rules that are necessary for you to learn how to trade. Some risk management rules. Make sure that you read them. You need to follow the rules, and that is important too.
I mean, that's a point that gets asked of me a lot, because I'm very positive on prop trading. I've been doing these webinars. I started the first round of the prop trader in 2015, and constantly the question in the chat box was, how much do we need to get started? And the underlying problem was starting with enough capital in order to make any sort of meaningful return based on a reasonable amount of risk. And it just didn't add up for most people that couldn't afford to risk £25,000 on a CFD account. It's impressive watching big traders talking about, "Oh, just go large on this," and double down.
How many people have £25,000 to lose like that? Poof.
Yeah, and the sweat.
That's not
the sweat that comes very quickly.
Exactly. So we didn't give the opportunity to the people of the ground. Somebody working in a supermarket, they just want to. They only make £2,000 a month, or even less than that. They want to have the opportunity. They will never be able to have 25,000 in savings. Now you have the opportunity to make some money with it. Obviously, one of the things important for PropFence to be passed is that do not focus in make money. Focus in to follow your rules and pass the evaluations. It's like you don't try to, when you're driving the car, don't try to be the best driver ever and to make a lot of money from it. Forget about make money. It's not about make money. If you focus on money, if you focus on your rule, you're gonna make money. It's gonna come. But if you focus on money, you don't focus into the process of making it. So be aware of that. Systems is the key. Follow your systems, follow your processes, and those rules, the rules that we placed it. Some of PropFence, they are hidden. We actually transparent. Other PropFence, they are transparent. So it's important that you're aware of those risk management rules and how they work, because that is the key to survival for you when you're moving into your own broker, whatever broker you choose. You see that, or even if you want to stay with the PropFence, like we are to provide live trading too, you can move in with us into live trading. That's no problem. But you see, if you choose to go somewhere, you have the knowledge of risk management, and you don't have that freedom to blow up all your money. And you have $25,000, and maybe you actually lost 10% that year. That's okay. You control yourself. If you cannot make money always, like people ask me, do you make money all the time? I say, no. This year I've been lost 2% so far. I haven't made any money on trading. If that means make me a failure as a trader, I've been doing it for 25 years. See?
Yeah. Honest. Yeah, it makes you honest, which is good.
This is actually true. I'm not making money every year. My worst year was 2015. I lost minus 10%. So 2011, I lost as well money in there. So, you have to manage. Just the reality of trading and investing is that if you see those gurus there, they show you always making money. Something is wrong there.
Daniel, let me ask you as well about that. We can go back to that sort of live account and prop trading. Do you see a difference with traders when they move from the simulated account into the drive? Although we're saying, it's a big risk to take that £25,000, your own money, that's a big risk. But it does affect, it certainly sort of, sharpens the senses a little bit to when there's real money on the line. Does that difference, that's a learning obstacle, isn't it? To go from simulated where you think, well, it's not real, so I can maybe take more chances, I can be a bit more risky. This is where these guidelines that the prop firms put in, the consistency rules and things, this is where they come into play, isn't it?
And you absolutely actually mentioned the perfect clear reasoning why many traders lost money. Because they think, it's a demo, it's an evaluation, I don't care, it's not too much money, it's like a back testing. You see, and that's the
Yeah.
problem they're facing. They're facing is that psychologically they are not ready. You must to thinking that that is one opportunity and that's it. Thinking that way is a real thing going on. That's what you do when you're driving a car from the driving lessons. You're not gonna crash every place. You're not gonna break all the rules. You need to pass the evaluation. So take it seriously because you can kill somebody if you don't drive it correctly. You know what I mean? You can have an accident. So you must to be follow those rules and thinking is real. So obviously, I always suggested that do you need to learn to respect the account? Yes, perfect and
Good
clear
point.
on the spot.
Thank you.
You see, and when you look in the account, is that thinking that even if I know that is difficult, but just take your time, take 1 minute or two of your time and thinking, okay, this is real money. If I make, by the way, if you make money, you make money. So then must be real. But you think, oh, I put a bit of money, so there's not worry. No. You need to think in is painful, real money, and respect, as I said, respect your account, respect what you have in front of you. Because what's the point then to do trading for? You're trading to learn, you're trading to work out, to do a system, to do a process, to feel confident, to then go to live trading. You need to have that confidence that what you have done is not to follow money, it's to follow a system and process to make you profitable and be sustainable on the long run. That's simple. So it's so beautiful when you go that. It's so, and it's people ask me, is this difficult to make money? It is difficult until you switch off from money. Then you make money and that's it. People ask me, okay, so what do you do next? You know how to trade. I can be 100 years old, and if I can press a button, I can make money because there is nothing else to be done. It's done. It's easy. That's how it works. And another thing that I really like about trading is that investing is that I spend 2 hours a day. That's it. That no more. Okay. Yes, that's a good option too.
I like that. Yeah.
Actually, I like that too. Anything that helping you to thinking that is real execution money, that will be your future, your last chance,
Yeah.
your last opportunity. Yeah,
Take
don't buy if you buy a funding account, don't buy a funding account that you think, I don't care. Don't buy a funding account as well. Ooh, this is too much. So you need to find the right spot as well. It's not about how much. If it's too much money, you're sweating and you out of control. If you actually it's too little, you don't care and you don't actually do properly. So find the right spot to know how much money is into it. Now, the next step for all of you to make sure it's clean and clear and save you is when you move into the next level and you pass, you go much more money into your pocket. Breathe and take it easy because it's still real. Okay, so be aware of that.
Yeah, that was just.
So some problem with the sounds.
It's just gonna say obviously I can't say it if they can't hear, so I'll try to refresh.
Can you hear me? Yes,
it's fixed already. The gremlins sorted itself out. It's good.
Okay. So
Daniel, thank you for this. You started this month in London. You did an event, a face-to-face event.
Yes.
What do you have? I think about 100 traders in the room, or
exactly.
It looked great. You sent me the video. It looked like you did a fantastic event there. What did you learn from that? Because again, that gives you a chance to meet face to face with traders. Was there something you got?
I learned that human is still human, and online is not the same. Like when you and me, we're going for a coffee together, it's much better than see you online. I really feel that connection with humans. I like that. And it's not only that, I can actually help traders in a better way. That is one of the reasons I'm going to go with you to this event on October. I got another event for VIP clients on early on the 3rd of October, and then with you guys on the 24th. And I'm going to be with the VIP guys too in there. So those ones that want to follow me or they want to ask more questions, and they got problems with the strategies, that they got problems with the pro firms, any questions from anything, any angle, I will be there to cover for you guys. So that's no problem. I'm super honest and super transparent, and I don't mind to say whatever I have to say anytime. So I will be there for all of you. So I will be very, very proud to see how people are moving forward and successful, and we help traders as many as we can.
I mean, this is a big boost for City Traders Imperium is to have the co-founder giving up time to help the traders learn as well. I mean, there's there's prop firms and prop firms.
Yes.
So I think that's
that's the mission of the company. That's the key element of the company, is to help traders yes or yes. There is no other reasons whatsoever. We prefer to be solid and slowly moving concrete than actually do all those kind of dodgy stuff that others try to do with the.
there are
On top of the
some,
difficult to be a trader, you go companies that destroy you. That's not great. You're working very hard, like at this company happens, was that American one was actually kill everyone on the trading and all that stuff like that. That was horrible. So yeah, so it feels pain to me that people create this idea to help traders, and some people take up the abuse of this. I mean, they want you to lose money. So that is painful for me. But I'm working on it. Will we fix this problem sooner or later with a new product we're going to launch to all the pro firms, and all of them will follow the same process.
Good. Vascar's just asked where to get more details. I've also put the website for City Traders Imperium. Do you have anywhere personally for you that you?
I'm always available at Discord on City Traders Imperium. 24.
All right. Okay. So if you just go to the website, go to the Discord link there, and you can get there. Good.
So if anybody got any questions specific from any other pro firms, I don't like to criticize any other pro firms, but I can suggest that maybe not to go to that one. I will not say bad or good. Some of them are good, some of them are not that good. I will not say anything. I will say, well, I will not recommend it to go to that one. So, but for the rest, I think we're doing a great job. And I believe that even if there is, I would say, bad apples, we're still doing better than brokers.
There we are.
In brokers, it's just another level of, you don't have rules, and they take it in another level. It's much more difficult to find good apples in brokers than find good apples in pro firms. But both, they are needed because they're part of the process to become a successful trader in the long run.
At the moment, the industry is largely self-regulated, i.e., it's not regulated by any overarching authority. So it falls to the prop firms, the big boys, really to sort of set the standards. And it is encouraging to see quite a lot of these big prop firms doing that, like City Traders Imperium, like Fintive Funding, obviously the FTMOs of the world, just do a great job.
By the way, it was a great interview with the headlines of it's
Oliver.
Nice. It looked very nice and solid company too. I like
Oliver's doing a great thing. We're so pleased to have them on board. So obviously, support financially is great for the events. But yeah,
remember, only one company. We make money from both sides.
Yes. Well, now the cat's out of the bag. Now, that'll change from today. You let the cat out of the bag. Listen, thank you so much for joining us. Our time's up, unfortunately, but we'll talk again.
I will remain here to see the rest of the interviews. I really like to continue watching.
We're going on to do some trading psychology. We're interviewing some very successful prop traders over the lunchtime period. We're speaking to Justin and David, Brian, and Javier at
oh wow! Okay, you got nice ones coming in.
Yeah, it's going to be a great day. So if you can, I can see the London sun, the heat wave must be continuing. So
I'm gonna remove my jacket now that the interview.
Stay inside and stay cool. Yeah, keep drinking. Daniel Martin, City Traders Imperium. Thank you so much for joining us.
Thank you very much for this time. Amazing.
Great.
There you go. I love working with new platforms. You always get that nerves where you're just getting into a new platform. Is it going to work or is it not going to work?
We like to make you sweat, Alex. Everybody knows that we're on Zoom, but nice to see you. Welcome. Thanks for joining.
How's it going? How's it been so far? I've been watching from behind the curtains.
We've been, a nice varied mix of we've got prop firm CEOs like yourself, traders, investors, Jason, even from before, has been around the markets for decades.
You got some OGs.
The OGs, exactly. Yeah. So, and we've got quite an enthusiastic group with us here live in the room, which is great. I think it's fair to say a mix of prop and live account traders.
Yeah, it's really interesting. Blast from the past CTI, because when the fivers released, obviously CTI was around the corner from them. So it's interesting to see Daniel again and hearing his vision and what he's doing. And I think it's just to add on to that, because I've got a little bit of a presentation as well on crypto, but I think something that he was talking about that is super, super important for the future of this industry, and that is actually taking traders properly live. Because the A book, B book, taking money from Peter to pay Paul, unfortunately doesn't work when margins get tighter and when volatility spikes, and unfortunately is not sustainable. So I think a lot of companies have already done that step of taking traders live. I think we've seen it in the futures market, and the futures market absolutely smashes it with taking traders live and understanding how to manage risk and things like that. And I think there's some really good examples of companies that have done it, that have already paid millions and millions out to live traders. And I think the CFD market is actually a little bit behind. And when I say we, I say this is obviously the prop firm industry, but there's a little bit of catching up to do. And I don't know, it's amazing that Daniel's been able to do this, because I don't know any other company that's been able to do it successfully. Is like monetize on trader flow. One, because it's very difficult, because there's a lot of toxic traffic, there's a lot of gamification, and there's a lot of, unfortunately, kind of make it or break it mentality. So even when you've got a trader that you think is actually consistent, as soon as you put them into a live environment, unfortunately, they know they're in a live environment, and those nerves can actually take somebody off their game a little bit.
Yeah.
So to actually take somebody and make them consistent, even on the live, even if somebody's running hot, you don't know if that's just a random cur of events. You don't know if that's just, a part of the market. I remember back in, it was back in 2000, last year, and I was trading a specific strategy that worked all year and then just ended up stopped working for me. And these things actually happen. So to actually monetize on people, especially in the CFD, it's very difficult. So fair play for him to do. But I think a lot of firms are moving to this. I think you've seen funding pips that have moved to their live trading. I think you're going to see a lot more of it, because it's not sustainable if they don't do it.
It's interesting what you say about people, obviously the nerves and the risk of going to the live account. I've spoken to quite a few traders over the last few months who have wanted to go back to prop trading. In some cases, however, they're happy there. I guess it suits people. And if they find the right firm, they're relaxed enough to know they're going to get paid out, it works for them. So there's nothing wrong with that. It's great.
There's, I think the saying goes, there's plenty of ways to skin a cat. You don't have to. You don't have to just trade your own personal account. You don't have to just trade prop. You can do both. You can do. There's so many different ways to make money in the markets, and there's no one fit for everybody. There's so many different options. But when it looks at the maturity of the prop firm industry, it's not like it was 5 years ago. It's very, very, very different. And I think, especially when we've got all of these new companies coming in, and I've spoken to a lot of them, a lot of people are coming in with the idea of it's very similar to a broker, the same risk as a broker, the same way of bringing in traffic, marketing as a broker. And it, unfortunately, just isn't like that. It's a different breed in its own niche. So a lot of guys coming in as brokers trying to make it in the niche haven't really done very well, and they've not lasted. And I think you're going to see in the next 12 to 18, 24 months, big shifts of who are the people in the market and who are the big leaders, and people have to make changes. So anyway,
it's a fascinating world. We're really pleased to have you here, because you've been in the business for a long time. We've got a mix, and there's obviously some people from the industry here in the group. And the majority of us are end users, however. So I've asked you, because you are heading up Tradeify crypto prop firm. You've been with the Fivers, I think, you built
Yeah, it was
the
quite a
Fivers up.
while. Yeah, quite a while. So I was with so I'll go into a little bit of the story of how I got into trading and stuff as well on the slides that I've got. But I'm also an end user. I'm also a prop trader. I've traded prop. I've made money. I've lost accounts. I've blown up. I've done all of that kind of stuff. So whenever we're actually making any kind of products, whenever we're actually doing stuff, we're kind of making it for ourselves, you know, because you can only sell something, or you can only give a service to something that you would actually use and you would actually want. And I think that's where the Fivers did really well, is that was like the foundations of the company, is like building things for ourselves, building things that we wanted, for when we were beginner traders to, you know, when we're advanced traders and all we want to do is actually just get funded and make money. And I think Tradeify gives me very much vibes like that. You know, Tradeify in the futures market has exploded, and everybody in that team are just diehard traders and building things for traders, and that's the only way you can get the best product. So
the best.
Let me see if I share.
Can I? Well, listen. Maybe we just try and share screen, get your slides. So I know you've prepared some slides, which is great. While we're doing that, if I could ask everybody in the room just to give me a little yes or hi or anything in the chat box, just to let us know that you're hearing and seeing us okay. I can see everybody's here. Just it always gives me more confidence to see all the feedback coming through the chat box. So just a little yes or howdy or whatever you want to say will be great to see.
Yep.
Wow, that's a lovely professional looking slide, I have to say.
My good old pal Claude helped me with this. No, obviously all the content in it was fairly written by myself, but unfortunately my creativity and my design skills are not the thing that I'm best at.
These AI tools they're going to be the devil, because they're raising the standards for everybody. Now everybody's got to be doing 6 jobs.
Well, that's the future. And I think with everything, if you leverage it, you can be so much more efficient, and it's the way forward. But so Tradeify crypto, we're not going to go too far into Tradeify crypto just yet. We're talking just crypto in general, because crypto in general, there are some massive opportunities, but you've got to be a little bit more patient at the moment, just because of the where it's actually at. But anyway, first of all,
I'm going to take myself off the screen.
Go for it, come back after, Simon. I know you don't want to sit there listening to me yapper for.
No, I'm here. Great to see. Thanks for everybody responding on the chat. If any questions come up, use that, and we can stop. Can you see the chat, Alex? Okay.
Yeah, I can see the chat. Questions we can do as well after. So how I got, let me sort the camera out. So a little bit about me. Got into trading in Bitcoin in 2017. I actually bought my first Bitcoin from a Bitcoin ATM, which now I think about it, it's kind of weird how I just went over to an ATM and ended up getting Bitcoin. I don't know what I was thinking back at the time, but here I am now. And since then, I actually became obsessed with trading and just the markets in general. Back then, 2017, 2018, we had a massive bull market, and followed that many other bull markets as well. And like a lot of other people, I thought that I hacked it. You know, you could literally throw a dart at a board and find a project, and it will just make you money. ICOs, different types of projects. Everybody was making money, and I got into it through spot trading. So just naturally selling when there was a spike, and just buying Bitcoin when it was a little bit lower. And I kept on doing that until I was like, wow, okay, now there's a thing called futures. I can actually trade perpetual futures with leverage. I don't have to use everything. And I made a lot of money and then gave it all back as well. And I've done that I did that a couple of times through different cycles. And I think leverage, everybody's got to pay tuition to the market, unfortunately. And You can't really, there's no way around it. You've got to lick a loss, and you've got to learn the hard way. But when you come out the other end, you understand that the things that really matter is what all the OGs and all the old guys are saying is risk really does matter. And the emotions when you don't manage your risk are byproducts. So if you manage your risk, you can manage your emotions a lot better as well. So after that, I actually found a prop firm where I was living, which was the Fivers. It was a very, very small team, around about 10 people. I thought I was going to go there, sit on a desk and trade all day. It wasn't like that. It was actually sitting there and answering trader tickets. It was helping traders. It was listening to them and understanding what their needs were. And I was there as a part of took over the client relations and grew that to a massive team to what it is today. And yeah, everybody knows the Fivers and Trade the Pool. And obviously now, general manager of Tradeify Crypto. So I think the biggest thing with prop, that there was lots of stuff for CFD, there was lots of stuff for futures, and the only people that had anything going was breakout. So we had to change that. In my spare time, I love motorbikes. I do a lot of jiu-jitsu, and I don't mind a cheeky gin and tonic occasionally. So what we're going to quickly cover: crypto opportunity, how the markets work, volatility, opportunity and edges, prop trading and Tradeify, and the risk in getting started. I'm not going to go through strategies. I'm not going to talk about all the macro stuff because everybody's bored of listening to it. Everybody really knows where it's at. But this will give you just an insight if you're brand new to crypto, somewhere where you can just dig in without risking your own money. So why crypto? 24/7, 365, bit of a double-edged sword actually, is because if you ask me, just because the markets are open all the time doesn't mean you need to trade them all the time. But to get into positions when everybody else are outside the market is also an edge in itself. Obviously, global, permissionless, you can go anywhere. You can put your crypto on a wallet. You can take it across borders. You can do absolutely everything with the crypto, and it's yours. You can put it on your wallet and you can save it and you can give it to somebody, and it's so efficient and very easy to move around. Young and inefficient. The inefficiency is slowly dying off now that TradFi are coming in and different types of institutions are coming in, but there's still opportunity and inefficiency in the market that you can make the most of as well. And volatility and opportunity. When I say face melting moves that don't look back, when crypto moves, it really does move. I don't know if anybody was around when Luna or FTX, or even just, on a random Saturday after Trump makes an announcement, just some of the moves on crypto when there's low liquidity. You really can make a lot of money, but obviously it's a double-edged sword and you can lose a lot as well. So crypto versus the other markets. Obviously, you've got set sessions, weekend closes and trading on normal markets. 24/7, 365, crypto is available. Now, the markets, let's say you've got news that has come out on the weekend, sometimes positioning yourself before the market open on Monday, again, is an edge. We've got stuff like PAX-G, which is gold. News comes out, from some geopolitical incidents, you can position yourself when everybody is just waiting on the sidelines. That being said, there's no halts to protect your cash. When the market is going, it's going. If it's in free for all, it's in free for all. If it's going up and you're shorting, well, you've got to either have a stop loss or you've just got to be disciplined and get out. Settlement, obviously, trade +1. When you buy stocks or you do anything like that, obviously it's instant on your screen. But to actually get that and clear that, it actually takes a day or two to actually do that. With crypto, it's absolutely instant. Volatility, 10% days aren't rare. You see things like Dogecoin, you see many different altcoins, even Hype, which is hyperliquids, in just a few weeks has gone up 67%. So again, the inefficiencies are there on the right project. Custody, obviously you can self-custody, cold wallets, you own your crypto. And obviously the regulation, It's maturing, more regulation coming in, which is not necessarily a bad thing. So the macro adoption. Now, if you were speaking back in 2017, crypto Wild West, now more institutions are coming in. We've got spot ETFs. If you're from the UK, you can open Trading 212. You've got a Bitcoin ETF that you can use for your stocks and shares ISA. You've got many different ways to actually invest in Bitcoin or Ethereum, even altcoins, without actually owning the underlying asset. Institutional money coming in, clearer regulation, and obviously global adoption. There's a lot of issues with lots of countries taking money out of the country. You've got lots of issues with that with India, and crypto is a safe haven for these people as well. So that is a big shift that's happened very recently. Now, under the hood, you've got different types of exchanges. You've got centralized exchanges where you would look like something like the CME, or you've got decentralized exchanges, which something like Hyperliquids, where you've got a decentralized exchange. You've got your own cold wallets or your own hot wallets, and you can just trade peer-to-peer without a centralized exchange. All of the data is transparent. It's cheap. It's free. You can see everything that's happening on the blockchain all the time. So all of the products like order flow, charting, all of these things, data that you'd have to pay quite a lot of money for in the futures market is totally for free in crypto. So it's very cheap to start. Wallets, you're owning your Bitcoin. If you have spot, then you can send it. You can put it on a cold wallet and hide it away. The only problem is that if you forget the code and you forget where it is, you've lost everything. So order books, and we talked about that a little bit, and obviously the spot and derivative markets. You don't have to just buy spot. You've got a lot of derivatives. You've got perps, perpetual futures, which unlike other futures, they don't expire and they just continue on the same contract. So the big boy, Bitcoin, is just like your virtual gold. It's pretty much what would run the crypto market. You would see that crypto, if Bitcoin's down, then all the altcoins follow. If Bitcoin is up, then obviously everything follows as well. This is something that I think all of us should have in an investment portfolio just for long term, just because of the actual numbers that it has made over the years. But trading it, I don't think the edge is actually in Bitcoin itself. The lower volume coins where it says where like altcoins and things like that, when Bitcoin is trending upwards, the altcoins are the places where you've got the biggest inefficiencies and the places where you can make the most money. Obviously, have the right risk management and you can make a lot of money. Stable coins, USDT, USDC, these are dollar pegs. If anybody's been in crypto and they've used it to buy prop firms, obviously you're sending that, Tron or things like that. You have USDT on Tron. You have many different stable coins that are actually backed by fiat currencies. Ethereum, again, a lot of the networks as well use Ethereum, but that's it. Volatility, so the edge, large moves, large profit potential. Again, that can go the other way. Multiple setups every day. Now with this, you've got to understand the market that we're currently in, where everything can be very choppy, can be very rangy. You've got to understand that if you're a trend trader, you've got to understand this probably isn't the market for you right now. Obviously, today we've seen a really nice push down, but for the last couple of months, we've just been chopping and churning, and you've really got to adapt yourself to what the market is doing. So when we say multiple setups every day, if you're on a range trader or you're trading just fair value, then you have multiple setups a day. If you are higher time frame, looking for trending, continuation, break, retest, things like that, then obviously you're going to have to be a little bit more picky with what you're doing. Hit targets fast in expansion phases. This is super true. When it moves, it moves. The only problem is it moves when you're least expecting it. So if you are in crypto, you really have to have your fingers on the pulse, because when everything starts to really get tight, price starts to really get squeezed, that is when people are least expecting for that massive push up to the upside or the downside. It doesn't really matter. Dangers, obviously, 24/7 and no breaks. Something really good about the stock market is that there are sessions where you trade. There is decision fatigue. A lot of things that I see with prop traders is they're trading all the time. And sometimes when there's 24/7 markets, you don't know when to actually have that stop. So that is a little bit of a danger. No circuit breakers. So if you're in the wrong position, you've got to get out. Moving stop losses is just a recipe for blowing your account. So you've just got to be careful on that. Leveraged positions. Now, I wouldn't say this is just on the crypto market. You've got CFD with 1 to 100. You've got futures markets now with, ultra low margin requirements from brokers like AMP and stuff. So this isn't just on crypto in general, but leveraging is one of the biggest problems. But lots of bad actors as well. So brokers, everybody knows FTX and what happened there. Luna, there's many different companies that have blown up, and you just need to be aware that anything can happen in crypto. Where there's opportunity, there's also going to be a lot of bad actors and a lot of people trying to take advantage of that. Sometimes there can be thin liquidity, so sometimes you can see a massive green candle, but that green candle might not be filled with any orders. It just might be, traders trying to find orders in the order book. And sometimes when you think you're going to do a trend continuation, unfortunately, that just unwinds because there isn't actually any liquidity in the market. And things like the order flow software, things like that will help you understand what's actually going on in the candle and not just looking at the candle on its own. 24/7, we talked about that. High leverage. So when there's a lot of leverage, a lot of open interest, and a lot of people get caught offside, it can cause massive cascading liquidations. And we've seen that from multiple times. If you go back on any crypto software, that you can actually see those massive wicks down to the downside. And that is cascading liquidations. Now, there are a lot of strategies around that for price to actually fill in those wicks, and there's many different things that you can make money on, but you've got to understand why they're there as well. And the low barrier to entry, it's super cheap to actually get in to crypto, buy a little bit of crypto. You don't need to buy 1 Bitcoin. You can buy 1/10 of a Bitcoin. It really does not matter. Spots, futures, you've got funding rates, which are basically just swaps. Very similar to what you have in the CFD market, where you could be trading cable, for instance, and you've got to obviously pay the interest on the position if you're holding overnight. So nothing different there. Now, where is the money actually made in crypto? Now, the inefficiencies, I would say, on the lower time frame currency, on the lower liquidity tokens. So some of your altcoins, some of your meme coins, some of the coins that have just released, you've got to be really careful, but there is lots of inefficiencies that you can actually make the most of. Arbitrage, back in the day in 2017, you could buy Bitcoin on one exchange, and then, in a different exchange over in Korea, you could then buy or sell that Bitcoin and you would actually make money on the spread. That's how FTX made all of their money. They would do that thousands of times and they made an absolute silly amount of money. I don't really think that is there anymore, maybe through very, very small movements, but you have to be very, very skilled and you have to have obviously the tech to be able to do that properly. So I don't think us as the average retail trader will be making too much money on arbitrage trading. Trend and momentum, obviously when it goes, and you can make some really good money on the trend continuation trades. Narrative, it's a very emotional market, so the emotion is still in there, very similar to the stock market, where you've got people that are jumping on the trend, where you've got people that are, something like Elon Musk talking about Doge, or he's going to go on a talk show to talk about Doge. You'll see price pump. You'll see Doge pump like crazy. And then when he goes on and he doesn't talk about Doge, then it just dumps all the way back. There are definitely ways of making a lot of money from these different narratives in the market as well. On-chain signals, you've got all of the information of where big accounts are holding their positions, where they're getting in, where they're getting out, so much more. Okay. Mean reversion trades. One of my first strategies that I ever worked on with order flow was a mean reversion trading in the ranges. Wherever price is starting to break through at the top of a range, you just wait for price to actually break back under. Find trap traders, any traders that have gone long at the top of the range and now they're underwater. There is a lot of edge in just trading that back to the bottom of the range. And there's things like order flow platforms, MMT, Atos, many different things like that that you can use that are free for crypto that will help you with this as well. And obviously we talked about 24/7 access. Prop trading. So before we had just breakout, they were really expensive. They had DX trade. There was not really, if you were trading CFD or you even had a couple of futures firms, there was not really any reason why you would go and trade crypto for like all the price. That has now changed. There's more competition in the crypto market right now, and prices are more competition, better conditions for traders, better prices for traders. And obviously it makes more competition between the firms to give more to the trader. So if you're new to prop firm trading, which I doubt you are because you're in here, you do the evaluation, you show you can actually make some money and you've got a little bit of consistency, you get funded and then you get paid. And I know how much time we got. 3 minutes, so we're going to just run through this very quickly. Okay, so Tradified Crypto, 100 pairs and plus. We've also just added tokenized stocks, so you've got that there. 5 times the leverage. We don't want to give you too much because leverage just blow up a lot of traders, and so on and so forth. We're very, very tight for time. Just prop firm capital versus your own personal capital. If you're holding a bag of crypto, you don't want to be touching it. You don't want to be trading it. That was my biggest mistake. I had some really good positions on my spot and I traded it away because I wanted to make money in the short term. Prop firm capital is your ultimate hedge. Go take a account for really only a couple of bucks. We've got accounts in Tradified Crypto that are only costing $19 for you to get started, and you only pay the rest upon success. So dip your toes in. If you want to trade the small movements without trading your actual bags, then definitely prop firm capital is it. So I know we are stuck for time, so I'm not going to run through everything. But there you go. Wow, I could have been talking for ages, Simon. Gosh,
You know, Alex, we should have given you an hour. Yeah. There's a lot. Fun. Listen, thank you for that. Great. Honestly, great presentation. And it's, you know, it becomes clear when you learn about the crypto market why you could look at an ETF or prop starts to make much more sense, doesn't it? Because, like you say, things just happen so quickly and it just runs away. Sometimes not the way you want it to run. So that's why crypto's there.
Definitely. Well, it was good to be on and talking about that. And I think everybody should dip their toes into different assets. And I think there's a big opportunity to do that, especially in crypto now, to accumulate some good coins.
You kindly offered 10 accounts as well for people to.
Yeah, so go in if you've been given by Simon a giveaway. If you've won a giveaway, then go on to Tradified Crypto. On there, you'll be able to sign up to the dashboard. So go to Tradified Crypto, sign up to the dashboard, and you will see your account in there in 24 hours. So that's a 50K two-step account we talked about, 10 of them.
And to claim that, I think it was 10 50K accounts, two-step accounts. I've put my email address there, people. So just email me if you'd like to get that. We've run out of time for the competition element of it. But you're coming back later.
Coming back. We'll have a debate on it. Debate on all the different asset classes and what's to trade.
With Max van der Hagen, just in a couple of hours' time. But Alex, thank you so much for that. Great, really good. You put time in to prepare the presentation. Loved it. I think we've all learned a great deal from that. So, thank you again. We'll move on to our next speaker now.
Bye.
Okay, so everybody should be here in the new session. Mastering the Mind Game of Trading, Rajan Dal is with us from DND Trading. Raj, good morning.
Oh, hey, how's it going? Can you hear me and see okay?
I can hear you and see you great. Can I ask everybody in the
Perfect.
room to do the same as we've been, just this routine of just give me a little yes or hello or a howdy, even Lars, which was great. Let us know that you're in the right room. The way this software works is we have each session programmed as an individual room. So we have to sort of pull the audience from one session to the other rather than just sort of one long webinar running. But Hakeem, great. So super. It sounds like everybody's here. Raj, nice to join us. We've run just a couple of minutes into your time, so we'll try and get started quickly. I invited you here to talk about the psychology of trading, the mind game. We're rapidly, obviously, discovering that that is where the money's won and lost in trading, not just prop trading, but general trading as well. So I asked if you could give us a few tips on how you managed to conquer the mind game, the mindset of trading in your own trading. So maybe you could just give us a little bit of background for people that don't know you yet or DND, and then we can talk about the psychology of trading.
Yeah, of course. So, yeah, I've been trading for around 20 years now, just slightly over 20 years, which is giving away my age. So apologies for that. But also it's nice to see some familiar people in the room, and they will be able to kind of help me explain the fact that even if you do have a trading strategy that has an edge, that you still have to maintain, yourself to perform well every single day if you're a day trader, and also not make mistakes, moving stops, chasing P&L, and following your rules, and basically we look at trading as a performance sport, and you're going to have good days, you're going to have bad days, but effectively you have to consistently perform at a high level to do this job very well. So that's kind of what my presentation's about. I've coached hundreds and hundreds of traders, probably, going into 500-600 odd traders through my career, like from interns when I used to work as a senior trader in a fund, to coaching, more retail traders who are trying to become consistent. So I've been coaching for a long time now. I would say out of the 20 years, I would say I would probably be coaching for about, I'd say about 11 or so, maybe half of my career. It's evolved throughout that time as well. And we mentor traders. We have a live chat room. We bring traders onto our trading fund as well at D&D. But what we are is we're a trading community. We're a community of traders that all have a common goal. We're all trying to be consistent and profitable, and we're a community that tries to do that all together.
I see I saw these lovely pictures of you all enjoying the villa in Tuscany recently. They took the group out. Was it
Yes.
Tuscany or somewhere in Italy? Yeah.
We were in Sardinia, yeah. So we
Brilliant.
hired a villa which had like I think it was about 12 bedrooms or something, and we got all of them filled up and got our traders in there, and we basically, it was really full on. It was like 5 days worth of 24 hours a day, like being in the markets, doing learning sessions, doing live trading sessions, and things like that. I mean, we do it in the chat room as well, but we organize at least 2 or 3 trading retreats a year in different countries like Dubai or in Italy or somewhere else, just to basically have that touch time with the traders, so we can see the whites of their eyes, they can see how we trade live, we can make sure that they're doing everything
Per
just
person.
really
It's
to
so
look after them.
yeah, I bet. And no one wants to be the first in the pool, do they? They want everybody. Oh no, we didn't come
No,
here to
no, or the
swim.
sea. The sea was freezing in Sardinia. I don't even think Alessandro is in the room. I don't even think he got in the end. It was too cold.
Fantastic. Well, listen.
Brilliant.
Let's get in. We haven't got much time, so
Of course.
I'm just going to hand over to you, Raj, and let you
Thanks.
have a look. Because I know you prepared some slides, which is great. So I'll
I have.
any questions, we'll keep an eye on that chat box there for everybody to volunteer. Raj.
Will do. Thank you. So, basically, I would say trading psychology and performance psychology is one of our strong points at D&D. So, we have strategies that we give to people that do have edge. So we make sure that people are coming in and they can learn about trading edge. But but once we get them to a certain level of understanding the mechanics of trading and the mechanics of the markets, I'd probably honestly say that 50% of this game is pretty much psychology. So I put it into three pillars of trading. So risk management being one pillar, strategy being another pillar, and psychology being another pillar. So that's kind of how I frame what we do with our traders and the kind of background. So we've got a few coaches. We've got about 5 coaches that help as well along the line. But what I wanted to do with this presentation is kind of bring through some key points. So I've got like 13 or so slides. I'm not going to go through them super heavily, but what I want you guys to do in the room is if you've got any questions, just ask them there and then, and I'll cover those questions there and then, because I like to answer questions when they're fresh in people's minds rather than run through a whole presentation and get them at the end. So let's get going with this presentation. So what is trading psychology? I break it down into a few key points. So why are we doing certain things? So whether they're good or bad, yeah, why are we doing them? Why are we, what's our purpose? What's our action? Let's say, for example, you take profit too early. Why are you taking profit too early? So that's one key thing. Performance, are we performing to a standard that we need to perform to consistently take money out of the markets? So obviously a key thing there. Do we have deep rooted beliefs about certain things? So this could be about ourselves, our subconscious beliefs. We've seen people, for example, self-sabotage, imposter syndrome, pushing too hard, things like that. What are our deep beliefs? Consistency, how can we align these things to make sure that we can get to a point where we're consistent? And the discipline. This is the hard part for a lot of people, but you can't get discipline without working on the first 1 to 4. Okay, so you could have all the will in the world to be disciplined, but if you have an underlying psychological problem, a psychological issue that you haven't overcome yet, then the discipline is too difficult. You probably won't achieve it unless you deal with those underlying concerns and those underlying beliefs. Okay, so that's the key there. And lastly, we all know about this is ego. Okay, so ego, basically a lot of people don't want to be wrong. They import their narrative into the market when it hasn't. The markets don't care. They don't care about our narrative and our egos. They are what they are. They move regardless of whether we're in them or not. So ego is a pointless thing, but we need to work out how we can work with our ego. So I'm not saying ego is a bad thing. Ego is a good thing because it drives you forward, but it can get in the way of success sometimes. So we discussed that. So, number one, letting the past affect the present. So, what I've done in these slides is I've given the issue, I've given a solution, and I've given a key message. So, you've got this down, and I know this is being recorded, so you can watch this back. But effectively, letting the past affect the present could be that traders become euphoric after wins, or they become defensive after losses, and that leads to poor decision making. So, let's just frame this. Imagine you've had a really tough trading day the next day, and you're coming into a new day and you're saying, well, my job today is to make the money back that I've lost. Yeah, how many people in the trading room have done this? How many people in the chat feel like this sometimes, that they're basically trying to dig themselves out of a hole that they put themselves into, right? I always say to traders, every day is a new day, right? And you have to really just look at the situation that you're in to be present at the start of every day. Yeah, because bringing in your past into today's trading session, it's effectively not going to help your trading on that particular day, and that's from both a positive point of view and a negative point of view. So you have to learn how to reset, how to have closure from your previous trading decisions, but also the previous trading days. You have to work out how to have closure before going into the next trading session. So the key message for this is profitable runs and negative runs. They're unpredictable. Okay, you have to understand it's perfectly normal for a trader trading a 50-50 win rate with a 2-to-1 risk to reward. So a good trader who has edge, it's perfectly normal to have 7 to 12 losing trades in a row at one point through their trading career, right? It happens, but how do you overcome that? How do you gain closure before coming into the next trading day is a key thing here. So the next one, looking externally for causes of losses. So I've got the Dalai Lama there, and it says, when everything is somebody else's fault, you will suffer a lot. When you realize that everything springs only from yourself, you will learn both peace and joy. So I always hear these things, oh, the spread hit me out, or, they stop hunting me, or, all of this kind of stuff. There's a whole trading community built around it, like stop hunting and the brokers being against you and all of this kind of stuff. It's really not there. Like a multi-million billion pound organization is not going to care about your 100 200 pound position. They're really not going to care. Okay, so that's you externalizing a point of your own, I suppose, what's something that you need to overcome. I wouldn't say mistakes, because I think everybody's been there, but it's you externalizing some of your own issues, and needing to overcome those issues and taking responsibility for them is a key thing. So blaming other people and other market forces prevents your growth in trading. And I see a few traders that come from a few other trading communities or a few other courses that come to us in the end are like, oh, my stop's being hunted here, or you know this, that. And I'm like, it's really not. If you put your stop losses in obvious places, you're going to get stopped out. Okay, so little things like that, and being accountable for your good things and bad things is a very key point for being a trader. So I've got that in there. So exactly, extreme ownership, says Enzo, for sure. You definitely need that. So not adequately analyzing your winning and your losing trades, to be honest. So making sure that you're keeping a journal is very, very important, and we come into that a little bit later on. But you have to adequately analyze your losing trades to realize what the difference is between the winners and losers. I always say to everybody in the trading community, there is such thing as a good loser, because probably going to lose 50% of the time. So every time, if you take a screenshot of your trades before you've found out the outcome, if you look back on those screenshots and say, well, actually, yes, I would take that trade again, you've done it right. Okay, so making sure that you're analyzing your losing trades and your winning trades, and it's not subjective, that there is an objective reason why you are entering trades, can really, really help you, because there's so many trades that I would have taken that I've lost, and I look back and I'm like, yeah, I'm actually really happy with that trade. It's fine that that's a loser. There's no, we can think that, there's nothing wrong with losing good trades. So get that in your mind, and it's a very, very important thing about being a good trader. The fear of losing, this deep-seated emotional issues can come from this, but excessive fear causes trade paralysis and missed opportunities. So I've got many traders that will not take a trade, or have not taken trades, more because they're scared of losing, rather than if the setup's actually there. And we have to work out why. Okay, so these slides are all generic. I'm not working with you individually on a one-to-one level. If I am working with you on a one-to-one level, I can start to work out why. But the trading isn't about the outcome, right? So trading is about the process. So if you have a fear of losing, you're already worrying about the outcome before you've done the process. It's like, Michael Jordan once famously said, is that, why would I worry about taking a shot that I haven't taken yet? And that's what you're doing with the trade. If you have fear of losing, you're worrying about losing a trade that you haven't actually taken yet. So it's a very, very important thing to trade, aligning yourself to your process rather than your fears. That's super, super important. Over trading, I actually recently did a webinar about this to our traders. We do something called Trader Tip Thursday, where it's a trader-led subject, and I did a whole session about over trading, and effectively, it's got a lot to do with greed and ego, because if you are finding yourself over trading, what's the reason for it? Are you trying to make more and more and more and more, losing what you potentially have already made? Yeah. Or are you trying to dig yourself out of a hole because your ego is not letting you allow yourself to stop at your risk limitations? So again, there are deep underlying issues about why people do this. But I myself, very, very regularly, only trade one trade a day. basically to stop this, because I know that it takes me 24 hours to have a recovery cycle mentally and that sounds crazy because I've been trading for so long, but a 24-hour recovery cycle for me to get ready, mentally balanced for the next trade. All right. So, so have yourself key set rules, disciplined rules. For example, I am only taking 2 trades every single day, something like that. Over trading is the biggest account killer that I've ever seen in my career, and it's usually because people can't um, they can't rationalize the outcome of their trading days. And that's generally why. And that's both when they're winning and when they're losing. Because when they're winning, they want more and they think, oh, actually, I'm having a good day today. Let me keep trading until they lose that money. And that's a nightmare. And I'm sure everybody in the room has been in that scenario. And then also, oh, I've lost my first trade. I'm going to trade my way out of it to try and dig my way out of this hole. And they lose another one. And it gets worse. And that's also a very negative thought process and a very negative cycle. So yeah, definitely have yourself trading limits on a daily basis for that. Got my friend Rihanna here. So trading analysis rather than the actual money. This is huge for ego, because trading the analysis means that you want to be right. So it's like, oh yeah, I knew the market was going to get up there. I should have stayed in this trade because I knew the market was going to get to that point. Your bank balance does not care about that. Okay, what does your bank balance care about? If you're controlling your risk and if you're taking your money at the right time. Yeah, that's what your it doesn't, it's not going to reflect on your P&L if you knew that the Nasdaq or the QQQ was going to go up today, unless you've managed to take money out of the fact that you knew it was going to go up today. So ego versus actual trading, two different things. And what I've said is prioritize making money from trading rather than proving that your predictions are correct. Yeah. It's very, very, very important. Execution and following your execution is good, even to the point whereas if you follow your execution and you don't make money for the day, executing your trades correctly is more important than anything else. Getting emotionally attached to positions. So I'm not mentioning any names in this room, but I've got a trader that doesn't like trading one particular stock, and there's no reason for it. So if you've had a bad run with a certain stock or a certain currency pair or a certain asset class, move on, get over it. Okay, because if you're emotionally attached to certain positions, that could be your best winning trade the next month or the next week or something like that. Right. So obsessing over any single idea can lead to severe financial losses. So I worked at a trading company, and I had a guy who was just adamant that the BOE need to cut rates at this particular time. And he was an options trader and he was positioning himself around this idea. And in fairness, he was right. But the big saying is that markets can stay irrational longer than you can stay solvent as a trader. And he was shorting and shorting and shorting, and it was not coming and not coming and not coming, despite all the signs telling us that they should be cutting rates. The day that he cut the loss, came out of the position, I think it was like 8 or 9 days later, the Bank of England cut rates and the pound tumbled at that particular time. And obsessing over a single idea and being so hinged on one idea can really, really hurt your trading for sure. The lack of discipline and commitment. Okay, blaming external factors instead of addressing personal failings. Commit to discipline, prep daily. Long-term success requires discipline and dedication. Now, for those who are in this room that are from D&D, I do the same thing every day. And I often wonder whether the people in the chat room get bored of me, because we have the same prep, we have go over the same news articles, we go over the same stocks every single day, we go over the same sentiment indicators every single day. But the thing is that is what success takes, is routine and the discipline to that routine. So we come in at 1:45 for the US session. By the time we start 2 o'clock, we read all of the news, we go over all the charts, ready for the open at 2:30 in the afternoon in the UK time, and we're ready to trade. Okay, we do the same thing every single day, and usually there's the same people in the room who are trading US stocks with me every single day, and in the European session with James, Ricky, and Ross every single day. And this routine and this discipline that we create within ourselves and within our community enables us to be good quality, disciplined, and consistent traders. So Vinny says that we love it. I'm glad you love it. It is that's what it does take to be a good trader. You can't just turn up when you want off the cuff and be a good day trader. You can't. You have to have rules, discipline, and consistency, and that's part of this. Trading in suboptimal mental states. Now, I'll be honest with you, I had a tricky day yesterday mentally. We work a lot on compartmentalization, right? So, regardless of what's going on in your life, can you switch on performance mode and make sure that you can perform when you're trading? Okay. If you had an argument with a partner, or your dog's going crazy, or there's a bereavement in the family, or something going on, just don't trade. Yeah, just definitely don't trade, because you're not going to be in the right mindset if there are serious things going on in your life, and you can end up being on tilt. So really what this is about is awareness of being able to get to the state where you know that you can trade or can't trade. So if you haven't had enough sleep, you shouldn't be trading, things like that. So Alessandro and Mateus have said, look, we're quite bored with the trading every day, but exactly, it's needed every day. So that's what we need to do. So thanks, guys. Yeah, treat trading like a proper vocation with proper mental preparation, right? Imagine if you were like a forklift driver, or you were managing a crane. If your mental performance levels aren't there, it's dangerous. Treat this in the same way as that. Use that analogy. It really, really does help. So, letting faulty beliefs inhibit your trading. So, I've got a picture of a sheep in this one, right? A few sheep. Now, with sheep, obviously they follow a herd, right? So if some people are coming out with giving a narrative, everybody following that narrative does not help. Trading often suits independent thinkers, okay? And I will implore you to be an independent thinker. No one trader can trade same to another trader, okay? So find out what's good for you, find out what your strengths and weaknesses are, and work on those, because trying to go down a rabbit hole with everybody else is not going to work. It's not going to work for a trader. So it's really, really important that you don't affect, these kind of herd mentality beliefs in your own trading, and you find what works for you as your strengths and weaknesses as individuals. Very, very, very important. Reinforcing negative beliefs or behavior. So overreacting to losses creates a negativity cycle, and it's essentially not going to help. So you've got to build confidence through your learning and not criticism. Like, so the best trader, the best prop trader in the world, was not profitable for 2 years and lost 60 grand a year until they turned profitable. I don't know if any of you guys in the room know that, but the best prop trader currently in the world, that was the cycle that they went on. And you have to allow yourself that time to make mistakes and to learn from the mistakes, and get ready. Give yourself grace. Have faith in yourself that you'll manage to get this done. The people that stick at it through that period of time are the ones who are able to do it. Now, bear with me if I'm rushing through these slides, because I'm going to respect the time, okay? So impatience, I see a lot of traders who are impatient. So rushing into entries leads to stress and missed quality opportunities. But not only that, you're entering your trades at the wrong time. For example, if you enter a trade late, your risk to reward is not gonna match up, and that's gonna give you problems. If you enter too early, your stops could be too close to where you are, and that could wick you out before the trades go in the right direction. So trade in the right way, and don't let impatience go there. So my thing at the start of my trading sessions, I do say to a lot of the traders, is I'm not going to take a trade until it slaps me in the face, until the trade is so obvious that I need to take it. And sometimes in the session, I'm sitting there for 40, 50, 60 minutes looking at a 1 minute chart, waiting for the right entry sometimes. So that often does happen. So being patient and training yourself to be patient is a very, very, very important thing. Now, I love this slide. So the markets will reflect you. Okay, the market is a mirror of you and your personality. So if you're a mess and your life is a mess, your P&L will be a mess. Okay, if you are inconsistent and you are not consistent with your routine, your planning, and what you're trying to do, your P&L will be inconsistent. Okay, we have to learn to be very vulnerable and take accountability for ourselves to be good traders. Okay, radical accountability. If you don't, It's not going to happen for you because you're not going to address your shortcomings in the right way. Okay. Being self-authentic is also very important. So some of the best traders I know are very unapologetically themselves. I'll put it that way. That's probably a nice way of putting it. But that's also very important because then you can identify your strengths and weaknesses a lot better if you are unapologetically yourself. So that is also very important. I know I've got a bit deep in some of these slides, but it is what it is. But here are my key takeaways. Okay, so successful trading from a psychological standpoint for what this is called. This lecture is called is self-awareness, discipline, emotional control, and continuous improvement. Even if you've been trading for 20 plus years like myself, I'm continuously working on these things all of the time. There's never a point where you feel like you're the finished article. I will say that. Okay. So the final thought is overcoming psychological barriers is the key to consistent success. Okay. This presentation that I put together was generic. So there are all different kinds of traders and there are all different kinds of people. Okay. If you need a performance coach, get in touch, speak to trading psychologists, speak to, you know, actual psychiatrists if you feel like you need to, right? But these are all very, very important points about getting to being a profitable trader. Most of them are psychological, like sticking to a plan, making sure you stick to your risk management rules. A lot of that is secondary to you being able to do this psychologically. So all of these things, the self-awareness when you are going into tilt, when you aren't trading in the right mindset, when you haven't compartmentalized before the trading session turns up, when you haven't performed your routine, that's all self-awareness. Discipline when you're trading, making sure you adhere to your stop losses and target profits, making sure that you're only taking the entries that you should be. Emotional control when you're in a trade. Oh, I feel like I should take profit early. Oh, I'm heading to my stop. I should move my stop down. They're all emotional control mechanisms and continuous improvement because without your journaling, you're not going to notice the patterns that are going to improve your trading performance, right? So you've always got to work this out. Rick Stowe, who's one of my coaches, has just said, if you're uncomfortable with the risk, then your mindset will be the first thing to suffer. So we often do tell a lot of traders, like if the risk is too big for you, you and it changes your behavior, that's the wrong kind of risk for you. Okay. Your risk amount, your risk tolerance should never change your behavior when you're in a trade. All right. So I've just hit the 12 o'clock on the dot there, Simon. Hopefully that was okay.
That was fantastic. Thank you so much for sticking to the times. We run these things. Everybody's got to start and finish time, so I appreciate that. Slide 9, a suboptimal mental state. I recognize that. Yeah, I feel that quite a lot. I've never heard it described as that, but it's very true, and it's relevant to all sorts of walks of life. Thank you so much. I know I gave you a tall order to teach people how to trade in the right mindset in about 25 minutes. Obviously, we can go on a lot more about this, but Raj, we'll have you back again, and we'll see you at the expo in London in October, of course, but we'll keep in touch in between. Where do people find you? dndtrading.co.uk?
.co.uk. Yeah. And I'll say a quick hello to Jason as well. Hello, Jason.
Fantastic.
Yeah,
And
I was listening to the end of that. That was really good. The points are really important.
Thanks, Jason. I'll speak to you guys soon. Thank you.
Thank you so much. Okay, so I'm going to pull everybody through to our next session. We've got a real treat coming up now. We've got two traders, Cypher and Zamco. I'll pull you into the next session. Thank you again, Raj. Great to see you.
Cheers, guys.
yeah, and that's completely normal, all right? Your accounts will go into minus, all right? It's part of the game. How you maintain your composure, how you maintain yourself, how you maintain your discipline during those periods, it's what's going to get you funded. That's what's going to get those payouts. Does it make sense? Now, again, like I said, if you can't do it off the charts, it's impossible to do it on the charts. Because remember, when you're on the charts, there's no one else looking at you, right? You can be in your bedroom, your doors are locked, you have your monitor in front of you, you've got your MT5 or your whatever it might be on your phone, all right? You can do whatever you want. No one's watching you, no one's judging you, all right? The only person that you have to, you have to be accountable to is yourself, okay? That's track number one, discipline on the charts, but not off the charts. Track number two, or what's what I'm trying to say? Track number two, let's just stick with that, all right? You're outsourcing your brain, all right? Now, I understand okay, let me just go through this. Signals, Discord calls, live trading, I get the appeal, but there's a difference between learning and leaning. If you outsource your buy, sell directions, your psychological resilience collapses the moment you need it most. Independence is mandatory, all right? And this is especially true for prop trading, all right? When it comes down to it, a lot of prop firms will ban you if they catch you trading or group trading or, copying someone's signals or having the exact same trades as someone else. Of course, a lot of people trade. There's a lot of communities, whatever it might be. So it's a great area within prop firms. But ultimately, when it comes down to it, if you're following someone's signals, if you're waiting for a mentor, if you're waiting for, someone to hold your hand during this game of trading, especially in prop, you will be destroyed, all right? Imagine you find someone, all right? For example, me personally, I call out most of my trades within my Discord, all right? Imagine you find someone who's profitable, who has good signals, who gives good call outs, right? And you are following their trades, and you managed to get funded, right? You've managed to make a payout even, right? You managed to do all these things just by following this individual's footsteps, all right? Say, Lord forbid, tomorrow that individual dies. Say, Lord forbid, tomorrow that individual, gets arrested and he's in jail, right? Whatever it might be. You've now just lost your main source of profitability. The person that you relied on, all right, has disappeared. What would you do in that scenario, right? That's just one extreme example, but this is something that can happen, all right? Someone's strategy might work during one season, but is absolutely dog water in another season, and you have decided to follow those signals or follow that strategy during that dog water season, right? The trader himself, of course, there's a lot of discretionary aspects when it comes down to trading. You can have a mechanical strategy as much as you want, but when it comes down to managing trades, as a trader, me personally, someone who's got 5 years experience, there's something called intuition. There's something called gut feeling, all right? This is something that I have managed to subliminally build through all the market experience that I've had in the last 5 years. There's certain things that I will see on the charts, all right, that I won't be able to explain, but I will know in my heart, I'll know in my gut that, okay, cool, I need to get out of this position. It's about to reverse, okay? This is something that can't be taught. This is not something that can be copied, all right? So ultimately, understand this. If you're going to be trading prop, if you're going to be trading, broker, whatever it might be, if you're going to be trying to pass these funded accounts, all right, by following someone else's signals, there's only so long that it will work. Ultimately, it will lead to failure. Ultimately, you have to learn the skill for yourself. So again, and worst case scenario, yeah, a prop firm bans you because they caught you, trading, whatever it might be. All right, cool. Wrong side of risk. Okay, this is something I like to talk about a lot, all right? Now, let me ask a question in the chat, all right? When it comes to prop trading, all right, whether you trade CFDs or whether you trade futures, how much are you guys risking per trade on an evaluation stage before you're even funded? Also, Simon, how long have I got left? Just let me know.
With Zamco is waiting, so ideally we're trying to split it into 20-minute sections. So, if we could, maybe wrap it up in another 2 minutes, and then let Zamco. We want to speak to him, and then we'll all get together.
Perfect.
You're doing great. I mean, the great energy. Yeah, some good points here as well. Really interesting points. Thank you.
0.25% on a 300k account. Okay, cool. Stephen Cassidy. All right, I'm going to try to wrap this up as fast as possible. But Stephen Cassidy, okay, 0.25% on a 300k. How long do you think it will take you to pass that target? All right, how long do you think it will take you to pass the profit target, whatever it might be? Understand this, guys. All right, okay. A lot of you guys, there's two groups of you guys, and both of you guys are in the wrong position. All right. there's one group of you guys that are trading and you have amazing setups, but you're not risking enough. All right. And at the same time, you have bad setups, or you might have bad setups and you're risking too much. All right. So that's one group. You have amazing setups, you're not risking enough. Sorry, you have bad setups and you're risking too much. Yeah, you might be in a drawdown position, you add more to the position, and at the same time you have amazing setups, but you're too scared to enter the position. Yeah, that's one group. The other group is that individual who spends months. Of course, if it's your first funded account, that's besides the point. But if you're someone who's already funded and you've been getting payouts, if you're someone that's spending 2-3 months during the evaluation stage, okay, it doesn't make sense. All right. During the evaluation stage, during these periods in which you are not making money, all right? You are not getting paid to do an evaluation. You only get paid on the live funded account. So none of you guys should be risking anything more, in my humble opinion, anything less than 2% per trade. Okay, your goal should be to pass these evaluations as fast as possible, get the funded, de-risk, then make your payouts. All right. So that's trap number 3. You're on the wrong side of risk. All right. Don't be spending months on an evaluation. Get through that evaluation as much as possible, as fast as possible. Trading the aftermath. All right, cool. I'm not going to go through this one right now because, of course, I've got time restriction. But this last one is very important. Trading from a place of desperation. All right. A lot of you guys are in positions where you have 9-to-5 jobs. All right. A lot of you guys want to pursue trading and get into prop firms without a 9-to-5, without having a stable source of income. You want to leave your 9-to-5, quit your 9-to-5, and make it in trading. And I understand the appeal. I understand the actual the energy behind that, because I was in that position as well. But you have to understand this. If you are someone that's trading from a place of desperation, you will be destroyed, especially when it comes to prop firms, right? Prop firm challenges are expensive, right? Whether it be a 10K, whether it be a 50K, whether it be 100K, whether it be futures, whether it be CFDs, prop firm challenges are expensive. And it can be very, very, you can quickly fall down the rabbit hole of, entering that gambler's mindset and just buying more challenges and blowing the challenges and buying another challenge as soon as you blow it, all right? Trading from a place of desperation, trading from a place where you don't have money is going to destroy you. So if that means you need to get yourself a 9-to-5 job so you can get that $2,000, all right, or £2,000, if that means you need to get, start a side hustle, start a business, do that. Me personally, I was in a privileged position of having money from e-commerce that gave me the stability to pursue trading and get to the success that I've got to. But if you're in a position where you don't have anything going for you, all right, get something going for you. Get something that under your belt, because that $2,000 or that $3,000 that you make from your 9-to-5, that pays for your rent, that pays for your food, that pays for your electricity, that pays for your children's nappies, all right? That in itself will give you the mental stability and the mental fortitude to make $20,000, $30,000 from the markets, because you're no longer worried about, the next trade needs to pay my rent. You're now trading for the sake of taking good trades, all right? You're not trading for the sake of putting food in your fridge, all right? And I know that's a bit counter. What's the word? It's I forgot the word I'm trying to use, but I know it's sorry.
Counterintuitive.
If that's the word, that's the word. I know it's a bit counterintuitive because we all trade to make money, all right? But the focus should be, I trade to take good trades, and the money comes by itself afterwards, right? The money is an aftermath. It's something that comes as a byproduct. The focus should always be risk management, good setups, all right? And that's everything from me. One last piece of advice from me, by the way, if you're someone that trades CFDs, rotate your accounts, all right? If you're trading futures, you can go ahead and copy trade. The entry to futures is a lot cheaper, so you can obviously buy accounts and rinse and repeat. But when it comes down to CFDs are a lot more expensive when it comes to accounts. So please, when you buy these CFD accounts, this is what I personally do: rotate the accounts. If you take a loss on one account, then keep that account to the side, make money on another account, then come back and take that out drawdown. And lastly, if you guys do want to jump on a call with me personally, all right, I'm opening up 10 spots for a free one-to-one trading audit with me personally. There's a QR code right there. Go ahead and book the team, booking with me. The first 5 people will obviously get the opportunity to have it with me. The rest of you guys will get the call with one of my trading advisors on my team, and we can basically, like I said before, you'll get the opportunity to speak to someone who's funded, someone who's obviously in a position that you're trying to be in. We'll go through whatever issues you're going through, come up with a plan, and help you get to your next payout, or help you, make something give you advice if that's what you need. Whatever you need during the call, we'll give it to you. But yeah, we'll leave it at that. Thank you, Simon, for having me, and I will end it there. Simon, anything you want to say?
Well, just thank you very much. Well, absolutely fantastic, great energy, and really pleased that you've prepared these. I think everybody will be getting something out of that. Jason, you and I are newer to the props. You know, we're looking and learning and seeing how these young guys have sort of adapted to this new market. And it's fascinating. I mean, the rules around the copy trading are something that, again, counterintuitive. We'll use that word again, but this is what was in the FX space. It goes in the prop space. Maybe it can be something that can hold you back, and because you're risking breaching the account all the time. So it's fascinating to see that. Zamco's waiting. I'd love to speak to Zamco as well. I mean, Zaki kindly referenced Zamco as being maybe slightly bigger in the payout terms. So can we bring the screen more so Zamco, you're more in there, or are you happy for us all to stay here and just to talk?
I don't mind. Whatever you want, it's absolutely fine with me.
Okay, fantastic, great. What I'll do is I'll take myself, and I'm going to take myself, and I'm going to take myself out so we can see you bigger. And Jason, can I hand over to you? And
yeah,
thank you.
Okay, well, yeah, that was really interesting. Thank you, Zaki. I was learning some bits as well there. I'm not an experienced prop trader, so good lessons for me and everybody else. Let's hand it over.
Yeah, sure. So, hello everyone. My name is Zamco, and I've been trading for almost 9 years now, and I was unprofitable for 6 of those years, and I became profitable, I guess, on my first payout back 2 years ago on April 2024. That was my first ever payout that I got from a prop firm, and since then I've received almost $1.6 million in payouts in those last 2 years. So it's been a really big change from 6 years of unprofitability to suddenly hitting payouts upon payouts every single month. It's actually an insane turnaround, but it didn't just happen randomly or magically. It was a system that I've been trying to implement, and it's literally just doing the exact same thing every single day and just doing it the right way, which through trial and error I figured out what that was. So for me personally, it was simply like, as Zaki said, a lot of people, they are taught to risk very little because that's the traditional understanding of trading. Risk 1%, risk 0.5% per trade. That's what we're taught to do. But I deviated from that, and what I realized was, if I risk more, I tend to pass these challenges quicker. And when I pass these challenges quicker, I have more attempts at getting funded as quick as possible. And when I'm funded, all I need is 1 or 2 good trades and I can get paid out. So that's the theory that I used, and that's what I've been doing ever since. I tend to risk heavier on the challenges to pass through them as quick as possible. Once funded, I drop my risk to like 1% risk or something like that, and just aim for 1 good trade. Because as Zaki mentioned, a lot of the issues that come is a lot of people get funded and they get to the payout. They make a bunch of profit on that funded account, but then they lose the money because they tend to continue trading the accounts. So what I realized was, I kept making this mistake as well. I keep I've made like $5,000. The account is up. Leave it now. No, I want to make 10,000 or whatever. And that's where you start losing. So I realized, all right, well, if I just take 1 good trade and the moment that's done, leave the account and move to another challenge. So whilst I'm waiting for my payout date to come, I'm trying to pass other challenges on the side. So that's the approach that I take now. And that's the way you can secure payouts much better and much more easily, because you're not trading. Basically, the more exposed you are to the market, the more trades you take in the market, the more opportunities to fail. So once you get that 1 good trade on the funded account and you have a payout secured, leave it after 1 or 2 good trades and then move on to the next challenges on other firms or even on the same firm. Just get more allocation. That was my goal. Just get as much funded allocation as I can. And I have almost 2 million in prop firm funding across futures and CFDs. And I don't need to take many trades. I just take 1 trade and and it's like $500 or sorry 0.5% profit on one account, but because that's copied across all of my capital, it can be like $20,000 in a single day, but I've only taken a small trade in the day. So that's basically the goal. It's get as much funding as possible and reduce the number of trades that you take. And when you're in the challenge stages, of course, I tend to risk heavy because you just want to get funded as quick as possible. So that's basically my approach. And Jason, I know you're not well versed into the prop firm space, and I believe I saw you at the last prop firm expo as well. So I see that you're trying to get into it, or just trying to understand it. So yeah, this is basically my approach to prop firm trading.
Yeah, that's really interesting actually, because there's a clear overlap with Zaki's strategy as well. He was saying, over leverage on the when you're trying to pass the challenge, and then same as you, pull back on your leverage. But I love that that idea that you just one trade a day. If it works, leave it. There really is I don't know if this is the right way to say it, but it's a game.
Yes.
You've almost gamified the process and taken it beyond trading. And you structure what you do for the payouts.
Yes. Yeah, exactly. That's all it is. It's all a game to me. That's all. It's literally just numbers. Just how many tries does it take to get funded? All right, once I'm funded, it's just a numbers game. One good trade, cool, payout secured. Next one. That's all it is. It's not your textbook trading where you're trying to grow an account slowly. No, that's not it. It's literally just a numbers game where you'll lose accounts along the way, but you know that one payout will make up all of the costs anyways, and then everything after that is all profits. So it's all just a game, and that's basically what you want to do.
That is a really good lesson, fascinating, something I'd never even thought of. I don't do prop challenges, so it's a really interesting approach. So can I ask you, how do you handle the negative side of it? How do you handle it when you might have had a string of 2 or 3 losses?
How do I handle that? Honestly, at the beginning, it would be extremely difficult because you don't have as much capital in terms of let's say in your bank account, you don't have much money. And if you start losing, you can't really buy as many challenges anymore because now you're really tight. But once you have a few payouts behind your belt, it's like, well, it doesn't really matter at that point. It's like you can go for 1 or 2 months of losing, and it's like, oh well. I mean, that profitable month is coming soon. If you have a statistical edge in your strategy, if you don't, then of course I don't know what to say. But if you do actually have a strategy in your trading and you know how to actually take a decent trade where it does have a decent statistical edge, more than likely the winning trades are going to come, and when they do, they'll make up all of those losses. So I know in my head, it's like, all right, I'm losing right now. Cool. I'm slowly. It's just like a downward process. It's just a little pullback. And, you are in a losing phase. You are losing money. Your bank account is going lower and lower. But the moment that your strategy starts working again, because the market conditions are favorable, instantly you'll get funded, get payouts, and then suddenly you'll go even higher than where you were. So it's really just understanding that you just need to trust your strategy. If you have a proven strategy and you know it works, then you're not really going to be fearful. So that's kind of how I manage it, because I know in certain months I do better. I knew that in May last year I did $250,000 in payouts, and literally the same thing happened this year. May comes along, instantly I'm getting so many payouts. I think I've already cost like $200,000 in payouts this month alone, whilst in February, March, April it wasn't that good. But my data's told me that in May I tend to do really good, and that's exactly what happened this month. So it's just trusting your strategy and knowing the data behind it.
Okay, I think 3 really important points there. Keep banking the payouts. Just focus on the payouts, and then build that money in your bank account. So that's your buffer. And then you can ride through the difficult periods. And of course, like every trader, whether you're just a normal trader like myself or a prop trader, you've got to trust your strategy. You've got to just keep going, and no guessing, no gambling, A+ setups only. If there's no trade, you don't take it. You can't afford to have, you can't afford to just throw money away on stupid trades. If there's no trade, you're happy to just walk away from your laptop, I suppose. Just say it's not happening for me. Do you have days when you don't trade at all?
Honestly, no. That's one issue. This is the biggest thing. I am a really undisciplined trader, but I also
Hmm.
make a lot from prop firms because the way I go about trading, my strategy is great. It's like an 80% win rate with a pretty decent risk to reward. The actual trading strategy is really, really good. I don't stick to it. I take stupid trades. I impulsively enter. This would not, the way I approach things would not work on a live brokerage account because I don't have self-control. My self-discipline is horrendous. But it only works because I understand it's just a numbers game with prop firms. To pass phase 1 and phase 2, that's 2 trades. I pass phase 1 in 1 trade. I pass phase 2 in 1 trade. And once I'm funded, I only take 1 trade, and that's my payout. So all I need is 3 winning trades in a row, and I've got a really decent sized payout. So even if I'm being stupid and not taking good trades, I know that eventually I'm going to take 3 good trades in a row. If I actually stick to my strategy, of course. So I do my best to stick to my strategy. So when I do, it does work pretty well. But sometimes I do have those moments where I just take dumb trades. And yeah, sure, I lose the challenge, but I'm not blowing through my whole brokerage account. I'm not losing all of my money. It's just a small challenge fee that I lost, and I just start again. And eventually I'll get 3 trades in a row, and I've got a huge payout ready.
That's fascinating. That really is fascinating. So the key, bank the payouts and then just keep buying challenges. If you blow a challenge, it doesn't matter because you've got plenty more to rely on. Okay, done a stupid trade. I'm an idiot. Won't do that again. Blown one account, but just keep going.
Yeah, that's literally
That's
it.
the key.
So it wouldn't work.
Fascinating.
So this is the beauty of prop firms. You can be undisciplined. You can be stupid in your trading. But if your strategy has a general edge and you kind of know what types of trades to take and you risk accordingly, because I risk heavy for a certain reason, because it only works if you risk heavily. Because if you're risking very little, the trades that do work, you won't make much, so you don't even pass. Sure. So it is about risking a certain amount and understanding the prop firm game. And you can be undisciplined and it'll still work.
Yeah, I mean, you said that you're aiming to pass a challenge with 1 trade. I didn't think that would be a good idea, but I can understand why that is now. Get on with it. Stop wasting time. Don't spend a month trying to pass a challenge.
Yeah. With certain prop firms, you can. So they have like 10% overall drawdown that you can have, and 5% in a single day. And some prop firms allow you to risk that whole 5% in a single day, whilst your profit target is only 8%. So that's only like a 1 to 1.5 risk to reward that you need. So I risk the whole daily drawdown, and I only need the trade to move in my direction just a bit, and that's it. I pass. It's really just as simple as that. It's just understanding their rules and playing it against them.
You're playing the system. That's literally terrific.
That's
so when you started out, what was the average size of a prop challenge that you were taking? Because obviously you didn't have the kind of money that you've got now.
Yeah, so initially I was working a job and I was actually taking money from my little brother and my mum. They were actually giving me quite a lot. So my little brother, over the course of my 6 years of unprofitability for prop firms, he probably gave me around £11,000, and my mum probably gave me around £5,000. So I lost all of that. They believed in you. They believed in me, absolutely. Yeah, they really trusted that I could do it, but I did lose all of their money, and that felt horrible. Then I later went on to get a job, and because I was living with my parents, I would still be getting like £2,000 a month from my job, and that can all go into prop firms. So I was still buying like 50k, 100k accounts, quite heavy size, which is like around £300-400 per account. So I was still taking really, really big accounts, but that was very stupid of me because I didn't realize I don't have as many attempts. I have to wait for my next paycheck.
Right.
I can only get 4 or 5 attempts, and then I just have to wait now. So it's that the numbers game doesn't work if you don't have as many attempts. So then I scaled it down to 10k accounts, which are very cheap. I can buy like 30 of them in a single month, easy. And that is where I got my first payout. And I realized, if I just give it more attempts, it actually allows me to get a payout because the edge it allows the edge to work out. So that's kind of where that concept came to me. It was just like, okay, well, if I just risk heavy but on smaller accounts, I get more attempts, then I can get a payout. And then I use that payout to scale into bigger accounts and do the exact same thing. And it just goes on and on and on, where now I can buy 500k accounts and blow through 10 of them in a single day. It's like, oh well.
Doesn't matter to you. That's really fascinating. So let me ask you another question. What's the average number of accounts that you'll have going at any one time? So for example, today, do you mind me asking how many accounts you've got open at the moment?
5, 10, 15, 27 or something like that.
Whoa. Okay.
So
And
these
are
are
you doing the
a lot
exact
of them.
same trade on all 27 accounts today?
Typically, yeah, I tend to take the same
Right.
trades, but
Same
mostly
leverage, same accounts. But of course, so all of the accounts aren't at exactly the same level. So you could, like, say, for example, you had a losing trade today. You might only blow through a small percentage of those accounts, and you don't really care because you'll just replace them tomorrow.
Yeah, that's pretty much it. Like because every prop firm has different rules, right? So some accounts I might blow, but some reach their daily drawdown and the account is stopped for that day, and then I can continue the next day. So some of them aren't blown, some of them are, so I have to start those again. It's just cycling through each one, and it's just taking the same trades on each one, and whatever the rules are, they kind of, if they breach my account, they breach it, and I just buy another one and do the same thing. I'm just taking the trades no matter what. I'm taking the trades that I need to take no matter what.
Yeah. Wow, interesting. And you said that you know that some months you're going to do really well. May is a good month for you. Do you have periods, days, weeks, months when you say, okay, I know this isn't going to work for me? Because for me personally, August, I mean, I've been doing this 40 years, and for some reason, August always seems like a bad month to me.
Oh my gosh.
December is mostly a waste of time. First 2 weeks of January, I struggle because, it's low volatility, low liquidity. The opportunities are not there. Do you find the same thing, or do you have a different strategy because you're playing a different game to me?
No, it's the same thing for me as well. I know that in July, August, it's that summertime period. Oh my, it's horrendous. My strategy pretty much just goes down the hill. Everything's moving weirdly. It doesn't work. And even prop firm accounts, I'm struggling to pass them now because even getting those 3 trades in a row, it's really, really difficult. So I do have those periods where I know it's not the best time. But I know May, October, November, September, October, November, and May, those are my biggest months ever. So like I know those are my money-making months, and that's where I instantly go really heavy on prop firms, and I know I'm going to start buying more and more accounts. And I reduce the number of accounts that I buy and how aggressive I am when I know it's the months where I tend to lose quite a bit. So I don't lose out as much money.
Sure. It's all really smart. Your experience is really showing through. And can I ask you what markets do you trade? What are your favorite markets, or do they change depending on what conditions? What's moving?
So I trade 3 mainly, which is gold, Nasdaq, and DAX, which is German 40. So mainly just indices and metals. Those are my main things. And again, for those 6 years of unprofitability, I was trading Forex, like GBP USD, Euro USD, and all of the currency pairs. I made no money on that, but the moment I switched to indices and metals, I realized so much more liquidity here, very expected times to move. Like Nasdaq at NYSE Open, it moves at this time. I know when the volatility is going to kick in.
Right.
And German 40, I know at London Open, that's where it's going to instantly have volume. But currency pairs, sometimes they just move randomly, and it doesn't make sense to me. So, and they just don't move as much.
That.
So yeah, those are my 3 main pairs.
Yeah. So I assume you have certain times of the day as well where you want to be in the market, and certain times where you just don't want to be.
Yeah, pretty much.
And if you're really focusing on just that one trade per day, you can zone in on the opening, as you said, get the trade done, and that's it. You're done for the day.
Yeah, exactly. That's all it is try to just catch that market open, get the trade in my direction, hit my take profit. I'm out, done for the day.
That's incredible. Well, you put in the hours, the years, and you've devised this strategy, and it's super successful. It's really fascinating. I've certainly learned a lot today.
I'm glad to hear that. Yeah, it's been honestly, people don't realize how much effort actually goes into it. Like there are literally a few days ago, I slept 2 hours. I slept 2 hours intentionally just so I can wake up for Asia session, because I knew that right now Asia session is moving really good. So I slept at 10:30, set my alarm for 12:30 a.m. and that's it. I stayed awake all day long for 24 hours to the next day, and I only slept 2 hours because I know, look, this is where I'm going to make the money. I'm going to sacrifice everything. I don't care about my health. I don't care about my sleep. Nothing. Sure. I need to make this money. Yeah. I know this is where it works.
It's the big trade.
This is the level of dedication and effort that needs to go in, where you're sacrificing a lot to make it work.
And can I think Simon, do we need to move on, or can I ask one more question?
No, yeah, please do. I've just got a couple of questions myself, so
okay,
I'll bring Zaki back in as well. Zaki, if you're still there.
Yeah, that would be good. Actually, maybe Zaki could answer this question as well. I'm just interested because how much time do you actually spend just focusing on the accounts and where you are with the accounts and how much risk you need to be taking? It sounds like that's quite a laborious process. And 27 accounts, that's a heck of a lot.
Well, I mean, once I've already bought them and they're ready, it doesn't take that long. It's just when the time comes to trade them, it takes me like 1 or 2 hours in my trading session. If the trade just wants to consolidate or take forever, then whatever. But typically it's like within an hour, I'm in and out, and all of my accounts I've either lost or breached, or I've made a ton of money. So that's what it is. It takes like less than an hour, really.
I was going to ask you guys both.
Yeah, so,
Sorry, Zach.
yeah, same thing for me as well. I'll be trading for like half an hour. My average trades are between 20 minutes and 30 minutes. So it's literally just whatever happens during that period happens, and then carry on.
You've got your favorite times of the day as well, when you know you want to be in the market, and then you're just out, you're done.
Yeah.
And do you have the same kind of thing? Do you have multiple accounts?
I've got multiple accounts, but so I trade mainly CFDs. With my futures accounts, I do copy trade them, so I keep them synced up with TradeSync, and I'll go ahead and copy trade them. But when it comes to CFDs, I don't trade them or copy trade them. I rotate them. So, for example, my philosophy is this, right? I want to be getting paid out every single month, right? I don't want to be in a position where I have 1 month where I'm not making any money. So instead of simply connecting all my accounts and then I take a loss and all those accounts go into get into drawdown and all those accounts are suffering a loss, I'll take a loss on one account, it will get into drawdown. The next trade I'll take on the next account that will be in profit, that's ready for payout, move that to the side. Next account, ready for payout, move that to the side. And the accounts that are in drawdown, once I've got those sorted, that's when I start working on these accounts that are in drawdown and get them out of drawdown and whatever it might be. So my goal is to, regardless of where my strategy might be in terms of performance for the month, whether that month it might be bad, whether that month it might be good, I want to be getting paid out every single month because I want that consistent cash flow, if that makes sense.
Makes sense.
It does make sense. It's amazing. It's amazing. Can I ask a question just in terms of the payout system of prop firms, the rules and things? What do you guys look for when? I mean, obviously, you both got a big social media presence. Prop firms are approaching you, I'm sure. What is it that for your own trading that you look for first of all when you meet a new prop firm? Because there are some just starting up. What will you think? Right, that's the most important point for me to get right with this prop firm.
Well, for me specifically, it's how much do you allow me to risk per trade? If it's very restrictive, more than likely they're just going to breach you very easily if you go over even by like a small, like 0.1%. So my main thing is, can I risk heavy? Yes or no? If I can't, then I typically don't really stick to those types of prop firms.
Similar for me as well. It comes down to the evaluation phase. Am I able to risk more during the evaluation? Again, some firms out there let you risk the whole daily drawdown. Some of them won't say it, but they'll cap you at 2.5% or whatever it might be. Me personally, and then after you get to funded, they'll slap you with an email stating that you are now you can no longer risk more than this amount. You're on a lot size restriction. So you get all of these weird rules coming on. So mainly, can I risk more during the evaluation phase? Number one. And once I get funded, are you going to restrict me? If you're going to restrict me, I don't want to trade with you. Does it make sense?
It does. It does. Just because there's no authority for the prop firm industry. It's self-regulating.
Yeah.
And the more we learn about it, the more some people use social media. That's where prop firms even can get their reputation brought down very quickly or built up very quickly as well. You guys are posting quite a lot and sharing a lot of your trading stories on Instagram and other channels as well. TikTok, I think, Zaki, you do TikTok as well. What do you get out of that? Does that help you actually to be always engaging with other traders and listening to them, or does it just help you to sort of be? It's almost like a journal. You can say, "I'm trading well." What do you get mostly out of the social media?
You want me to be honest?
Go on in, please.
So unfortunately, we're currently living in a period in the prop firm era where prop firms, they don't stick to their word. All right, there's obviously you've got the ones that are up there that are, you know, consistent with payouts and they have good rules, etc. Yeah, you can call them the big three, the big five, whatever you want to call it. But there's other prop firms out there that don't stick to, you know, I'm sure a lot of people can relate to this, where, you know, they've had a payout denied unjustly, or they've had, you know, restrictions added to them. So really and truly, having that social media presence, obviously it makes them think twice about, you know, potentially doing something to me personally. But the main thing is, all right, the main thing that I've found, which is most powerful with social media, is obviously I have a community, I have, you know, students, I have traders that trade under me. All right, when I have that presence and now my students and my traders have problems, I have a platform to speak about it. I have a platform where I have some sort of leverage, so at least the people that are trading with me, under me, they don't get done dirty, if that makes sense. All right,
It does.
that's the main
It's the
thing.
leverage.
I think that's the responsibility that every single individual on social media who trades on social media should have as well. Like, if you have a community, if you have people that follow you, all right, and if you're going to be talking about prop firms, if you're going to be, you know, trading the prop firm, you need to make sure that people that follow you and then follow in your footsteps are also getting a good experience. And the way I do that is, okay, cool. If in my community, someone's got a problem, I have direct contacts with prop firms now because of my presence. I have, you know, the CEO's number on my WhatsApp. I can text them, this person's had this issue, blah, blah, blah. They'll give it extra, you know, give it an extra look, if that makes sense. That's the main thing that I use social media for.
Sam, is that the same for you? Is this sort of having a bit of leverage? And
initially it didn't start off that way. It started off with me just simply thinking, oh, I got one big payout. Maybe this is the start of a new journey. Maybe I'm going to start getting paid out a lot. So then I just started posting videos on, look, this is my payouts. And pretty much most of my videos that you see is just, I received this payout, I made this much today. It's not really anything about me personally. It's just payouts, payouts. It's like, oh, look, this is the journey I'm going on. That's how it started off. But then I realized, yes, there is a leverage that you can have with prop firms. And now that is in the back of my mind, where it's like, okay, well, if I'm trading with a prop firm and I've just made a video that I made this much amount on their prop firm, they're probably going to see that, and they're probably not going to deny my payout because they do not want me to post about it if they deny me unjustly. So yes, that is in the back of my mind. But another thing that social media has really helped me with is defining my strategy much more. Because when I was trading without really, you know, having to make videos about it, I didn't really know why I'm entering trades because I was never questioned about it. I never had an external source questioning the things that I'm doing. So now that a lot of people in the community are asking me, well, why did you enter there? Why did you wait for that? Now I'm having to verbally, constantly have to like describe, what am I doing? Why am I entering here? What am I waiting for? And it's actually made me a better trader and made me define my edge much better and understand exactly what I need to wait for to take my trades. Before it was just a feeling, but now I've had to verbalize it so much on video that I know why I'm entering now. So I think that's where it's also helped me in terms of my actual trading, and it's made me much more consistent.
In you know, the dark ages when we were all starting trading in around about the year 2000 and so forth, this was a big problem for people that migrated from the trading pit floors to online trading and sitting at home, and there wasn't WhatsApp or social media at all, didn't even exist. So people struggled to sort of find other people that were trading and just be able to share their ideas. The first thing was the chat forums on the websites like ADVFN and things like that. So it's obviously moved that massively forward. But I think it's the same principles. Is first of all, you want to know you're in tune with other people doing it, but you're using social media to sort of validate what you're doing and sort of almost keeping a journal record as well. And it makes you sort of, you know, have people to answer to. Just you've got your community there, which is amazing. Can I ask, Jason, are you still there? Or you?
Yeah, I'm still here. Sorry, I lost my camera for some reason. I can't seem to get it back. But that last point about having an accountability partner, it's you know, creating an accountability partner almost through your social media. I think that's a really interesting point. I think traders do need. I think it was Zaki that said earlier, you know, you've got to be accountable to someone. It's you're in a bedroom sitting in your pajamas trading away, and you know, if you go and screw up, there's no one to answer to. So it's an interesting way to create that accountability partner by posting.
Yeah, no, definitely.
we've just got a couple of minutes left. Is there plans? Do either of you take money? I mean, if I can ask it, what do you do with payout money that you've earned? Does it go into a live account? Do you invest it? What plans would you have for managing that money after you've made it in the trenches with the payouts? Does it?
You want to go first, Zaki?
Okay, so yeah, I'll go first. So in terms of payouts that I receive, okay, so in terms of, so I'm in a position now where the payouts that I make aren't as big as the money that I make outside of trading. I've got an agency as well, which basically grows and scales prop firms as well. So I take on prop firms as clients, grow their social media, get them more clients as well, etc. So that makes me more money than my payouts do. That's just me being completely transparent. But in terms of what I do for, like, in terms of the money in itself, obviously right now I'm in the process of moving to Dubai. So I don't have to worry about the tax side of things. But before, I'd put 20% away for taxes. I would keep 20% for reinvesting into accounts. And then I'd also like keep a pot there so I could spend on, I could just set 20% into accounts. And then in terms of what I do with the rest of it, I don't really have a plan of investing. I don't do live broker trading. I am in the process of exploring investor capital, but me personally, in terms of actually trading on a live brokerage, it's not something that appeases me. It doesn't appeal to me. Does that make sense?
Mm-hmm.
Zamko?
What about you? How do you?
Me, I literally just reinvest pretty much all of my payouts back into buying more funding, trying to just pass more and more accounts. I don't know how many prop firms, you probably haven't even heard of them, but I'm just trying to get funded with as many as possible and just have as much funding and capital as I can under my belt. That's pretty much where most of my money goes into. Sure, the rest of it goes into food, a lot of food. That's where a lot of my money goes into, but honestly, I'm spending like 4 or 5 grand a month on food. I don't know why, but anyways,
you're eating at the good restaurants then, clearly.
yeah, no, that's typically what's happening. I'm just exploring what's out there. But pretty much what I would say is, initially, I don't feel like I'm still in a position where I can have fun. I'm just literally just thinking, make more money, use this money, reinvest it in the business. Try to even go into other businesses. Like I'm trying to go into more like marketing, ads, things like that, and it's actually spending money on that, and then also spending money on website building and software building. I'm trying to go into more of that. Just try to use your money to make more money. That's all I'm thinking. I'm not really thinking of myself or having fun. I don't like to really give myself anything, really. I wear the exact same clothes all the time. You can see all my videos pretty much is wearing the same things. I don't care about watches. I don't care about cars, clothes, nothing. It's just business, make more money until I can think, all right, now I don't really need to, and I can set up passive sources of income where I don't really need to try as hard. Then I can enjoy the stuff. But at the moment, no. It's just all going back into making more money.
Well, listen, guys, both of you.
And on top of that, so what's the threshold where you can start having fun?
That's the interesting question. I used to think, oh, if I make 100K, maybe then. But then I've made 1 million, and even now I'm thinking, oh, I need to make more. So I don't know when that point is, but maybe it'll click.
Guys, I can tell you that I've had the same mindset throughout my career, and after 40 years, I still have the mindset. I don't need to work anymore. I feel very lucky. I've hit a number that I never imagined I would hit, but my life hasn't really changed. I just, I don't think you'll ever change. I don't think you'll ever suddenly become materialistic. Put it that way. I never did.
Yeah, no, that makes sense. I'm starting to feel that.
Thank you so much, guys. We're out of time. Really, I appreciate the time you've given up today, and we look forward to seeing you again. Maybe another webinar. Certainly, the show in October would be great if you're around middle of October. And just really interesting to hear how you're doing it. So, hats off to you. Thanks for joining and sharing all the insights that you have. Thank you, Jason, for helping to ask some of the questions there as well. Good questions. We're going to move along. We've got Ian Coleman from FX Street going to give us a overview of the technicals now. So we'll close this session down and say thank you to Armash, codename Zamko, and Zaki, codename Cypher, CY You can find them both online. Just Google the names. Thank you, guys, and thanks,
Thanks so
Jason.
much. Really enjoyed that.
Thank you for having me. Take care. Bye.
well, we come back to institutional money's been left here, so we're going to come back and we're going to close that fair value gap. That's not what I'm looking for. I'm looking for this to turn around and say this move has now got momentum. There's the sellers that are in control, and just think what I previously said. A bearish outside candle will obviously will sometimes, but not always, be a bearish evening doji star on another time frame. So from the 4-hour time frame, we get the engulfing. On the 1-hour time frame, we get the bearish evening star. So we've got 2 time frames that are basically telling us that we should be flipping our sentiment from bullish to bearish. And then the last filter, I'm going to ask the crowd here whether or not they've ever heard of a person called Tom DeMark. Just a yes or a no. Tom DeMark is quite well, thanks Simon. Tom DeMark is quite well known in the institutional arena, and he has written books, quite a lot of books on market timing. So there's 3 aspects of trading, and market timing is one of them. And it gets ignored by most traders. Okay, when you think about you go back in history, the Dow theory, that's got an element of timing. The Gann theory has got a massive element of timing, and I believe that sort of novice or this day and age, we don't really look at the timing aspect of trading. So Tom DeMark is an institutional analytical provider, I suppose we would call him, and he looks at 9 and 13 counts, so TD combos, TD exhaustions, etc., etc. It's quite complex. There are books out there. If you want to get into it, then feel free. But there is one aspect of the TD sequence that I really, really like, and it's called the TD flip. And it's quite easy to spot on the chart. So even if you don't have the technical indicators, and I don't believe you can get them on TradingView anymore, then you can still use the TD flip because it's quite easy once you know the rules. And if you actually ask chat what the rules are for a TD flip, then you can make notes of that. But I'll tell you what the rules are of a TD flip. A TD flip dictates that the current candle, has to close lower than the close 4 candles earlier. So in this scenario, we can quite easily work that out. We go back 1, 2, 3, 4. Okay, so that is the close of the candle 4 candles before the signal candle. Now there's one more scenario. The candle before that has to close higher than the candle 4 candles before. 1, 2, 3, 4. In fact, I've miscounted that. 1, 2, 3, 4. So it's down here. So this is a valid TD flip. And why do I like a TD flip? Because basically Tom DeMark turns around and says that the market moves in sequences. And as it finishes a bullish sequence, the first thing that happens is that we flip from a bullish flip to a bearish flip. Okay, so institutional money, once they see a bearish TD flip, and also algorithms, etc., that are based around TD combos, then they're potentially putting more money behind that new trend. So there's one candlestick formation and 3 overlays to get the full trigger. You can see here that was an outside bar. It was a TD flip. It was oversold. It wasn't an area where buyers had emerged once more, but it wasn't an RSI crossover. So we need to have all of those different scenarios to make a trend change setup, basically. What we don't want to be in the middle of a trend, taking buy trades when the RSI is actually already in the overbought or in the 50 zone. So we're trying to pick tops, and we're trying to pick top and pick bottoms. And we can see here that if we just press, it comes back to test this level, and then it moves to the downside. And like I said, as long as you keep an eye on the RSI crossover 14, then we can sometimes get some very decent risk rewards. With regards to filtering, like I said, you can put this this outside bar finder on your charts. The RSI is pretty visual. You'll be able to see that pretty well. And it can produce some very decent risk rewards. So short trade on the close of the candle. Where's the stop loss? Well, the stop loss is above the candle, because if the candle gets taken out, it's no longer a valid signal. Okay, and then the target is, again, the RSI crossover, which comes down around here. So the target level is basically that first green candle. Any questions? What time frame are you on, as it's blurred on my screen? That is a 4-hour time frame. So basically, I don't use it. I'm a swing trader, so I don't use it for intraday scalping. I look for sort of decent moves that last days and sometimes weeks. I use a 4-hour candle. I use an hourly candle. I'm not saying that it won't work as a day trading technique, but with my other commitments, I don't have time to be scanning sort of 40 odd currency pairs, or on 15 minutes and 30-minute charts. You're very welcome. So I just thought that would help for people that are struggling to trade a system, basically. To try and keep you in a trend. The RSI crossover, it sort of keeps you in the trend. It stops you taking early profit. I normally set a risk reward around about 3-1, but then if we're getting sort of steep sell off and we failed to cross back over, then I would normally try and bleed the trade. And here again, you could quite easily say, well, this is a valid signal. Okay, so it's clearly an RSI crossover. It's in the oversold extremes according to the RSI. I can tell already that it's a demark flip. Why didn't it work? Well, we could say it was countered by this candle, but you can't really. Your stop loss is under here. I don't think that's a valid counter candle. But one thing that we don't get is we don't get an area where there's willing buyers. Okay, there's no sort of zone coming back here where we saw willing buyers. So I'm a great believer in the sort of mantra that what was support becomes resistance, what was resistance becomes support, and that those zones where we see willing sellers, there's potentially trapped institutional money there that would look to sell again. I think
fantastic. Thank you, Ian. Oh yeah, Steve's. Yeah, looks very useful as a directional bias.
Yeah, I just thought it would be quite good for people that are new to the arena, if you like, or new to technical analysis. I mean, I think TradingView's got thousands and thousands of different indicators. Which ones do you use? And I think a lot of people do get a bit of analysis paralysis. So I think with sort of 2 to 3 sort of chart overlays, you can have quite a decent little system there.
Fantastic. Well, thank you so much for that. We have your co-founder of FX Street joining us later, Javier. Will be on. So we're eager to find out more about Propinder. Are you having anything to do with that, or?
Yeah, I've done some we spoke and did some promotional videos on the YouTube channel for Propinder. I've also got an FTMO challenge running at the moment, which I use Propinder to filter for me. So there's a questionnaire on there, a questionnaire survey, and then it sort of asks numerous questions about sort of what trader you are, whether or not you've had experience, do you need to hold trades, over news events, etc., etc., and then it filters all down and gives you the best offering basically. And FTMO came up trumps for me. So yeah, I'm still on with the challenge. I'm not. I've been on with it a while, to be perfectly honest, and I'm just about scratching at the moment. So
Fantastic. Well, keep us updated. Keep us updated. Thank you for that presentation. Always good to see you. And I will close this session, and we're going to pull everybody through to our next session, where we're going to be having a debate around about the best sort of asset class to be trading. So join us. Stay on the line if you can. Join us. Let us know what you think about that. But Ian Coleman, fxstreet.com is where to find you. You're doing the market updates daily, I guess.
Yeah, we're doing. I'm predominantly in the sort of the YouTube arena, if you like. So posting a lot of market commentary. We're doing a lot of educational content in there as well now. So yeah, the FX Street YouTube channel, you should go and take a look at that. And I still sort of co-run the Discord area, which is a premium service that we have, which is analysis, live trade plans, stuff like that. So yeah,
Fantastic.
we're busy.
You've been getting out in the golf course as well, so you got your foot dry.
Maybe later.
Maybe later. You still got the weather anyway, yeah?
Yeah, we've got good weather. Yeah, it's we've had a bit of a storm, so it's cooled everything down a little bit. But yes,
enjoy it while it lasts.
Typical Brits. We all complain that we don't get the weather, and then we complain when we do. So
too hot. All right, then. Good to see you, and as always, take care. Thanks, Ian Coleman from fxstreet.com.
Cheers, Simon.
All the best. Okay, so we're live in our next session. The great debate: which asset class is easiest to trade? Bit of a deep question. We're going to have a look at futures and crypto and stocks and CFDs. I'm very pleased to have two experts, in fact, three experts here. Jason Sen is joining as well to co-moderate this session with me. And we have Alex Chris, the general manager from Tradify Crypto, joining us, which is great. And also Max van der Hagen. And there you are. So I'm going to make Max a speaker as well. And yeah, so if we could all come onto the stage, as they say. There's Jason. Alex, I'll bring you on, and Max as well. So maybe we can start, because there's been people joining since this morning's session, Alex. So we just maybe if we can reintroduce ourselves again and tell how we came into trading. We'll do the same with Max and Jason, and then we can
go for it. So got into trading 2017, but bought my first Bitcoin in an ATM, one of those Bitcoin ATMs. Started trading spot, found futures, made a lot of money, lost a lot of money, found myself trading CFD and entered into the prop trading industry. And then since then, primarily CFD trading. So euro, dollar, pound, dollar, a little bit of gold, obviously keeping a portfolio of crypto on the side. And it's funny because, interestingly enough, I've actually, since working with Tradify, I've got into a little bit of futures as well. So I've been dabbling in it all, and I think this is going to be an interesting conversation for us all.
Great. Welcome, Max van der Hagen.
I had some
last met
camera
you
issues.
no, not a problem. I saw you in Prague. You were busy winning the trading tournament, weren't you, at the E8
Yeah,
market
yeah.
event, which was excellent. Which city are you in at the moment? You've got some nice buildings out there.
I'm currently just at our office here in Amsterdam. So just 50 meters from where we used to be at the old stock exchange floor. Now we've got our own little little quote unquote trading floor here with like-minded traders and a couple of my students, which is really cute. So that's nice. But Amsterdam, to answer your question short.
Amsterdam, listen, and it's a sunny day everywhere. Max, can you just tell people how you got into trading? What it is you?
Yeah.
Yeah.
Yeah, beautiful. No, kind of my backstory with trading is it started off with a common interest during my studies, mainly during IB, International Baccalaureate, right, an international study, and I was studying economics at a higher level. And there was a subchapter which was Forex, right, foreign exchange. And having kind of that multinational background and being faceted in, I was born in Stockholm in Sweden. They've got the Swedish krona. My parents, they're Swiss. They have the Swiss franc. And then we moved to the Netherlands, which has the euro. I was born and raised with 3 different currencies. Obviously, I didn't really do much during my teenage years, but it really interested me as I learned about it during my economics lessons. And then I kind of pondered upon, oh yeah, why do currencies exist, right? So you kind of already know my answer to which asset class is easiest to trade here.
I'm setting it up, yeah. It's
yeah,
going to be a big surprise.
Big surprise. Very
brilliant.
biased opinion. But that kind of got me into Forex, right, into the different currencies. And then I did the same route that many people did is you first dabble a bit yourself, you try things out, you watch a video here and there. And then you kind of seek guidance in that sense, and eventually you find someone that really understands what they're doing, and from there you try to get bits and pieces and try it your own way, so to say. That's where I am now, actually.
And are you exclusively prop firm trading, or do you trade live accounts?
So I do numerous different things. I do proprietary, so prop firms. I do private capital as well, and investment capital. So with licensing and all that good stuff as well. So the whole shebang.
Fantastic. Well, welcome, and thank you for taking the time to join us today. Really appreciate it.
Thank you for inviting me.
You may not have met Jason Sen. Jason's been around the markets for 40 years. But like myself, we're probably the older generation. Jason, you started off in the city, in the pits. Can you just
I did. I started on the floor of the London Stock Exchange in 1987. I was 19 years old. And then a few years later, I moved over to the London International Financial Futures Exchange, trading in the pits there, option pits, and then transitioned to screen trading at the turn of the millennium. And I'm still alive. So I think I'm quite pleased about that.
Still killing it.
So good.
Fantastic. So Jason's here to help me co-host the session, but I mean, we've all got something to offer.
You should have Jason, the one that's talking. He's the one with all the experience.
Love it.
I'm hoping to learn from you guys. I'm a bit of a dinosaur.
Gosh, the opposite, but there you go.
But that's so cool
then.
that you were in the actual pits. That's really, really cool. That's lots of respect for that.
Thank you. It was good fun.
Yeah, I think I was born in the wrong time. I'd have loved to have been there. Going out afterwards would have been fun as well. I reckon I missed a good time.
Yeah,
I saw a movie. There's a movie on Netflix which we watched the other night, and they used the escalator, Jason. The escalator that used to take up
Cannon Street.
Cannon Street, yeah, they were using that. I remember.
Industry, was it?
Cannon Street.
No, Industry was the thing.
I can't actually remember. Yeah, but I remember. Were you there when they did all the protests? The protesters came.
You know what? I wasn't there that day, but there's some great stories because the protesters managed to breach security at the front gate, and they were tearing up these escalators. But these escalators were huge, and what they probably thought they were going to run into a bunch of city gents in top hats, not East London boys, Essex boys, some powerful lads. by the time these guys got to the top of the escalators, these guys were just picking them off and having a great time. They didn't realize what they were going to come across. So
They ran
some good
into
stories.
adrenaline fueled trader junkies at the top. They're just like, they're ready.
Yeah, they were loving it.
There were some wonderful stories that went around there. Anyway, the markets we've got. I mean, Jason, where do you sit? Maybe you say from your own point, where have you found you tend to trade indices or future?
Okay, so I look at about 25 markets. I look at the major Forex pairs, gold, silver, oil, and then I look at E-mini, S&P, NASDAQ, and Dow Jones. That's what I follow every day, trying to find trade opportunities, which I have to admit in the current environment is not easy. I think these are probably the hardest trading conditions I have seen in 40 years.
Wow.
Just the total lack of volatility. The market's paralyzed by this war.
Wow, yeah. That must be having a knock-on effect to revenues as well for brokers and firms, I'm guessing. Do you think people are stepping away, taking a break, or are you still engaged?
I think that the lack of volatility is just causing, and the total uncertainty, because, as we said earlier today, how the market's now just waiting for the next Trump message, and most of them appear to be sort of trying, they're not always truthful, shall we say. And so I think it's impossible for investors or investment bank traders to put positions on and leave them. We could be anywhere within the next 24 hours, depending on whether there's escalation in tensions or whether Trump starts painting a rosy picture. I think it's very difficult for algo traders at the moment. A lot of algo traders I speak to have just switched the machines off because we're just not getting the volatility, the opportunities. How are you guys getting on?
I mean, I think I can relate to that just a little bit when it comes to the lack of volatility, right? We are very much in, you'd think it's a headline-driven market, right? You normally, especially with FX, right, you usually kind of look a little bit at the macro side of things when it comes to data releases such as FOMC, CPI, interest rates, whatever, if you're trading any major currencies. And then we've shifted into exactly what you said. Every headline or every tweet that he puts out will whipsaw the market. And now we're kind of in this purgatory where he's putting out tweets, or Trump is putting out tweets, and they're false, right? And the market just doesn't know how to react. So we're in a very, paralyzed is a great word for that, because you see lots of that aggregated volume is off of the markets, has been offloaded to, either spreads or, just other instruments in that sense. And with FX, it's dead, right? You look at the order book, you look at the, what you said, high frequency as well. All the algo boys as well are struggling, so it's like a desert in that sense, and I'm struggling as well. It's
I like that,
testing my patience, right?
Yeah, and you know what you're doing, so I'm sure you're sitting on your hands more of the time than you're actually executing trades. We've got no choice. It takes phenomenal discipline in this environment not to just blow money out of boredom. I was trading the yen up until the central bank intervention, or the Ministry of Finance intervention. That was going fine. It was kind of detached from the whole war situation. But as soon as that intervention came, that blew everything out the window. I just couldn't get a grip of the yen. So I'm struggling.
Yeah, I can imagine. Everything with the safe haven and the carry trade as well it's just been chaos. It has been difficult. It's like trying to navigate this minefield here and there.
Really is, and I'm a trend follower, so trend following is about the easiest strategy as far as I'm concerned. It's worked in the stock indices. They bottomed out at a relatively obvious technical level, and they've just gone up ever since. And so I've just done that. I've just been long indices and hope for the best.
How many trades do you take on average, weekly, monthly, if I may ask?
So, to be honest with you, I don't actually trade that much at all anymore. I'm 58. I've been there and done it. Trading in itself doesn't particularly excite me. But I'm sure you know that as a trader, you become obsessed with financial markets. It's not about, a trader is about who you are, not what you do. I would imagine that you couldn't couldn't wake up one morning and not know where your markets are. It just would be weird.
Yeah.
It'd be like not reading the news. And I don't think I'll ever be able to wake up and not immediately look at my phone and find out where is gold, where is oil, where's the S&P. So, you know, I'm 58 now. I'm sure I'll be 68, 78 if I last that long and still looking at the markets. So I go through all these markets. It's literally the first thing I do. I roll out of bed. It takes me a bit longer to get out of bed these days, but I roll out of bed. I'm straight on the laptop and I'm just into it. I'm just looking for, you know, setups, and then I give them to my subscribers. I can get on average 10 to 15 setups a day, but probably only 3 or 4 of those will actually execute. You know, the levels just won't get hit in the other markets. How about yourself? What's your approach?
That's for me. It's so I'm kind of like very focused on just one asset class, and that's euro dollar, right? So just mainly fiber, and then I try to trade that as numerous different instruments. So whether it's CFDs, futures, right? So you trade 6E, or you go into, let's say, spot or cash. It's the same market, right? But sometimes, you know, you can just do different strategies on different instruments, on different markets, sorry. But it's mainly EU, euro dollar. That's literally what I do. And I wish I could say that I get as many opportunities as that. But like for me, I've got the cobwebs growing on my hands. It's been a long time waiting, and I can go like a week or 2 without a setup. So on average, I get anywhere between 8 to 12 setups a month, right?
Wow.
So that's really interesting to see how there's such a big difference, hey?
Well, there's a million ways to trade a market, but that tells me that you've got phenomenal discipline to be able to sit there and wait for 8 to 12 setups a month. You're clearly successful. You clearly know what works, but I'm really impressed with that patience and discipline. I don't think, well, I would, you know, 90% of traders, I don't think they have that.
I believe so. It's appreciate the kind words, but it's definitely the most underrated skill that I noticed as well. Just it's literally just, if your edge isn't there, don't bother, and learn to sit on your hands, right? That's not trading is also trading.
It is one of the most important things to learn, because it is so difficult, especially for new traders. You come in there and there seems like there's a limitless amount of money because markets are always moving. If it's moving and you're not in it, oh my God, I missed an opportunity. Obviously the FOMO kicks in. You think everyone else is making money. Why am I not in a position? And obviously it's addictive because you're watching the numbers tick up and down. Being in a position is addictive because you're watching hopefully profits build, and overcoming that, you know, those emotions, that sensation. Well, you've mastered it, and I think you're one of a very small number of people that ever managed to do that. I used to see it on the prop desks, like when the floor closed, we had prop desks. So the floor traders, it was actually floor traders that opened up prop desks, and you know, some guys could sit there for days and not execute a trade, and I had phenomenal respect for them.
Yeah. No, cheers. Thank you. Thanks, Jason.
I hope I didn't miss too much, guys. That's the first time that ever happened to me, that I've been live on stream and then we get a cut of electricity. That's new.
Oh, really? Well, welcome back. Well, we were just chatting actually about A, what markets we trade, and B, you know, how frequently we trade. And Max was just telling me that he gets 8 to 12 setups a month. He just trades Euro US, one pair, and I was just so impressed with that discipline.
Yeah.
How about yourself, Alex?
I would love to say I was the same, but unfortunately I'm quite an active trader. I do like being on the lower time frames, and it's a double-edged sword, because I think you can fall into a lot of boom and bust stages throughout your trading. You can make a lot of money very fast, especially with the leverage that you've got on CFDs, that you've got on crypto. And unfortunately, that leverage, one, it's a bad habit, but it also can eventually turn into giving a lot of stuff back. So, and I see it a lot in prop these days. I can't really trade as actively as I once could, because now we've got Traderfy, we've got all the management of all the stuff that we're actually doing. So being on the 1 minute time frame is a lot harder to do when you're managing a lot of things. But we see it with a lot of prop traders as well. It's they will go through an evaluation, they would pass an evaluation, but they would still try to push it as soon as they get funded. And it's the thing that blows the most people up. You tend to see the traders that take less trades, that on higher time frames are the ones that actually last a lot longer, and they're the ones that actually make it to not 1 or 2 payouts, but 3, 4, and even sometimes 5. And it's funny enough that they actually don't go for massive profits as well. They don't try and swing for like 10% in the accounts like a lot of the guys on the lower time frames. They just want to get 1 or 2%, sit, take, and then do it all again. And those are the people that actually, they go through and they sustain through the modern day prop firms. Whereas the guys that are really, really active, they could be making, ridiculous money, but then the next day they've gone. And that's the big difference. So yeah, I respect that you can take the time and just take it slow and really just wait for a setup instead of pushing noise on a chart.
That's really interesting. I've interviewed quite a lot of traders over the past year. I was working on a podcast, and the message is just so consistent. Less is more. Wait for the setups. And you know what? Just before yourself, I was on a little panel with a guy called Zamko, and he was telling me, you know him? Yeah, he's a pretty famous guy, I believe. Super successful. And he just does one trade a day across multiple accounts. He banks the money, waits for the payout, goes again, exactly what you just described. So there clearly is a method that works, and
super high leverage as well. I think thing that there's a funny thing is with prop, not necessarily a good prop trader who can take a lot of money off prop could be a good trader when it comes to personal capital, and there is there is a massive difference. You can have somebody that takes like thousands and thousands out of prop firms, but then they try to do the same thing when it comes to personal accounts, and they've blown everything, and then they're back trading prop. So it goes to say there's no right, in my eyes, no right way or wrong way. At the end of the day, you take money out of the market and it goes into your bank account, then you're better off.
Yep.
But it's prop kind of gives some people a little bit of bad habits if they treat it, like a casino. If they treat it like what it was designed to be in the start, like 5 years ago when the fivers came with FTMO about prop trading and things like that. The whole idea was to give people funding to try and find successful traders they can take out of the market. And then they found out actually they're not doing that. They're actually selling evaluations, and it's more like e-commerce.
Yeah.
That's unfortunately the way it turned out. And obviously it's a zero-sum game, and you pay Peter to take money from Peter to pay Paul, and nobody's really been able to take that money and actually monetize on real traders in the market because it's such bad trading habits. So it's
fascinating. It's an eye-opener to me. What Zamko is saying, he knows he's going to blow all of the accounts eventually. So it's a matter of banking the money from the payouts, building that pot, and then, blown some accounts, no problem. He immediately just buys more accounts. I think he said he had 27 accounts going at any one time. So it's just learning how the system works, how to maximize the system. He seems to spend more time, managing the accounts and figuring out which account he should be trading or which account he should be limiting, as opposed to actually executing trades. It's fascinating,
which is fantastic as well. It's a trade in itself. It's a strategy in itself. If you can work the prop,
he's making a fortune.
He's making a lot of money. And I think with somebody like that, you have to take them out to the market anyway, even if it costs you $10,000 in the whole drawdown that you're putting out to the market. You're doing $10,000 against the 100,000 that he possibly can take off you if you don't take him out to the market. Some prop firms don't understand that for some reason. And CFDs are so behind futures that futures have been able to take traders out to the market properly and actually make money off live traders. And CFDs just don't know how to do it yet. So
why is that? When they don't understand?
I think because of the amount of traders, and I don't think they have the know-how, and they start to try and hedge exposure, and they just don't know how to do it properly. And I think you really need to have the know-how, but you also Yeah, you need the right people. I don't think there's the right people in those seats. But we've had a lot of, brokers that have come into the prop trading market as well, and they haven't done as well as they thought. They thought they would come into the market and they would, blow it out the water, and they just don't understand how prop works. Marketing and driving traffic in prop firms is super important. If you don't know how to do that, then unfortunately the business model doesn't work either. So there's so many different parts to it. It's not just about risk, it's all about the marketing, and you can't have one without the other. But yeah, that's a bit of a tangent to something totally different.
It's really interesting. And I'm sure people watching are finding it. Well, I'm sure they're finding it as fascinating as I am. It's interesting that you said to me, like, a super successful trader will get between 4 and 6 payouts, and then they'll blow the account.
Not necessarily. They could take a few payouts, blow an account, get another one, make another few payouts, and blow.
Yeah.
Because if they're blown, as soon as they get funded, they get the refund. If the prop firm gives the refund, or if they get their first payout, they're quids in. They're risk free. They can max leverage, get that winning trade, and then pull that out. Whereas.
Right.
So if they blow it, they've not lost anything. Yeah. But if they win, then they win big. So
it's buying lottery tickets, really.
Yeah, well, you've got to understand, and I think people need to understand what prop firms are at the moment, which is another version of a casino. But that doesn't mean the right person can't make a lot of money, and the right person that is treating it in different ways can actually learn how to trade, and they can actually, there's many different ways. If you want to be the person that makes it as a casino, go for it. You can find edge and you can do that. Or you can be the person that just gone into trading, doesn't have a lot of money, wants to slowly understand how everything works, and wants to build up a little bit of a track record, and then use that money to actually put into a personal account. And that is like long-term thinking, long-term success. And we've had people that have had prop firm evaluations for like 3 months, and they're just grinding at it very slowly.
They're learning. They're using it as a learning tool. I mean, it's in my day, well, going back to the 90s when we were trying to learn, before you had to pass the test to get in the pit. So before you got in the pit, you'd have guys around the edge of the pit, doing literally, they called it paper trading. Well, it was paper trading because you'd write down the trade on a piece of card. And that's how we traded. You'd write on a card, flick the card to the clerk, and the clerk would input the trade into the system. So you'd have guys, pretending that they bought the bund at this and sold it at that, trying to learn trading. And then when it went digital, we got demo accounts, so it's far more realistic, but no one really took it seriously. So now you can buy a challenge and you'll take it seriously. There is money at stake. It's a phenomenal learning tool. Is that how you started, Max, by using these as a learning tool?
Great question. I think for me, it was a little bit of both, right? I actually got exposed to private capital earlier than prop firm capital. And that had its benefits as well, being very content with, let's say, risk, and actually understanding that the money that I see on my screen, that I see on my MetaTrader, is actually mine, and that's what I can pull out at any time. So for me, it was actually a little bit different, but now definitely I back everything that Alex said as well. Is kind of, if you think in that long-term game and you really kind of see like, okay, hey, I can learn a little bit in this environment, and having an evaluation for 3 months just gives me a little bit of the look and the feel, and irons out those baby mistakes that you can make as a trader, prepares you for the future, right? Because at the moment, with the current state of things, it is very much people try to get the risk out, and then they just want to hit a home run. And if they can hit that home run, you hit big, sure, and you get a lot of money, you can make a lot of money, but try to replicate that on private capital or imitate that on private capital. There are no guardrails in place. There's no margin call. There's no daily drawdown limit. What are your emotions going to do the moment that you're floating -5 and you're like, ooh, what do I do now? And then you freeze, you panic, and you lose everything, right?
Yeah, and I would imagine if you've got investors, the last thing they want is these big drawdowns. They just want a slow but steady upward curve. Obviously, they know there will be drawdowns, but they don't want the big hits. So it's a different mentality.
Exactly.
goes for the question: are prop firms good for this thing? Is it a good thing for traders if they want to be long term successful in trading? I think it's one of those big questions.
I believe yes. Like at the end of the day, like if I compare when I started trading, which was around 2018-19, right? Like right pre-COVID, and you only had like a couple prop firms that were like big in the space, FTMO, Audacity. Then it's such a good tool, right? Let's be completely honest. Like it does bridge the gap between not having capital to gaining sim capital and potentially, funding that private capital. That's kind of the way that people should see it, in my opinion. So I believe, yes, there's a huge benefit to the existence of props, but like if you look at the net result of how many great traders are there at the end of the sheet, it's still very much the same, if not less, right? When it comes to people that learned to gamify their trading accounts versus actually learning how to trade consistently over a longer period of time. Yeah. But it does help. I can't say that it has negatives because it does bridge this void that there is, which is lack of capital.
Yeah, for sure. It's definitely a good tool. And I think the industry is cleaning itself up a little bit. It was a bit like spread trading in the old days back in the 2000s. I mean, maybe I won't mention the name that I used to trade with, but blimey, they would rob you blind, especially if you had overnight positions. Stops that would be triggered were just blatant robbery. But that got cleaned up. The spread trading, the spread betting got cleaned up, and there are more legitimate prop firms coming into the market now that it's a good progress. But yeah, I suppose you could be a very successful prop trader, but if you then thought, well, now I'm going to move into maybe running a fund, it's a completely different game.
Yeah,
I think if you're the prop firm trader that's now made a lot of money through the high leverage and some of the stuff that I've talked about, you kind of got to rewire yourself just a little bit on a personal account. It's so easy just to take all that money, put it into a personal account, and try and trade the exact same way that you've traded with the prop. And it's a recipe for disaster. And I think when somebody's made that kind of money, I think there's a big thing about ego. So when it comes in and they put all of that onto a personal account, it's very hard for them also to take those big losses. But the people that really make it is if they can put that to the side. And I've got friends that have done that. Put that to the side, put a little bit into a personal account, and learn again to trade small. And just get back into just trading, just really about like the process. And those are the people that instead of trading their main prop firm account, they'll trade their personal account, copied all over to prop, and then they're making the big money. So that's really the way that you want to do it.
Correct.
Right. That's interesting. Yeah, because I was always taught slow but steady wins the race. Trading's a marathon, not a sprint. But I've learned something today, and actually I've been teaching my subscribers all wrong. I'm saying to them that the prop firms are looking for consistency, not gamblers, but actually I'm proved wrong.
Well, look, the industry though has to change in a way, because gamification and toxic traffic is one of the biggest things that are causing a lot of prop firms now to be squeezed, because the gamification around prop, people are better and they know how to pass a prop firm and they know how to take big payouts without actually being good traders. And that is the difference now that a lot of these firms are coming under. So really, I think, like I said in the last conversation I had here, was that in the next 18 months, I think you would see like a very change in how prop firms actually work. And I think they would be slowly starting to try and get closer to the traditional model, where you're actually trying to find good traders, and anybody that is got relatively good trading edge, they will be taken out to the market, because keeping them on there, even some of the toxic traffic, if you've got a guy that is just, I don't know, hedging with another firm, or he's hedging, doing other kinds of things, or just making a lot of money, then there's no reason to keep him on a simulated environment. It just baffles me that that's still a thing. So that's going to change though very, very soon, I think.
Oh, interesting point.
I think it's also very much of like a double-edged sword, right? When it comes to what you said, Alex, at the start, is when people go to private capital, they're very much used to prop, right? And for, let's say, a standard kind of like market price for $500, you have 100K sim capital, right? And it's a lot of money, right? But you see it in both ways, right? You see it in the way that if you're trading, let's say, quite significant private capital, anywhere from, let's say, 50K to 100K private, and you're taking like losses of 1% on either of the numbers, you're also in your head like, oh, that 1% loss that I took could have bought me a 50K challenge account, right?
Right.
And many people see it that way as well, where it's like you really need to differentiate private with prop regardless, because people will start thinking in the sunken cost of just a prop firm. Like, okay, hey, I'm not trading a 100K sim account, I'm trading the 2K deposit that I put down for the account, or I got a BOGO deal somewhere, whatever. But when you're trading private, people also then start to compare it with, oh, but I just took a 1% loss on my 100K account that could have gotten me a 200K prop firm account. And then they'll spiral out. Like, you can't intertwine these two. You really shouldn't. No.
Max, when you, for your students, do you get them to start off trading a personal account, or would you get them to start off trading a prop account? What would be the...
They trade. I give them a track record account from my end. So it's sim, right? It's just demo, but it's connected to like a platform where you can see all your stats, like, you know, portfolio tracking. And then I have the same rules. So like, at the end of the day, there's no sunken cost in it, but I'm like, hey, you're with me. You can build your track record for a significant period of time, and you know that will obviously attract investors through my network. But there are rules in place, which, like at Prop Desk, Jason, that you may obviously know from your experience, where it's like 2% is your max. You got like daily max losses that you can do, and if I see people going well, you'll obviously increase what they're doing, their daily max, and you got a hard stop, and that's it. Right, at the end of the day, those are the rules that I implement on these sim accounts. Like, it's demo, they don't pay a penny, but they get treated very seriously, which is good to see, because they can just apply that edge and, you know, either go into prop and kind of like amplify the parameters, the risk, or they can start putting their private capital as like a slave account under their sim account that I give them, and then just reap the rewards from good executions.
Yeah.
So
awesome.
it's like as much pressure as I can put on private yet demo capital in that sense.
Awesome. Yeah, I can imagine that the prop world is more addictive. You know, you're getting the dopamine hits. You're getting you're leveraging high, looking for the big win, wait for the payout. The payout comes. It's exciting. It's thrilling. You know, it's a game. And you could, you know, Zamco's got 27 accounts running at the same time. It must be thrilling.
Yeah, definitely. He's doing a good job of taking good money from prop. So fair play to him. Definitely.
Yeah, he's figured out the system.
Yeah, 100%. I think it's you know, it's everybody's game. You know, at the end of the day, it's still a zero-sum game. It's no difference to you putting money in an offshore broker. Who you're paying at the end of the day, who's taking the back end of your trade, because it's not going out to the market. So it's not really a difference in my eyes. It's just a different packaging.
You're right.
Yeah, correct.
To be fair though, you still have to have a strategy that works. You can't just be doing random trades and gambling. That's not going to work. You know, he said he's got an 80% win rate. So when he's having drawdowns, when things are going wrong, when he's blowing accounts, he's like, doesn't matter. I just keep going. I just keep buying more accounts. I know it'll turn. I know I'll get a winning streak of 5 trades, and boom. I've got another big payout.
Yeah,
that's great.
Yeah, smart, really smart.
Very, very, very smart. And because he knows his numbers as well, he's not phased. And that's what, you know, that's what happens when you actually build up. We had a guy in our live stream earlier that asked, that he's shaking every time he goes to put on a trade, and he asks, what can he do? And the simple answer is just put a size that you just don't care about. Like, so small and significant that, to be honest, it's like you don't want to put it on because it doesn't do anything and it's just a joke. and then just getting into that habit of doing that. But people don't want to do it because it's not exciting and it doesn't make them money.
Yeah.
And that's you know, people have got to fight against themselves. That's the problem.
Do you know, that's actually one of the reasons I don't bother trading anymore. For me to trade, I'd have to make a certain amount of money for it to be worthwhile and for it to give me any pleasure. But as you say, with that comes with the losses. And I don't want those losses anymore. I've got to a level in my life where I've done all right, you know. And so if I go and blow X amount of money, I'm going to be like, why did I do that today? You know, I just don't need this pain. But, you know, as you're building up, you've got to do that and you've got to keep it under control. Yeah, you're right. I do teach people, if you can't sleep at night, if you're constantly looking at your phone, your trade size is just too big. You should almost forget about the trade when you put it on. Okay, that's not realistic, but it shouldn't trouble you.
Yeah. Well,
Yeah.
100%.
But if your maximum downside is you blow an account and you know that you've got the money to buy another one or another 3 or whatever, it doesn't matter, does it? I mean, I can understand how that strategy totally works. You know, your profit account is your stop loss.
Yeah,
exactly.
You know,
I think one thing for anybody in here who's starting off with prop and maybe has got close to a payout, just get that one payout as well. Actually feel it go into your bank account. Go and take that and actually buy something, because it's only then it's actually real and it actually feels real and it actually shows you the opportunity of what you can actually do with that money. Because until traders do it, it all feels like a game. And it was the same when, you know, when I first started trading Bitcoin, and you'd throw money at a chart and it would just go up, and you made this, you know, as like a young guy, you made all this money, and then you would just be like, I don't know, buying random NFTs or doing all of these kind of weird things with the money because you made it out of doing nothing. And you didn't, you know, so you don't have that emotional attachment to it. But when you start to withdraw and you put it into your bank account and you understand that this thing is real, you then start taking it a little bit more seriously, because then you understand that you've actually got something that is tangible and actually gives you value if you just take it out and start being disciplined with it. So that's also something you got to do.
Great tips. Yeah, I back that 100%. I say it's so funny you say that, because this is literally like one of the most recent lessons I've been going over as well, where it's the idea of the tangibility of something, right? You're literally printing something out of thin air, make it into something you can see or hold, or like, you know, you buy something with that payout, or, you know, like many people will reinvest, which is great, but that first one, as small, as big as it is, just, you know, let it hit the bank account. You're done. Boom. You're not chasing it. You're not like waiting for, oh, you can 3x what's on there. Just, you did it, you know, vouch for yourself, put a stamp on it, and on to the next.
So you think there is a psychological change with people when they get that payout?
100%. 100%. It's a great feeling, like whether or not you started off with props or not. Even like when I transitioned, when my first prop account, right, it was with FTMO, and I was like, oh, cool, max allocation there. It was 0.2%. I wait 22 days for that first payout. I'll let it I'll wait for that. I'll, you know, let it hit the bank account, even if it's nothing. But then it's like, oh, you feel a reward for the effort that you've put in. And, you know, at the end of the day, we're human in that sense, and we do need that gratification somehow to reward our efforts.
I guess maybe then you realize, actually, you have to treat this like a business, not just a lottery ticket. It sounds like the successful guys are really have a very strict system on buying new challenges, and yeah, they have a system not just for their trading. They have a whole system on how they manage their accounts and
how they get payouts as well.
How they get payouts,
if they're running just many different accounts for many different firms, get into a little bit of profit, they stop trading that, they'll go onto a different account, get that one into profit, maybe they blow that one, but then they'll go onto another account, and they will just do this kind of rolling into different accounts just to make sure that they actually get the payout. And again, there's nothing wrong. Like, that's a good strategy. You got to have a strategy around how you're doing the whole thing. But it's a good. I actually want to know from you, Jason, what your thoughts of the whole industry and where it's gone from when you were trading back with the Essex boys and all the East Londoners, you know, to where we have now, where we're trading the simulated markets and we're getting paid out. It's very different. So what's your scope of it all?
Well, I'm learning so much about it today because I just don't have experience. I have tried 1 or 2 prop accounts, but I didn't really take them seriously. And I had the wrong approach. I've only just learned today from you guys that I had completely the wrong approach. Slow but steady, you know, keep it tight, don't risk much, but I wasn't really getting anywhere with it. Because, you know, you say you've got a 100 grand account, but you haven't. You've got a 10 grand account. If you blow the 10 grand or whatever, the money's gone.
Yeah.
And I've actually been teaching my students the wrong way, you know. Okay, so when being a financed trader on the floor was different because, well, a bit like you, Max, we only traded one market. You were in a pit, traded one market, so you kind of try to become an expert in that market. And then when the floor closed and we went screen trading, some of the guys on the floor thought, hey, we'll try and replicate the floor, but in an office. You pay about £3,000 a month for your desk fee, your Bloomberg, your Reuters, but that came with a risk manager, coaching, you know, and then there'd be rooms where you could just go and relax, chill out rooms. You play ping pong or whatever.
So good, yeah.
Maybe a cinema room. You know, it was really nicely structured, and you had a support system, and you had people around you. You weren't fighting in the pit with them for the business. So that competition went, and so it was more of a support system by being around traders. And, you know, someone trader would shout out, rate cut, you know, and then everyone would be like, you know, so that was different. And you can imagine trading in that office environment. That was actually very supportive. I suppose the prop firms have tried to bring that to the retail trader, but you don't have the support network. And, you know, you're isolated, aren't you? You're in your bedroom, in your pajamas, as they say, and it's very lonely.
I wonder if there's a place to actually revive that as well, because
they still exist.
Yeah. Okay. So like kind of like arcade type of
arcades.
Yeah. They still exist in London and stuff.
They still exist. Yeah, they're all over the world. I know. There's friends of mine that trade out of Cyprus, trade out of London, trade out of Gibraltar. Yeah, I mean, imagine. Yeah, do you know what? That's a great idea. Imagine if you had one in London where you could go in. You pay 200 quid, you get a desk, you get to sit with traders, and you trade your prop account for the day.
These days, I think traders need that, and they're looking for that. They're looking for that kind of community, and I think there's only so much you can do with this product. You know, a little bit of drawdown here, a little bit of this here, different price there. There's only so much you can do, but the real edge for the prop firms as well is, how do you build that community? How do you get a trader to, feel like he's a part of something that is just, instead of just be him sitting in front of a screen on his own, trying to get out of the situation that he's in, how does he feel like he's a part of a community and your brand? And if you can do that, and you can do that properly, well, there you go.
It's a model right copying because, there's a squawk. So you're constantly getting information. There are some great squawks that you can subscribe to anyway. My friends run them, and they've been doing that since the floor shut. But if you're in an environment where you can say, talk to the guy next to you. I did this trade. What are you doing today? How are you maximizing your profit? What are you doing when you get a payout? That would be the only way for traders to do that, is literally through things like this today, where you can hear other people talk. But imagine going into an office with 100 guys and being able to sit and chat.
Yep.
Yeah. Yeah. No, I back that 100%. That's kind of what we did.
Professional risk managers. Talk to professional risk managers and economists. And
aren't the rules around? Sorry, guys. Aren't the rules around about copy trading though for prop firms? And they said to look out for group trading, I think it's called.
Yeah, I got flagged.
Yeah, that's the thing. Whereas I think as a prop firm, when you've got lots of people, trading the same way, they're looking at it as like, okay, there's one person managing all of these different accounts, and they're just trying to. Because you do get it. You pay a lot of money not to actually traders, but you actually pay a lot of money to groups and scammers a lot of the time. A lot of groups from Southeast Asia, a lot of groups like that would pay, old folk just to get their KYC, and then they would try and do it that way. There's very sophisticated ways of taking money out of props these days that are not just a trader sitting at home, looking at cable and trading it. It's just not that.
Yeah.
There's a lot of the risk for prop firms is actually a lot of compliance. It's like risk, but it's actually trying to make sure the right people are getting paid and the wrong people are not getting paid, because there is a lot of. But then again, you got somebody like Max that is a trader, and he's got students that that is probably gets flagged, and unfortunate that he gets flagged. And some places would turn around and say, okay, we're going to deny him and not pay him because they see an opportunity there. But eventually, people like firms that get a name for that, people stop going to them eventually. So
and that's the thing. That's the tainted aspect when it comes to prop space, and especially when it comes to you're doing everything right, and suddenly you can still be denied or flagged for all the wrong reasons, and then it's like supply and demand. If more people will start, you see that. That's why it's also good that we have these mediators involved, in my opinion. But like. Yeah, it used to be so simple, just trading private capital and that's it. And now we've got like this entire plateau with so many third parties, and then people vouching for the third parties and mediators in between all these casinos. It's tough. It's tough out there sometimes. Huh? It's a cowboy world.
It's a new economy. People are making more. Some of them more money from actually affiliate deals than they are through anything like that. But then again, even in a brokerage, the guys that are getting the most money are all the affiliates anyway.
Exactly.
It's like, is it any different from what it is, or is it just the same with different packaging?
I think that's a great point. And I've argued that as well, Alex, with brokers that we used to have at the shows before we were doing the prop expo. And we used to see the prop firms starting to come in around about 2023. The reaction from the brokers that were there was just really, really snooty and really sort of, oh well, it's just a big casino game. I was always saying, well, hang on, I'm not an expert, but it seems like the odds are kind of the same. So is it any different? So I think that's a great point you make.
There's a lot of brokerages that would pay a lot of money for somebody's lifestyle to get them into a good funnel for them to get money into the brokerage. They will pay a lot of money to affiliates and stuff like that. And at the end of the day, there's one of them.
This is bring us on to the movement. We were talking about this. We've got Justin and David Kimberley, and we're having a sort of a more like an interesting chat. We've moved here already in this call, which is great. But the trend is for FTMO overtaking Oanda last year, Torex with Atmos funded. There's a relationship now between the brokerage and the prop firm to be able to funnel traders into CFD. Is it a bad thing? I don't know. I don't think so.
No, I think it's much better. I think it's much better than the old way of doing it. I think there's a lot of better relationship there. I think the owners from props, you see them. Well, if you're going from the majority of the top props, you know who the owners are. You know the people who are the front are. You see them. There's a little bit more transparency, I think, with that. Whereas some of your top brokers, I don't think you know who's running it. I don't think you see any of their faces. You don't know anything about them. So there's a lot of transparency, and I think the way this whole retail industry is going, I think it is going to be a net positive eventually.
That's a great point. You mentioned that transparency, and this is what prop firms I think are doing enormously well. The ones that are great, obviously, Tradeify. Brett, what a fantastic example. He's out every day on the screens, on Twitter, on X, talking to customers directly. No middleman, no marketing teams, and I think this is what builds the trust when the customers feel that they can actually, if they want, they can pick up the phone and talk straight to the CEO directly. So I mean, these are things that should be applauded. that the prop firms are doing that are getting great. And if
Agreed.
they can ultimately take people into the trading markets, the real money markets, with a little bit of training and a little bit of awareness of risk management, then surely they'll be all the better for it in the long run. So, what a fascinating chat! This turned into really, really good. Thank you so much.
I took the chat in a different direction, didn't I? I'm sorry about that, but it was very interesting.
It has been very interesting, and just to put the three of you in a room together, and the sum is greater than the parts, as they say. So interesting stuff. It is an industry in progress. It's moving and evolving faster, I think, than we ever saw the CFD space change. Let's see what happens this year. A year is a long time in the prop space, isn't it? Fantastic.
It is, huh?
Well, great. I mean, just before we sort of round up, Max, where do we find you? Where would people go to find you and learn a bit more about what you offer?
I'm just on socials, just normal socials. Instagram, you search Max_AO, you'll come to find me. If not, on YouTube, same. So shameless shill there.
Enzo saying, sorry, not going Puffy Max. It's crazy. So I guess an in joke.
What? Wait, what did he say?
Enzo is on the thing. We should actually
Oh yeah. What's up, Enzo? Hope you're well, brother.
Stevens commented. We didn't see the comments. Prop firm rules make you a disciplined trader, in his opinion. Yeah. And Steve says earlier on, master the slow dopamine behavior versus quick dopamine. Former for swing trend and position trading, and the latter is rife in new traders. Constantly crave that spike. Yeah. In the end, the crash that's always going along. It's a good point, Steve. Big wins are generally not the norm anymore in prop firms. Okay, this was off the back of talking about Zamco, I think. Stephen was saying most now have a consistency rule. For example, you cannot make more than 1.5% a day. Is that something?
So yeah, you can still make a lot of money from consistency rules. We've got somebody at Traderify Crypto doing the instant funding that is a consistency of 25%, and he's done 100K. So you can make a lot of money if a consistency. You have a massive trade. All you need to do is keep trading just to bring that consistency down. So there's ways of doing everything. There's ways around these things. Consistency, you've got ways of learning how to make big money on consistency rules. If you just want to go for the small trades, then you can do it that way. But consistency is not, it's another way of doing profitable days. You've seen traders doing profitable days. It's all of these different things that are the same thing, just with different names. So I wouldn't worry about it. Just trade your way, and that's it.
Any tips for new traders? Says Philippe.
I think the whole day's been giving great tips for new traders. I assume these are being recorded, are they, Simon? Because I mean, I can't believe how much I've learned. I thought I knew it all, but I've learned a lot today. I think
we are. Every session is recorded. It's actually right here on the platform. But I mean, the guys, Tony will be doing a great job of cutting up all the clips for social media, of course, as well. So it's fascinating. I mean, just thank you, guys. I think we'll sort of round it up there. We've got another speaker ready to join us, Will Davies. I think, Alex, you'll know Will.
Yeah, I know Will. Good.
Yeah, so
he's also a Welsh lad. I've got half of me is Welsh, so I got a soft spot for Will.
Well, he's waiting. In fact, Will, are you there? I don't know if he's there. He'll be in the next session. He's going to give us a rundown of the tips for passing prop challenges. So Philippe, if you stay on the line, we're going to pull you through into the next session, how to pass prop challenges. Will be the one to help us out there. So thank you so much, Jason. Thank you for moderating that. It's been great. I think you've come out just the right way. And Alex, some great gems of knowledge there coming out. I like the way just say it as it is. Max, of course, obviously, lovely to have you aboard as well. Great input on all the sides, comparing the live markets and the experience you have with props. So great, interesting stuff. This will be watched time and time again over the next few months, I'm sure. Obviously, I hope you can both make it to the London Prop Trading Expo in October. If you can
100%.
link the 23rd, 24th of October in your diaries, it's going to be great. I've just signed up a big Danish speaker who's going to be coming along doing a talk at that show. He wasn't there last September, but he's coming to this one, which is great. So we're going to have some fun there for sure. He's doing sort of prop challenges as well. So Jason, a bit like yourself, been traditionally trading, but now started to look behind the curtain and see what's all this about prop trading. So interesting to see how it goes. Well, listen, thanks guys. We'll close the session down now and we'll move on. We'll go, make some time for Will to get started. So thanks again. Take care.
Thanks,
Cheers.
Jason.
Cheers. Thanks, Simon.
Bye,
Bye. Cheers, guys.
Bye, Max. Thanks.
lowering tax, no different to how there's ways around, lowering your chances of blowing or being inconsistent according to prop rules. So therefore, and these are legal practices, no different to in the UK when it comes to tax, there are legal ways around, lowering tax rates. So, when it comes to prop firms, there are ways around the consistency rule. There are ways of lowering that consistency level and being more of a consistent trader while still, bagging massive profits. So AI risk monitoring, guys, the world of AI is upon us. So it's not a matter of, someone's watching your account anymore. It's just a plug and play. Copy trading detections, guys, your copy trading's never been allowed on certain prop accounts. So just make sure you're reading the T's and C's. News trading restrictions. There are a lot of lunatics I know, especially in my trading group, that love to trade news. I don't personally. However, you've got to be very careful when trading prop accounts, because some props just straight up won't allow trading. Some 5 minutes before, some 2 minutes before, 2 minutes after, 5 minutes after. Some even, I've seen some like half an hour before news, red folder news events. So just be very careful when it comes to that as well, guys. Lower tolerance for gambling behavior. Straight up risk management. It's straight up AI risk monitoring. Be very careful when you're starting to come under the gambling mindset or the gambling strategy. If 1 minute you're placing a 1 lot on gold, or if 1 minute you're placing a 0.2 lot on gold, and all of a sudden news is coming out shortly, it's NFP day. So for example, next week we were at NFP. It's NFP day. You're going 1 lot long on gold. You've got a buy stop and a sell stop, both placed on gold, 1 lot each, and then you're just waiting for something to hit. When it comes to gambling, firms have really strict and tightened their rules up when it comes to this, especially with AI. So guys, you've got to be very careful. But what does this mean? Random volatility-based trading is harder, of course. However, when it comes to, as we all know, President Trump has been speaking a lot recently and causing all sorts of fluctuations in the markets, especially on the NAS and the gold. However, when it comes to random high impact news, if that blows your account, or if, unlucky. However, you're not going to go against violations, or you're not going to violate a rule. Most prop firms, by the way, guys, like I said, you've got to try and pick your props. You've got to make sure that you're picking the good ones, and the ones that, like the boys previously mentioned, the ones where you could probably know who the CEO is or the founder is, the person that has, or the prop that has a name to represent the brand. So that's always an indication. But you're not going to lose the account if you hit a stop loss, or if you hit profit and it's a random volatile high impact news event because Trump has decided to tweet something regarding the Iranian war, then that's not going to violate your rules, as in theory. So just again, be careful with props. Scalping abuse is more monitored. Again, the word abuse here, don't think that you can't be a scalper in the Forex markets. I know a lot of scalpers that take 20, 30 trades a day. Absolutely bonkers. They earn some fantastic money, especially some of the futures traders. However, be careful. Scalping abuse is more monitored, so it's a bit of a gray flag area. If you are just blatantly, aggressively scalping, you're aggressively trading the market, then yes, you have got to be more careful. However, the number one skill is risk management, and we're going to be talking about risk management a lot today because, risk management, in my opinion, is the key to trading success. The golden rule, in my opinion, and all of this is strictly from my opinion, the golden rule is 0.25 to 1% per trade. Sweet spot for me, 0.5 to 1%. But 0.25, it depends on the account size and it depends on your comfort levels. Like the guys we were talking about before, there's a lot of people out there who will, he spoke about, I think it was Alex actually spoke about the story that, one of the guys came on live stream, said that he shakes every time he goes to place a trade. You are clearly just over leveraging the trade, or you're over risking on the trade because you're nervous for it to hit stop loss. Place a trade that you don't care about. 0.25% of a trade, whether that, even if it's 100K, it's what, $250. If you're caring about $250, risk less. Risk $10 per trade. It really doesn't matter. It's what makes you comfortable. You can slowly increase that as you go. Never emotionally increase size. Literally this, for example, you're hitting a 3-win streak. So you're hitting 3 trades, winning one after another. Next minute, you go from a 1 lot to a 10 lot. It's just stupid. It's just emotional ego. What you don't want to be doing is going through with emotional ego. You want to try and protect that drawdown. You want to protect the capital that you've earned. And if you haven't earned the capital yet, you want to protect the drawdown that you could venture into and swim into. So survival long enough for probabilities to work. This is the biggest key, guys. You know, trading, a lot of people will see trading as some numbers game. Yes, it is. However, you know, there is strategy behind it. And when I say strategy behind it, and when I talk about the numbers game, probabilities are key. Guys, I have made almost any strategy work. I actually did a bit of a challenge with the guys in my community. We did a $100 to $1,000 pound challenge, or dollar challenge, or whatever your local currency is. And, you know, we were talking about, you know, different strategies, and we were like, okay, you know, I'm an intraday trader, me personally, whereas I know swing traders, they were in the market, and we're like, guys, you know, trying to swing trade a 100 to 1,000 challenge is going to be hard. I said, screw it, I'm scalping. They're like, well, how are you supposed to scalp? You're not a scalper. Like, have you got a scalping strategy? I was like, of course I do. It's less probable than my other strategies. I trade my optimal, but I know a scalping strategy, and I know with my risk management, I can make a scalping strategy work. So it's surviving in the markets long enough to allow probabilities to work. For example, risk per trade, you know, 5 losses in a row, 5% to minus 25%, 1% minus 5%. You know, it's literally that simple. You risk 5%, lose 5 trades, you've lost 25% of capital. You've instantly blown the account. You've blown the account twice, 2.5 times. You've blown, and that's not daily drawdown. You know, you've lost the account when it comes to max drawdown 2.5 times on a 100K account, for example, or any other account, you know, when it comes to the percentage gain. However, 1% risk, and that's still a lot. That's like the height of my that max risk almost. 1%, you lose 5 trades in a row, you've lost 5%. You do that in a day, you've blown the account, so you've lost daily your daily drawdown limit. However, in theory, you shouldn't be trading more than 5 trades in a day if you're risking 1%, because then that's not good risk management, because then you are putting too much capital at risk. 0.5, you've lost 2.5. This is what I'm talking about when it comes to risk management, guys. You know, you're risking 0.5% per trade. You lose 5 trades in a row, you're only down 2.5%. So once you start realizing the probabilities, then you can start actually making it work for you. You know, build a simple trading strategy. Complexity kills consistency. Now, notice how I talk about consistency here, guys. You know, it is super important to remember building consistency in the markets is better than building complexities. Too many people want 101 indicators, 1,001 drawings, 200,000 confluences, and before you know it, you're persuading yourself that your sell's now a buy, and you're confusing yourself, and it's complicated. And then you're looking at markets and you're seeing stuff that aren't there. Simplicity is key. I can hedge your position almost every single time. I can guarantee it. If you're taking a buy, I guarantee I can try and find a strategy that will tell me to sell. It's literally that simple. However, if you keep your risk management and you keep your probabilities and you follow your rules and you keep it simple, I may win, you may win. Who knows? You know, if I hedge your position, but you have a high enough win rate and your risk reward ratio is in an appropriate stage or an appropriate levels, then you can start putting in things, and you can start actually putting the probability stacking into your favor. You know, again, avoid overload of indicators, constant strategy switching. There's nothing worse than someone who takes 1 or 2 losses and then instantly changes over to a different strategy. Guys, that's not consistency. And random discretionary entries. Guys, we spoke about this on the Fivers live stream today. I spoke about my discretionary strategy because I talk about discretion a lot. Now, there's a difference between experience and an experienced discretionary trader and an inexperienced discretionary trader. Someone who's not got much experience in the markets saying that they are a discretionary trader is literally just saying that they're an emotional trader. However, if you've got a discretionary strategy and you've got experience in the market, an invalidation zone, and you're saying, okay, my trade's now invalid. You know, if it comes back, I'm going to look at getting out. that's a little bit different because your confluence, you're using confluence to get out of a strategy or to get out of a trade. Framework example, trade only London session or New York session or Asia session, depends where you are. Only trend continuation setups, minimum 1 to 2 risk reward ratio, and maximum 2 losses per day. This is something I've personally taken out of my strategy rulebook as a simple framework for you guys to go out and test. 1 to 2 risk reward, nice little sweet spot. London or New York. I prefer London because I can enjoy the rest of the day and go out with the family or take the missus out, whatever. And then, 1 to 2 risk reward ratio, super simple. You can have a 50-50 win rate and still be profitable. Trend continuation, guys. Trend is friend. It is super simple. If you're following the momentum of the market, providing you're not going to catch a reversal, which could be unlucky, as long as you're following with the trend and trading with the trend of the market and the momentum, then you're probably going to come out on top more times than not. And maximum 2 losses per day. 0.5% risk, 2 losses per day. You're risking 1%. Now, the psychology trap. And guys, I'm trying, we are coming close. I think we've only got half an hour, so I'm trying to battle through all this. But I do talk about this every single day in my community. So,
sorry, little update. We've actually got more than half an hour.
Wait, there we go. We got more than half an hour.
Just to take the pressure off a little bit.
Perfect.
Yeah.
There we go. Okay, so we can go over a little bit. So that's perfect. So the psychology trap, guys, common emotional mistakes. Now, again, those of you who go to a lot of Simon's events, I was in London in September, actually talking about psychology. I'll be in London again this October, talking about, I don't know whether I'll be talking about psychology. Maybe I'll be talking about the alignment between lifestyle and trading. Who knows? But more times than not, I talk about the systems that you need to put into place to become a profitable trader. Psychology is one of them. Common mistakes, FOMO entries, revenge trading, moving stop losses, over trading after wins, and refusing to accept losses. They are the 5 most common psychology issues that people come across. Now, FOMO entries is literally just the fear of missing out. Guys, there's another day tomorrow. There's another opportunity to trade tomorrow. Revenge trading, bro, leave it be. You've hit a stop loss, that's fine. Move on to the next one. If there's an A+ setup only, and this is what I mean by having a strategy written in front of you, make it tangible. Write it down, put it in front of you so you can see it. Once you make it physical, once you make it tangible, you can pick it up and hold it. Then you're able to look at it and say, wow, I'm going to respect that because it's real. It's in front of me. Instead of having it up in your head and being like, oh, okay, well, I can change that. No. You write it down, you follow it. It's a strict rule. So A+ setups only. It prevents the revenge trading low quality setups. Moving stop losses. Your stop is there for a reason. Ask yourself why. And if you're moving your stop loss, ask yourself why. And if it's not a good enough answer, don't do it. For example, if you're putting your stop at where you are wrong, for example, if there's a lower low, lower high, lower low, lower high, you're selling and you're putting your stop loss at a lower low, a lower high because you're selling. So you're putting your stop loss at a lower high and then price is moving closer to your stop loss. If price breaks through that high, it creates a higher high, your whole trend is now invalid, for example. So why would you move your stop loss? So always ask yourself why. It's a fantastic question. Overtrading after wins. Again, you've won. You've beaten the market. Run away. Don't get greedy. Once you start getting greedy, you start giving money back. Refusing to accept losses. This is a big thing. Start being accountable when it comes to losses. If you compartmentalize losses, once you start refusing that the losses exist, you start really downward spiraling. You need to journal and acknowledge absolutely everything. We will be going into journaling in just a second as well. So refusing to accept losses is impossible when you've journaled them. Emotional cycle, confidence, loss, frustration, revenge, account damage. And when I say account damage, more times than not, account gone. Okay, so it is literally that simple. Couple of wins, confidence, I'm good at this, I'm an awesome trader, I'm the best in the world. You take a loss, you get frustrated because you don't like the idea that you've lost. You revenge, you take a crap setup, you blow the account. That's simple, guys. And it all starts with the mind. It all starts with that confidence. Lose the ego. Trade quality over quantity. Guys, trade less. Less is literally more. There's a whole saying around less is more, and it couldn't be more relevant to the trading markets. You know, trade less, earn more. High probability filters. You know, high probability trades. Only trading A+ setups may allow you to only trade once a week. However, you imagine me, for example, trading once a week, and then you trading 10 times a week, or let's go with 5 times a week. Let's go with every single day you place a trade. I have the exact same strategy, the exact same A+ plus setups as you. I've taken one trade, I've hit TP, 1 to 2R. The next week, I hit TP, 1 to 2R. I'm now at 4R. The next week, that's 3 weeks of trading now, 3 trades placed, I hit stop loss. I'm down 1R. I'm now up 3R. You, however, have taken a trade every single day. You fluctuated, you're up 2, you're down 1, you're down 1, you're down 1, you're down 1, you're getting frustrated, you're down 1, then you're up 2. Your equity curve is going to start taking a hit because you're not taking A+ setups. You're taking those low probability trades, those low quality setups. So guys, yes, avoid taking random volatility, avoid emotional entries, and trade during optimal sessions. Guys, if you're trading New York session, but you're living in Asia, you know, I was living in Hong Kong. I couldn't have traded New York. That would have been like 4 in the morning for me, like anything from like 2, 3 onwards. You know, it was ridiculous. I couldn't do that. I'd have been shattered. You know, for me to trade during that would have been super difficult and like really sort of difficult on the mind as well. So, you know, trade when it's most optimal for you, especially if you're in the morning, get up, go to the gym, go do some exercises, get some steps in, get a bottle of water down, you come to the markets ready to smash out some A+ setups. And the key quote is, patience is a trader's edge. Guys, patience really is a trader's edge. You know, people talk about strategy being a trader's edge. No, patience, mindset is the true edge overall. And you'll speak to anyone, and even in business or in life, go speak to a life coach, go speak to an entrepreneur, go speak to a business owner, go speak to a professional trader, whether it's on Wall Street or retail, doesn't matter. They will all tell you that the mind masters all. And as they say, the mind is more powerful than the sword. So yeah, guys, master the mind first. Professional mindset, better trades equals better performance. Amateur mindset is more trades equals more money. Don't be so P&L involved. Look at the processes. Journaling, a very close asset to my heart. You know, journaling for me, the power of journaling is just game changing. I am in the process now of building a monster journal for my community. It's going to have habits, lifestyle, tracking, sleep, performance, the whole shenanigans, as well as trading performances as well, with a big dashboard that they can actually analyze. So that's something I'm building at the moment. That's how strongly I believe that journaling is one of the key components to a profitable trader. So your journaling should track your trade setups, your risk size, your emotions before the trade, and after the trade as well. You know, mistakes made and market conditions. They are the bare minimums, you know, the bare minimums. But again, like I said, you know, I was trading on the Fivers live stream earlier, and we were talking about journaling, you know, what you should be putting into your trade journal. Only put it in your journal if it's relevant to you. If you don't know why you're putting it in your journal, and like, if you ask yourself, why am I talking about confluences when I don't trade confluences? Why am I talking about indicators? What indicators did you use when you don't trade indicators? You're a naked price action trader. So therefore, only add in, you know, we can all talk about templates, but only add in what's truly relevant to you. You know, if you're talking about time frames, like what time frame did you trade on, but you only trade the 1 hour time frame, then that's an irrelevant section because you're only trading the 1 hour time frame. So the benefits: it identifies weakness, builds self-awareness, improves consistency, and it removes emotional blindness. Basically, you can quantify everything. You can quantify it, you can understand it, you can learn it, and then you can tweak it. And once you can find your lowest performing asset, your lowest performing time, and your lowest performing, for example, confluence, then you can take them out, you can add little ones in, you can start doing finer tweaks and optimizing your strategy. You know, what gets measured gets improved. If you can't measure it, how are you supposed to improve it? So, example, challenge plan. Guys, again, this is just an example. This is not saying, I'm not saying this is what I recommend you doing. However, week 1, and this is for a 30-day pass. Like I said, You know, I used to do it back in the days with a 30-day pass. So if you can pass it in 30 days, you're doing bloody well. For me, it takes me about a month to 2 months, sometimes even longer. I think 6 months is my longest I've taken to pass an account. So week 1, focus only on execution, low risk, protect the account, get a bit of equity going. Week 2, maintain consistency, avoid overconfidence. Once you start building that account up, once you start getting a little bit of profits in the account, you're going to start thinking you're God's gift to trading. You're not. Slow it down, humble yourself, stay consistent. Remember your journaling. You know, keep on journaling your progression. Now, week 3, scale only if performance is stable. Stay patient. What I mean by that is once you've built up some form of equity, you can increase your risk ever so slightly, you know, and then you can have a whole strategy around risk. For example, if you're up 5%, you can then potentially look at risking 1.5% instead of 1%. Then you're increasing your chances. But when you're increasing your chances of passing an account, you're also increasing your chances of taking away some of that equity. So just take that with a pinch of salt. You know, stay impatient. If you're ever concerned, or if you're ever worried and you're ever nervous to scale up, don't. Stick at what you know. Week 4, protect the gains, avoid unnecessary trades. Literally that. Guys, do not be taking stupid trades. You know, do not be taking B setups. You know, if your buddy tells you that he's in the NASDAQ, or, you know, your buddy calls you up and she's there taking the S&P, or she's taking a gold long and you're taking a GU. But then you're like, oh, but gold looks good because Bob has taken a gold long, or Bob has taken a NASDAQ short. Don't go taking that. Leave them do their own thing. You know, leave them do their own thing. You stick to your core goals. Survive the account, you know, survive it, pass it, then start looking at scaling. Oh, I need to move up. There we go. So the professional trader mindset. So you've got to think like a fund manager. And what I mean by that, you know, okay, fund managers are going to be completely different to retail traders, of course. However, the mindset is very, very similar. You know, they don't focus on fast money, consistent action, and ego-driven trading. They don't care about ego. They don't care if they make, you know, 1% a year, 1% is underperforming. They don't care if they make 1% a month, or 1% a quarter, or 5% a year, or 10% a year. However, you get a lot of, you know, traders out there in the retail space trying to get that in a day. You know, trying to get 5-10% in a day. Slow it down. You know, scalability is more important than, you know, trying to get the big payouts. Yes, you can go for the big payouts as long as it follows along with your rule and you stay in risk according. However, you know, constant action. You don't need to be excited in the market every single day, guys. I come to the market bored. You know, my excitement comes after the trading. You know, I go out and take the missus out for a coffee, or go out for lunch with my family, or, you know, I go on an extravagant holiday. I moved to Hong Kong, you know, at the beginning of the year. So that was exciting. But the minute I get to the markets, I'm bored. The minute, you know, I'm just executing and following a strict plan. You know, professional traders, what they do focus on is capital preservation, consistency, process over outcome is the biggest thing, and long-term survival. Guys, if you can build a track record, you're going to be taken seriously by more people than you're going to be if you're just trying to get payouts. You know, if you're going to try and get a 10 grand payout and then you blow it the next day, fine, cool. But if you can build up a relationship and a portfolio around your trading system, you may only get a 5 grand payout instead of a 10 grand payout. But what you are doing is building a relationship and building a portfolio in the background as well. That is most important. Capital preservation, risk management, guys. Remember, risk management, psychology, and consistency. You master those, and I can promise you, it doesn't matter what strategy you're trading, you will find a way to optimize it. Final takeaways before we go to Q&A, I'm assuming. Final takeaways is the 5 rules to pass in 2026. Reminder, protect the drawdown first. Risk small. There you go. Protect the drawdown first. Risk small. Trade only high quality setups. Stay emotionally neutral. Doesn't mean emotionless. Emotionally neutral. Be aware for everything. And focus on consistency, not speed. Passing a prop challenge is less about predicting the markets and more about controlling yourself. They say that the trading markets is like it holds a mirror up to yourself. If you're a vengeful person outside of the trading life, then you're going to be a vengeful person inside of the markets. Me and my brother have created the Apex Brotherhood community to actually help traders understand that there's a balance and a correlation between external life, so who they are in their everyday life, whether it's fitness, their exercise, their discipline, who they are as a person, their personality, and the correlation, how that relates to their trading. And it's super important to remember this. So guys, when it comes to capital preservation, when it comes to the drawdown, when it comes to looking after your drawdown, risking small, remember you're trying to build a future, not trying to, build a social media presence. Those who are trying to get 100K payouts in one payout are trying to build they're going to try and build a portfolio on social media, not in the P&L, not in where it matters. They're going to post it all on social media, probably sell a course, and then they'll stop trading. They'll just sell courses. Instead, try and build what matters. Try and build the portfolio. Try and build the habits. Once you build a habit and a mindset and a psychology and a strategy and a system, that is bulletproof. It doesn't matter if you blow an account. It doesn't matter if your strategy stops working, because you're able to move into any realm of industry when it comes to the trading, whether it's indices, whether it's commodities, stocks and shares, futures, CFD. It really doesn't matter what industry you're trading. Providing you've got a strong system and your foundations are built on indestructible psychology and confidence when it comes to your goals, then the rest is just going to fall into place. So that's the key takeaways. And then, guys, thank you very much for listening. The markets reward discipline long before it rewards intelligence. So, guys, like I said, if you do have any questions, the key to trading, the key to passing an account, the key to staying consistent, all stays the same. So I'm just going to leave you on this one real quick. Think to yourself, what is your goal? Why are you what is your goal? Why are you trading? Genuinely ask yourself, go write down on a notepad, on a book, on a piece of paper, why are you trading in the markets? And then ask yourself, is who you are now, like what you're doing outside of the markets, what you're doing in the markets, is this for longevity? And is what you're doing now going to put you into a good step going forward into the future? And another one is, if you had $100,000 and I traded just like you did, would you give me your 100 grand? Personal money, not prop. And I'm going to leave you on that to have a bit of a think. What I'll do now is drop my screen. Oh, no. There
Fantastic. Will, that was brilliant. Really, lots and lots of great content and wise words that
very much
are relevant for prop trading or trading. We've spent a lot of time today debating the difference between the approach of prop traders and live account traders. It's been interesting to see. I'm really at the end of the last.
It's a super interesting topic. There's a massive difference, but the system's the exact same. There's a huge correlation, but there's a huge difference at the same time. It depends, what you're looking for.
And have you found the same as Jason and some of them were saying that this year the volatility and the markets have just been very hard to find the trend and things.
Yeah, it's been tricky. So Q2 for me it's been pretty good. I am up for Q2. The first quarter of the year though was tough going. Yeah, that was tough for me. I think I was managing to stay break even, but I went underwater a little bit. So I managed to claw it all back in Q2, thankfully. But yeah, it's been tough going. Anyone out there learning trading, I feel sorry for anyone in the beginning of 2026 coming through the early stages of trading. It's tough markets out there.
Yeah, I mean, it really is. You're trading, but you've got your finger on the pulse because you're doing a lot of the live streams for the Fivers, of course. So you can you must be able to feel the cycles of traders, whether they're having a good time or finding it tough.
Yeah, easily. Yeah. No, very much so. You'll see the influx of people come through, and then the markets will get hard, and they'll be hard for a couple of weeks, maybe even a couple of months, and then that influx will die off a little bit. And then you're like, oh, some traders have had a tough time. Yeah, because usually then that's where you'll filter out the people who genuinely want to be traders, and then the people who are just in it for a quick buck.
They want to try and a spin of the wheel. Yeah, exactly. Oh, fantastic. Great presentation, says Jay. Fantastic.
Thank you very much.
Oh, Jay, we spoke on the email just a wee while ago as well. Yeah, the Apex Brotherhood. Can you tell me a bit more about that? I'm intrigued.
Yeah, absolutely. So as I've taken the screen down now. So the Apex.
You got the merch.
We've just picked up merch as well. So yeah, the Apex Brotherhood, as you can see, it's fitness, trading, and lifestyle.
Yeah.
So my brother is a personal trader and life coach. So he talks about all things staying fit and healthy, you know, and he not bodybuilding, not running marathons, literally just staying healthy and having longevity in the body.
Apart from the odd cigar. I've seen
you
the
gotta
post.
have a cheat day now
I've
and
seen
then.
the post.
I do like my cigars. Yeah, I do like my cigars.
No, but I get it. It's that balance. I mean, I guess a lot of people, you know,
Yeah, exactly.
I mean, are you coming in to just be the best trader, or are you coming in to use trading in order to as a stepping stone to get the lifestyle that you want?
Yeah, 100%.
Some money in the bank and freedom to you know.
Well, that's what it's about, really. You know, like so. For example, like my brother, he's you know built like a Greek statue. However, he loves a good takeaway food now and then. You know, he loves a pizza and he loves a beer. You know, in theory, most people would think that he eats rabbit food 24/7. You know, myself, for example, I talk about staying fit. I talk about staying healthy. I talk about good habits. However, when I come through on social media, I've always got a cigar in my hand or a glass of whiskey. You know, so like I follow the stereotypes of probably an unhealthy person. However, what they don't see is, you know, I'm staying fit. I'm doing all my steps. You know, I do karate to stay flexible. You know, I'm a boxer as well. I'm in the gym every morning. So it's about keeping the body healthy, and it's having a balance as well. You know, I'm not chugging on cigars every single day, but you know, at least once a week. Yeah, I do like to treat myself.
Very good. Now we've got a question. Which are the best prop firms out there? Oh, this is going to put you on the spot, Mister.
Yeah. Oof. Luckily, I'm not sponsored by the Fives today. The best prop firms out there are the ones that, you know, there's a name and a face to the brand.
Yeah, I was going to say rather than naming names.
I won't ever name I won't ever name a prop, because there's some fantastic prop firms out there, and I won't ever drag through the mud some of the not so great prop firms. However, the best way that you can find a good prop is literally by checking out who is involved with them. You know, for example, you know, myself, me personally, I do love the Fivers. I'm not sponsored by them. I'm not out here. I'm not paid to talk big about them. They're just who I like to trade with. And it's gotten so good now that they invite me to live stream with them every single day. You know, and I wouldn't do that if it wasn't a firm that, you know, I didn't truly believe in, I didn't use myself. I know the CEO. I've gone out for a meal with the CEO. You know, I know the founder of the Fivers. You know, the same goes with other firms as well. You know, if you know and you can see who the founders are, the CEOs are, and you can see who represents the brand, that's a good indication, because most traders won't put their face or their brand to a bad firm.
And there's no better place to do it than going to the London Trader Expo.
Absolutely, yeah. Absolutely. The best place you will find good firms is going to be the
place of their eyes. Yeah.
Expo.
Thank you.
Not only that, you get to meet me there in person as well. So for those
absolutely, and there we are. That's the feature. You're going to be there in October, aren't you? You're going to be around for the October event.
I am indeed. Yeah, I will be there. Brilliant. Absolutely.
I think Michael and Saul will be there as well.
Yes, I believe they can be there as well.
Yeah, well, it's a busy space. We've just had some. I don't know if did you catch earlier on? We had Jason with Max van der Hagen and Alex.
Yeah, briefly. I caught the tail end of it. Yeah, I caught the tail end of it.
What a great chat that was! You can go back and watch the replay. But we just let the conversation go, and what was interesting was Jason's who's been in the markets 40 years as a local at life in the 90s, through to sort of almost having to relearn the approach to trading with prop firms, and finding out that there's differences, some of it the same, some of it different. So that was a very great conversation.
Yeah, nice.
Sorry.
Oh no, go on.
Yeah, I was just going to say we're about 20 past 3. We're going to take a quick 10-minute recess because we have a panel starting in 10 minutes, which will be a little bit more industry focused. So stay on for that. But we'll wrap up this session now, and then I'll give me time to get the panel together, and we can have a sort of a powwow in the green room, and then go back live at 10 o'clock at 3:30. So if you're in the room now and you're looking for a time to go and pop the kettle on, now's the time to do it, because we'll take a short 10-minute break where we get the panel together, and we'll see you back here. But in the meantime, I'd like to thank you, Will Davies, for a fantastic presentation.
Thank you very much.
It is recorded, so we'll be able to see the replay.
No, thank you. I was going to say as well, if anyone is curious about the trading in the prop space, it is a tough industry out there, trading in general. And I noticed the guys before in the panel were actually, and I'll make this real quick, we're actually talking about the lacking community out there. Guys, that is what the Apex Brotherhood is. It is literally a community for traders to not only learn, grow, improve, it's to literally have a supportive family out there almost, hence Apex Brotherhood. Me and my brother sort of founded it. It's a great space for people to genuinely just find a healthy environment to trade with. So if anyone is interested, then
I'm assuming there's all sorts of online stuff, but are you doing some sort of physical?
We do. Yeah, we not yet. We're still early doors, but we'll be doing sort of not retreats, but we'll be doing sort of like as we go around. So like, for example, London, a lot of the guys in the Brotherhood community will be invited up to London, and then we'll have like a big event up in London then as well.
Fantastic. All right, Will, thanks so much for joining us. Good to see you again.
Absolute pleasure. Thank you for having me.
We'll keep in touch. All right.
Absolutely. Take care, guys.
Okay, so just as I said, we're going to take about 7-minute break. So have 5 minutes and stretch your legs, and we'll be back here for 3:30 for the panel on the industry. Okay, we're live and we are recording. Okay, I can see Brian here. Justin, we can see you as well, but we're just not able to get you on the screen. So let me see if it's possible. I've made you the speaker. You should be able to there. And if David Kimberley is in the room, if you can identify yourself. There is one David without a surname. I'm guessing you might have just logged in as David. I don't want to all of a sudden thrust some innocent David who wasn't expecting to be on the screen in front of all the people. So we'll wait to hear from there. Brian, I think you're on, but we just can't see you or hear you at the moment. Same goes for Justin. Roll speakers. Okay. They can unmute. Okay, I've done what I can from this end. So we'll make a start. Javier Hepferdel, thank you for joining. This is a panel session. We are recording, yes. Now, we're going to be talking a little bit more about the industry on this session. We've had a great day so far. Oh my goodness, we've had great prop traders on. We've had prop CEOs joining us. So we've really come at the industry from the traders' point of view in terms of the older more established live account trader, having a look at the prop trading space. We've had some younger prop traders who are almost sort of gaming the system really to be able to make money from the prop firms. All in all, it's been a very fascinating series of talks. Lots of great content, of course, that we'll be using to share on social media and the YouTube channel. But this particular talk, we thought we'd try and zero in from the industry point of view. And we've got some great people here. Yourself, obviously, is co-founder of fxstreet.com. We've known each other for, let's say, a lot of years. We're not going to give our age away, are we? We're just going to say, yeah, more than a few years. I think FX Street got off in 2003. Was it?
Well, actually, this is our 26th anniversary. So last year we celebrated 25th. So it's 26 years.
Okay, yeah. Well, certainly it was the IX show in 2003 in London that we first connected. And I remember me sending over all the hundreds and hundreds of the little business cards for FX Street at that point. So through the years, we've seen the market go through all the different cycles of the launch of spread betting, CFDs and ETFs, and here we are in a new cycle. It's almost like a new wave of offering access to trading markets for traders. But this time, I think more than anywhere else, you can access the markets without having to have a huge pot of your own personal capital to sort of risk online. There's Justin, which is great. So I can move.
Hi, Justin.
It's maybe just a bit of a trying to get this. Oh, we're gone. So, and I don't know about you, but I've certainly found that the prop trading revolution, if you like, has been a game changer. It seems to be anybody that's coming into the markets now would be hard pressed to bypass a prop trading account or challenge in terms of going into the markets. Instead of saying, no, first of all, I'd like to take my £20,000 out of the bank and put it in a live account. It seemed like a sort of backward step to do that. So we've got this market. It's unregulated, which is giving rise to all sorts of firms being in the space, of course. And this, even from today's talks, this is something that comes out over and over again: is how do we choose the prop firm? How do we make sure we're with the right prop firm? What are the questions we should be asking of prop firms? So this is a big welcome, Justin Hertzberg. We can see you.
Can you hear me?
And hear you.
Oh, okay. I was having the toughest time connecting for the last 5 minutes or so. Apologies.
No, not at all. It must be the platform. It is a little bit sort of icky sometimes. That's great. So we're still waiting for David Kimberley, I think, was going to be joining us. Brian is here. Oh, here's David now as well, which is great. Have you met Javier before, Justin? I'm sure you have.
Yes. Nice to connect again.
Yeah. Hi, Justin. Yeah. We briefly connected in one of the IFX expos, I would say. So.
Yep. And like Simon, we don't need to go back many years to figure out how old we are and how long we've been doing this.
No, we already covered that part.
We're just waiting for David and Brian. So, Justin, I'll just warm me up with Javier saying we've had a fantastic event today. We've had all sorts of different... There's David. Great. Welcome. Hi.
Hey, how's it going?
Oh, we can hear you as well, which is great. It comes up time and time again, this issue of how do traders assess which prop firm to use. They're coming into the market, they're understanding what prop trading is, they're understanding about passing a challenge and earning a funded account. But it doesn't take long to go onto Twitter or Instagram and this thing, oh my goodness, it's full of rotten eggs, and there's some bad stories, but there's also some really good stories. So how do they know how to go forward in that? And equally for the prop firms, I'm getting to learn more about the way they sort of live or die by the sword, and this social media can make or break a prop firm quite quickly. So this is why I thought I'd invite you all together and have this panel discussion, if you like, on the industry. And we sort of rather grandly titled it the trust and transparency in the prop sector. We've got some talking points that we wanted to go through. Brian, I'm not sure if you're able to join us, or maybe if you're having still a problem, I'll contact you offline. But if we could just get started, gents, by just a quick introduction. If we can go around, Javier, I've just saying already, fxstreet.com. You're wearing the merch from the new website, however.
The Propinder one, yeah. Yeah. So currently, I'm co-CEO of FX Street together with Pera Munguio, okay? And also I'm the CEO of Propinder, which is the new platform that we are launching. We have been online for more than a month already. And basically what we are offering is a way for the trader to select the challenge based on their profile, okay? So based on their location, based on the type of trading they like to trade, okay? Based on the platforms they like. So with all this information, we try to come up with the best challenge based on these options that they have made. Okay, so yeah, for today, I think I can bring all the information regarding what we have learned so far in terms of the user behavior, what they are looking for. What are the usual pain points when they are entering in the prop industry. So I'm really glad to join this panel, and I think it's fantastic because we have all the angles for the industry, just with all the technology layer and all the props that they are supporting. David with their insights, and Brian, of course, he's in charge of one of the props. So it's great to be here.
Great. And Brian Griffin, great you're here. You made it in. Sorry, you had a problem clicking in there, but that's good. So
I was defeated by technology. Would you believe that?
In the tech world. So PD Labs, your business, but you've been around the financial world for many years. I think now based in Cyprus, which is great. But you obviously you know where we've come from. You're a big fan of prop trading, the sort of more modern retail prop trading industry as it is.
Exactly. I think prop is the most exciting thing that's happened in retail trading probably in 20 years. And, when I'm at certain speaking events, I always say, like, I've been in CFDs forever, but I think if clients had prop 20 years ago, as opposed to a self-directed CFD account, the industry would have kind of generated and rolled out on a much more healthier basis. I think, don't get me wrong, clients should have the ability to trade on their own. But I think having those guardrails, definitely imposing drawdowns or stop losses, creates a discipline, which is important. And don't get me wrong, we all have breakdowns in discipline. We all forget to brush our teeth. We all forget to do X, Y, and Z. But I still think that if we had started from this point, we'd be better off.
David, Kimberly, you've launched and running and growing Trade Informer newsletter website. I haven't met anybody that doesn't like it. They're super impressed. It's bringing the industry together, and for my own part, I tune in for the Prop Weekly newsletter on the Friday, and it gives me everything I need to know, which is great. So congratulations on that. Andrews, you were up in Barcelona yesterday. I would have come up and seen you if you'd said. I'm not far, just down the road. But hopefully that
lightning visit. So next time.
But you're in a position to. I know you're normally asking the questions, but I thought I'd invite you here because you talk to the whole industry as well. So you're in a great position to see where things are moving, the challenges and the opportunities that they've got. So it's good to have you here. And of course, Justin Hertzberg, someone described you as the godfather of the prop industry, Justin, yesterday. So you're doing something right.
That name was thrown around in a podcast maybe a year ago, and it's stuck, and it makes me cringe a little bit each time.
Well, we're delighted to have you here. Of course, CEO of FPF Technologies, and of course, PropAccount.com, which stands behind a lot of the prop firms out there in the world today. So you've built a business which creates a sort of robust platform which handles all the, I guess, the back end of the prop firm industries, and gives you an insight into exactly the business that we're talking about at hand today, which is, what's affecting the prop trading businesses, what are the opportunities and what are the challenges that we're seeing this year. The first topic we wanted to talk about was really the trust crisis in prop trading. It's a big issue, and every week we seem to learn about a different prop firm which has maybe suffered some bad PR. Why is it? Why is this what I'm trying to ask is, what does a trustworthy prop firm look like to you these days? Justin, maybe you could start off by saying, is it changing every 6 months? The industry, what kind of prop firms would be best placed to survive these days with the biggest challenges?
Well, I think trust is earned. Trust can't be marketed. So you have a lot of firms that try to market themselves as trustworthy, and they harp on value propositions that if they were trustworthy in the first place, they wouldn't be considered a value proposition, such as, we process payouts in 10 minutes. Okay, great. But that's not really what people are concerned about if they're getting their payouts in a timely fashion on a regular basis to begin with. You're marketing on that because you're trying to differentiate yourself by addressing a core concern, but that core concern is the larger trust relationship that doesn't exist between prop firms and customers. And that is because a lot of firms still go into this business undercapitalized and without a full appreciation for the back end risk management and how easy it is to end up upside down in your business. And that's why you see a lot of the older firms that have been around for 3, 4, 5 years still tend to be the best and the ones that carry the conversation, because they've withstood the swings in the markets and the volatility and the toxic flow, and they've built up that trust and earned that trust over years. The firms that come in 2 months ago, 2 weeks ago, and start to market and try to establish trust don't have the track record to do that. And that's if you're a customer and going to Javier's business, at the end of the day, there's real counterparty risk here. You want to know that you're trading with a proper partner that's going to fulfill their end of the obligation.
David, can I bring you in on this? Because you interview a lot of the prop firms, people in the broking world as well. What would you think there is that new prop firms coming into the space right now should be focusing on in terms of what criteria would be the best place to advertise?
So I mean, I would follow up on something Justin sort of alluded to, which is I actually think the trust issue is probably less pronounced than it was 18 months ago or even 12 months ago. I think a lot of people have been squeezed out of the market. Definitely by the end of last year and kind of beginning of this year as well. And it seems like you now basically have a more mature sector. And actually, I would also say that sites like PropMinder and even the big affiliate site, which is PropFirm Match, actually do a pretty good job at identifying good firms and bad firms. And it seems like a lot of the traffic is going through those guys anyway. So I think that's actually a positive thing, which is that you have a bigger set of more established players. So I would say if you're a new player coming into the industry, it's actually starting to look kind of like the sort of traditional broker sector that is really the mainstay of what I look at, in the sense that it's just, you're now in a market where you're dealing with people that have been around for 5 or even more, like 10 years, if you're talking about FTMO, with a really good brand. They have a lot of cash. They know the business really well. And so it's just, I think it's just very difficult to compete against those people. And if I were, I suppose if I was a end consumer looking for, and you know, there's for whatever reason I come across a newer player, I would probably look at someone, you know, for example, IC Markets now has a prop firm, which they actually seem like they're really trying to expand. I think the fact that you know that IC Markets is backing that should give you some confidence that you're dealing with a good company. And so I think just basic stuff, right? If you're dealing with a company which is, you know, you can't even see who owns it. There's very little, you know, kind of information about who's running it. It's very new, all those sorts of things. Like why, you know, honestly, why even bother really going with them unless they have something very unique and you can see that there's signs that they're credible, because there's already so many options and there's already so many companies that are, you know, have kind of proven themselves as being trustworthy and so on. So I'm kind of rambling, so I'll finish that.
Well, that's a good point. I mean, this has come up a few times today. This idea of looking to the CEOs of the prop firm to give you that comfort. You got the likes of Brett Simbrikoff, Tradeify, he's built Tradeify very quickly over the last couple of years. He's on social media every day. He's doing live streams and interviews, and I think people really respond to that in terms of being able to have direct access to the guy at the top. So that must go quite a long way. Brian, have you got any insight into where prop firms are facing the issue of trust and how they can overcome that if they have a problem?
We'll start with the 2 points by Justin and David. I think a lot of the newer entrants who are undercapitalized have got shook out. You and I have discussed this before, Simon, about broker-backed maybe is the way to go. But if I was a retail customer, and look, if you go on Google, you're drinking out of a fire hose. There's a massive information there. Would start with the rating sites for sure. Start there, then pick a few names that you just like because of their ratings, the 5, 4-star. Then go to their Trustpilot reviews and read them. Then circle back and go to the Discord server of the prop you like and just get a feel for the clients they're servicing, how the clients feel about the product, the services, the platform, you name it, the pricing. And if you like it, pull the trigger and purchase.
Javier, fxstreet.com been around for years, hundreds of thousands of users and visitors on the website. How are you able to leverage all that data? Do you survey and poll these people? Does that bring you any interesting insights into how prop traders are thinking?
Well, actually, we have been looking at the prop industry for at least 3-4 years. And up until a year ago, we didn't see an industry where a company like FX Street, with the reputation behind and the 26 years, could make it, because entering in these early stages of the industry were a little bit risky for us. But during the last year, we saw like a period of consolidation after all these 2024, I would say beginning of 2025, with the 80 plus props going busted. that we were about to enter in this phase of consolidation and an industry where it was in early stages yet, but in a consolidation phase. Okay, so yeah, for me, I would agree 100% with Justin and David regarding the how difficult it is for a new prop to enter in the market. Okay, unless you are, for example, broker back like IC funded, Moneta funded, 8cap has now a prop also. So yeah, this is something that FX Street has been looking for many months, and finally we decided to go in because we see an industry that is getting a lot more mature than before.
I've got the A-book versus A-book discussion written down here. It's come up already today as well in other panels. This is something difficult, isn't it, for the prop firms to manage the model. The model relies on a certain proportion, majority really, of prop traders losing their challenge fees, revenue that they cost them to do an evaluation, if you like. But that really is doesn't really make it that different from the more traditional CFD world, where you've had people putting money into accounts where they haven't had requisite training and really should be in charge of a live account. What do you think about that? Is there a discussion from, as Javier was saying, the broker-backed prop firms having an advantage because they can put people into live accounts into the brokerage, or is that really one of the reasons that the prop firm is growing so quickly, because it's able to cast the net wider for traders at an earlier stage?
Well, I think I'll jump in if that's okay, Simon.
Yeah, please.
I think the concept of why broker-backed prop firms might be important has less to do with A booking and B booking and more to do with just counterparty risk and trust, given the fact that they've been around, they're operating with an affiliated business in a regulated capacity and presumably have been for some time. They're well capitalized, they have a bigger reputation that they can't risk. I think that's the reason that brokers that delve into prop firms pose less risk to a consumer. And I think from the broker's perspective, there are obvious upsells and cross-sells or just ways to lower their cost of client acquisition that make it an avenue for them to consider either alongside their brokerage business or as a feeder into their brokerage business. But the A-book, B-book discussion has two sides to it. One is optics and how a firm is marketed and whether they feel like that differentiation matters to the customer base. The other is actually in how you manage risks. And some of that's driven by the structure of the prop challenges themselves and the conditions, metrics, and rules of the funded account. And some of it is managed more on a macro level in terms of how a prop firm wants to hedge its overall exposure. But it's not a one size fits all, and it's not a you must do A or B. I think we've seen that in the brokerage space as well. There are some firms that are unapologetically B-book and massive warehouses, and there are others that will fight to the death about how A-book they are and that everything is passed through and that's the only honest way to trade with a broker. And the answer is it depends. Depends on your firm, your clientele, your risk model. And again, I just don't think there's a one size fits all to it.
Thank you, Justin. Brian, can I bring you in on this? Because I know you're involved in helping firms and brokers hedge their risk.
From a client's perspective, and not to be flippant, I don't think it matters. I think the B-book is overstated. Like the harsh reality, if you trade at Robinhood, you're being B-booked. It just looks and smells different, but it's the same thing. Your trade's being crossed to the principal, to the market maker, and they are doing something with it. They're either going to hold it or they're waiting for the other side of the trade, which might never come or might come. But again, they derive a percentage of their revenue as a business from being the other side of your trade. They also derive a chunk of revenue from rollovers, swaps, etc. So, you know, as a retail customer coming either to a CFD broker or to prop, it should be irrelevant. Knowing or hoping or knowing that they're regulated, they're well capitalized, broker backed, therefore, and you've done your due diligence on Discord and you know they're making their payouts. And again, as a prop customer, the only thing you really want to care about is your payouts, that, you know, you've been skilled enough to pass your challenge and you survived and you wish to survive, and that you're getting paid on a timely basis. And that's pretty much it. I mean, from my perspective about how to run a prop business, I mean, we could sit here for hours talking about it, but there are two risks. It's the risk of clients passing, and then there's the risk of trying to find the money to pay the payouts. And there's a multitude of ways of getting there. Again, if you have a huge book of business like IC Markets or some other established broker, then chances are the funded accounts blend back into that book, and you either fund it from other clients' activity or you have a hedging program. For other newbies to the marketplace, they can employ people like me, they can employ people like Justin through his various different systems to maybe not achieve the same thing as IC Markets, but certainly get closer. And again, if you're just going to sit there and take all the payouts on the chin, good luck. I mean, in the 3 years I've been in this industry, every firm that's tried to do that has failed. So that's where we are.
I'm going to move on to, I've got a section here where we want to discuss influencers, affiliate marketing, educators. There was a LinkedIn post the other day where I think it was Dan Benton. I think it was reciting a story of somebody getting a young 16-year-old, and he'd gone to a seminar near Heathrow, and it was a trading seminar organizer, and they sort of strong-armed the mother into paying thousands of pounds for a 2-day course, and that 2-day course was just a preview to pay the £10,000 for the bigger course. It's something we've heard for years and years and years. It exists, unfortunately, so it's not new. It's certainly not new in the trading world, and not new in the prop industry either. But what we are seeing is a huge amount of prop business and prop, the way they attract traders, comes through social media and marketing. I find myself commenting on that post. I was a lone voice to say, actually, the prop industry is doing something good. Believe it or not, there is a huge amount of education, I believe, that the prop companies, prop firms are offering. And it's accessible, free, and they've got great people. But it is unregulated, and are they giving them the best advice about, obviously the fast cars and the watches on Instagram? It's not necessarily giving them a realistic expectation of what they could do with prop trading. So, I mean, how do we think that can survive? David, I know you've commented on this before in terms of that lifestyle side of prop, but is there? I mean, do you, like me, do you think that there's actually something good inside that could come out of all this?
I mean, I think, unfortunately, it's a trend in the broker space as well, right? Where someone who is promising you a completely crazy dream is always going to do better than someone who's more realistic. I think what's kind of sad is that basically there is actually quite a lot of good information out there, and also some of it, it's pretty interesting. I think it just comes down to the fact that actually the stuff that is true and accurate is often not particularly, let's say, sexy. Like I'll give an example. I think DarwinX in the past has done some amazing videos where they have people who you can really see are verified, who really basically acting almost like hedge fund managers for them. And the guy is literally running through in a 45-minute video his entire strategy. Well, when you actually sit and watch it, I mean, it's very dense, it's very technical. It's not the equivalent of some guy on Instagram telling you that he's made £1 million, sorry, £1 million, £1 million, $1 million. And so, just probably as a function of the human psyche, the person that sells you the dream is going to do, unfortunately, it's probably always going to do better than the person who's selling you something realistic, because what is realistic in trading is quite technical and not, the most exhilarating stuff in the world. I think the other thing I'd say, so like, I guess the point there, right, is if someone it's just use common sense, right? If someone is selling you a very expensive course, or if someone is putting out completely ridiculous returns or anything like that, they're probably just lying. And I think the second point I'd make is that actually I think one of the good things about this model, the prop model, is that it gives you hands-on experience in a way that I think the broker model doesn't, right? And this is something, I did an interview recently with someone who I met kind of in the wild, who'd bought about 10 different challenges. And they said that it was actually making them better than they would be on a normal account, because not because they were doing super amazing in terms of performance, but just because the criteria actually had made them for the first time think about what they were doing in a way that they hadn't previously. And if you are buying the lowest value challenges, they can be like $50, which if you're in the UK is really just not a big sum of money. So I think in some ways the rules themselves and the way that the prop model is set up kind of gives you hands-on experience in a way that these other courses, like education providers and stuff, don't really do. So that's sort of what I think. I think firstly, just use your common sense. Unfortunately, most people are not going to do that, and I think you'll always have this market for people selling you a dream. But I also think like a positive of this model is that the very low cost of cheap challenges and the way they're structured actually gives you more practical experience with markets than these other guys would.
Thank you. Good point. That's a good point. We had just honestly 2 hours ago, we had 2 young traders on who are very well known in the prop space, Cypher and Zamco. Zamco, in particular, talks about having 27 accounts running at the same time, and he was very open and honest about the way he gamifies the system, and that's the way he makes his money, and that's where he's staying. He doesn't wish to go on to trading a live account. He's playing the odds, and the other host that I had, Jason Sen, who's been in the markets 40 years, he was sort of, can you criticize that? I mean, it's obviously from the prop firm's view, they don't want this, but can you blame people for if it's available and it's possible, it's not actually doing anything wrong? This is just a new way of trading that we should be just saying this is a new way for money to transfer from A to B.
I think it's kind of, sorry to jump in, but like, I just think it's, so I don't know the full details of that, but I think this is sort of a big problem in the industry of, abusing and scamming. And so I think, if you're doing something, the whole point of this, the concept, right, is that you're supposed to be funded for trading activity. So if you're just doing something which is gaming the system, you're not really making money from trading activity, right? You're making money from abusing inconsistencies in the model. So to me, it's a bit like saying, if you can use latency arbitrage on a CFD broker, shouldn't you be allowed to do that? It's like, well, no, I don't think you should. Right? So anyway, I'm sorry, I interrupted Javi. So
Javi, yeah, what do you think about that?
Yeah, well, a comment on the way of trading and how different it is from traditional trading account and a prop account. We ran this test with Ian Coleman a few weeks ago, where he opened an account in prop and he recorded all the experience. Okay, and the second or third day, he realizes that the majority of not only the trading psychology behind the when he plays a trade, but the calculation in the risk reward ratio were different in prop than in traditional trading. So this is something that you have to take into account when you pass from a traditional trading style to the prop trading, that things are going to be different. And on the influencer thing, we had this experience where we are competing against attention. Okay, everyone right now is competing against the attention of the trader, the user, and we have seen how, particularly in social media like TikTok, Instagram, YouTube, the what we call internally the money makers is the ones that are getting attention with the fashion cars. I made $1 million, as David said, and there are these other side of the business where we are trying to do the common sense approach of trading that is very, very difficult to grab this attention unless you cross this line between promising something that is very difficult to accomplish and promising something that is realistic. Okay, so for me, in the prop firm side of all these marketing campaigns, you need to take into account that the influencer probably is going to do things that are not compliant and that most of the times are shady, and many of the profits that we have seen, they don't have the resources to monitor all the things that the influencers are talking about in their behalf. So this is something that is very important.
Yeah, I mean, it strikes me as being so short term. People are just going after the prop firm that's offering the lowest discount, the bonus this week, whatever offer it is. So there's not much loyalty at the moment. Justin, can I bring you in here, because I mean this leans into thinking about is there some sort of regulator going to come along? Is there some sort of set of compliance codes that would help prop firms and traders perhaps as we go forward? And if so, where do they set the regulation? Where do you think they set the needle for that?
Well, I've said for years and continue to advocate for regulation, because I think it would help to clean up the space and have really the serious, well-capitalized and experienced players remaining, which is good for everyone. Because you do have those that turn this into a marketing exercise and may not have any intention of following through with their obligations to the customer, or may not care about what's appropriate or lawful in how they market and position and aggressively pursue business. Going back to your example of the seminar and getting people to pony up large sums of money for things without really understanding all the risks involved. A couple of years ago, I would have said regulation was somewhat imminent. Right now, I would say it's probably not, because it seems that the global regulators are more focused on emerging and evolving crypto regulation and prediction markets, which has taken the forefront and bandwidth. So I think we might have to wait a little bit longer, and I think the industry, through its own maturation process, will just have to self-correct, where the people, going back to the very top of the call, talking about trust, if you are a prop firm trying to establish trust, then you have to make your payouts and fulfill your obligations to the user experience and journey that you're selling. And if you don't understand the risks and you invite in people like you were describing in an earlier call that are gaming the outcomes and playing the odds, if you will, then that destroys the integrity of that firm. That makes it harder for them to deliver on that trust promise. And that all comes back to risk and how you structure your programs, what you leave yourself susceptible to, how you manage back-end risks. It's all connected. You might have these as separate topics, but the reality is to run one of these businesses effectively, profitably, with trust and integrity, you have to be competent across all of these different verticals and have them sort of neatly stitched together in terms of how you position and operate.
Absolutely. I would love to see prop trading becoming a very widely accepted entrance gateway to the financial markets. I would love to see. Brian, you mentioned this last year when we talked. Prop trading was the opportunity the CFD brokers have missed for 20 years. Just having a demo account on the website wasn't enough. They didn't really make use of that enough in terms of getting people to engage with it in a serious way, but being able to monetize it and get a little reward for actually learning how to trade and stay within the buffers and so forth. But that's where it should evolve to, is it not? It should be a training and education ground for getting people to get into proper managing their own funds and execution on the trading.
I think it's moving in that direction. I think like broker-backed props and props who've become brokers, even over the last 24 months, we've seen a huge evolution in the industry, and we've seen people who were undercapitalized fall away. But like again, just to answer the question, influencers, good or bad? I mean, you know, if you have teenage kids, you'll say to them, for the love of God, please put down your telephone. And like people do believe what's on TikTok and they do believe what's on Instagram. But I think skepticism has entered that. People see it as this person's flexing or whatever lingo they want to use today. So
yes, I'm impressed.
Well, they probably are. But again, like you and I, Simon, were at, you know, your event in London, and it was full of younger guys who were impressed by various different things. So how they end up in the industry, I don't think matters. What does matter is, back to Justin's point, is that they end up with a provider who understands risk. And back to your earlier guys who were like, well, you know, I have 27 accounts and I'm doing X, Y, and Z. Like, I was the head of risk for two massive brokers. The reality is whatever flow you get is the flow you get. If you haven't been wise enough to set up, you know, the proper price feed into the proper platform with the proper abilities to control your alpha risk or your execution risk, then into your beta or your positional risk, shame on you, not shame on them. So, like, if you haven't set yourself up properly, you set yourself up to failure, and people are going to come and they're going to fleece you. If I set up a CFD business tomorrow and did the same thing, I'm just going to get ran over. And that's just how the industry works. And to say that's unfair and these people are cheating, I mean, arbitrage in all shapes and forms have existed for 200 years, since people said, I'll sell it to you for $3 and then, you know, I'll buy it back, you know, for $2, because that's just how the industry works. So all is fair and love.
Stephen's commented, it's the prop firms who set the rules, he says, not the trader. If a trader is able to navigate the system to their advantage, then they're not doing anything wrong. So,
I would agree with Stephen there. And again, having been a market maker for CMC and FXCM for 20 odd years, if you plug in an API or you plug in a BDM who has a handful of business, you mightn't like it. It may not be profitable like straight up retail flow, but guess what? It's your job. It's what the business does. So you consume, you eat that flow, and some of it you like and some of it you don't. So again, if you're a prop firm, if you're a broker backed, set yourself up for success by having the right protocols in place and by dealing with the flow you're getting. And if you don't like it and you have your trading rules and they're breaking those trading rules, then, you know, the client doesn't get paid out. But if they've adhered to the rules, then pay them. That's how it works.
Thank you, Brian. Thank you for that. We're going to move on to talking about trader development and the future of prop firms. What role is AI playing in this industry? It's the first time anybody's mentioned AI today, believe it or not, but we hear about it all the time in the same breath as financial markets and trading and copy trading. Is it going to be something that helps the prop firm more or helps the trader more when it comes to trading? Javier, do you have a view on AI in trading in general?
Yeah, Quite a lot, actually. I'm in cloud all the time. So, yeah, well, on the prop side, I could say basically right now, the best use of AI is to cut cost in terms of productivity, probably. This is the easiest way to take advantage of the AI. Just, I don't know, creating all the marketing campaigns with the help of AI, creating tools for the traders with the help of AI. These things, like a year ago, it cost a lot of time and money and effort, and right now you can just create a new tool for the trader in a matter of days. Okay. On the trader side, I think we are not ready yet to introduce AI for improving our trading style. I think it's probably the only platform that are doing something interesting right now is CTrader. They just produce like an MCP, which is a protocol where the AI understand better what it has behind the scenes, the trading platform. But up until now, it was only about a person that doesn't know how to code a strategy. With the use of AI, they could code in a matter of hours, but you have still to have a good strategy, okay? Not only to code it. So, in my opinion, on the prop side, it's all about productivity and cutting cost and go-to-market timing. And on the trader side, we are in the early stages of taking advantage of the AI.
Justin, where do you sit with AI? Is it helping?
Yeah, I agree. We have steered very much into AI over the past 6 months. We've achieved some amazing operational efficiencies and, frankly, more yield, more productivity from our team as a result. And so we are using it in development, risk, marketing, just creating operational workflows that make it easy for licensees, the prop firm operators to run their business, even making the user journeys themselves, the traders' experience, to be much more seamless, automated, user-friendly. To Javier's point on the trading side, I think the biggest challenge for traders trying to use AI is that it's a tool like any other tool. So like when we talk about a business and how it operates, you have a specific use case, you know the problem you're trying to solve with AI, and you put your efforts and brain power and you use the subject matter expertise of the person in that department that's going to use that tool for some specific gain. When it comes to trading, right now you could use AI to synthesize tremendous amounts of data from all different sources and connect APIs into a consolidated feed and analyze markets in nanoseconds, what would take hours to do before. It's ultimately, though, how do you use it? You need to go in with a specific use case of what problem are you trying to solve with AI that's going to make your life better, make your trading more productive. And I think that's the harder thing for the trader to solve right now, is that it's not that the tools aren't there, it's not that the information isn't accessible, it's how do they actually use it in a way that benefits their trading.
David, you're nodding, and I know you work with CTrader and a lot of these platforms. Do you see it in action there?
Yeah, I mean, I think it's very early days, right? I think actually, if you look on the more B2B side, which is probably not as relevant for most people listening, but I would actually say that it's almost like every single person in the world has a CRM or like a dashboard that they've made. I don't know how good many of those actually are. Probably not that good, but I think on the actual trader side, I think it's like Justin said, I think it's really in the hands of the person using it. If I look on the technical side, I think the tech provider side, I think it's still very early. Like, I think you could have a situation where almost every provider has the MCP connection, and then what will actually come of that, I think will be really interesting, but I don't know what it is. I think now I can just imagine it being a bit of a nightmare for, if we talk about, say, gaming props, if you are able to copy paste the rules of every prop into whatever, Gemini or ChatGPT, and then say, what can I do to mess around with these companies? I think that kind of thing is probably becoming more pronounced. I mean, and then, I spoke actually earlier with someone today who's running a broker and also about to do a prop firm, and they did say that they have noticed the volume coming through on EAs, so basically automated trading strategies. They felt that it had increased. I mean, like anecdotal on their part, and they said that, but they felt that like it had gone up, and the reason for that was just because of the number. I think, as someone else has already said, if you previously someone who could not program and say MQL now can do that. Again, I don't know how good that actually is, but they can do it. So I think it's still very early days, but I think already there's probably, I think for the abuse side, I would be surprised if it's not already being used a lot, but I don't have like direct insights into that.
I mean, I was approached a few weeks ago by a chap who he's developing this sort of quantitative modeling of trader behavior and early warning signs to not to sort of not a P&L, just more or less, is he taking bigger risks in his trader? But he needed a lot more data for this to happen. But I guess that's where AI might be able to come in and help there. Brian, I mean, do you think the future? I mean, are prop firms not normally shy away from people using algos and EAs and things like that?
For sure, they have rules, and the rules would automatically be breached if you plugged in some of the EAs. There's probably a fair degree of copy trading, which isn't that evident, because again, you have lots and lots of groups who will target particular prop firms en masse, and they'll have some sort of Telegram group in which they hope to get a bit of fill rate or to game the system, as if it were. And this is fairly prevalent, or was. And, fair enough, you may pass the challenge, but when it gets to the funded account stage, unless it's self-directed trading and you're following the rules, you're going to find it very hard to get paid. But again, it's just down to staffing, and it's down to resourcing. It's everything we've all been discussing as a group, that anyone can be a prop firm, but to be a successful prop firm, you need to have your S lined up. You need to have a team in place that understands what's coming at you. So if you've done all these things, would I be scared of what's coming from AI? Maybe not for the next 4 or 5 years, but who knows after that? I mean, I don't want to look beyond the next 2 years. Right now, I would just have access to Trump's, Twitter account and trade oil. I mean, it's worked for everybody else, so it's probably not a bad idea. So do that for the next couple of months until this peace, whatever peace means, in 2026. So not being flippant, but again, AI is important, as we've said, as a productive tool for making things easier. Ironically enough, I had a meeting this morning with a broker, and we were working through how to use the bots they have in place, which is machine learning, but the same thing, to streamline account signups and various standard customer services questions. So they're using it, it's reducing staff, it's increasing productivity to a degree. Then as it goes into trading, let's see. But again, it's not real time right now. So for consuming data, for coming up with a trading strategy, go crazy. It's fantastic. But as I forget who said it, if you don't have a strategy to start with, then you're kind of chasing your own tail. So start with a strategy, and if you want to improve the strategy, or you want to do more of that strategy and automate it, AI has a role for that. Scalping, if you like. God help us.
Yeah. Okay. Justin, you mentioned prediction markets there, saying, somewhere the regulator is looking at. Do you sense this taking over. Prediction markets have sort of appeared recently, and massive sort of popularity adopted by everyone from politicians, perhaps. Is that the movement? I mean, is it easier for traders to think they adopt this question? Is this going to happen? Yes or no? Is that the secret of the success of the prediction markets, rather than having to do a little analysis?
I think it's just on trend with the overall gamification of things, and I think it's well timed, it's well delivered, it's providing that trader with a bit of instant gratification, and there's always something to trade. It's not when market hours are open, it's not only when sports events are played, it's anything and everything. And I think that's part of the appeal. I think the low barriers to entry, where your typical prediction contract costs $1, it basically allows anyone to participate. They're not sort of priced out of the market. And in our view, from a prop tech provider and building out solutions, is we want to be where the traders are. So we started building out in FX and CFDs, and then moved to on-exchange crypto, on-exchange futures. We added on-exchange equities about 2 months ago, and we actually rolled out prop trading on prediction markets 2 weeks ago. So, from our perspective, it's not for us to judge. I can understand and speculate why I think traders are gravitating to it, but from a business operator perspective, I want to deliver the tools and the markets and the experiences that traders ultimately want.
Give the people what they want, as the Roman emperors used to say.
I'm a man of the people, Simon.
Absolutely.
Bread and games. There you go.
Who are we to stand in the way of that? Well, guys, I don't know if we've covered just about. We've been around the block. Is there anything that you're thinking? Come on, Simon, you haven't missed this. Anything that I've missed that you think would be interesting to acknowledge where we are just now in terms of the industry, where it's moved since last month, and where we think it might be heading this year? Is there anything that is really getting your excitement?
I think on the topic of regulation, I do think it would be interesting to see what happens in the US, just because from my point of view, it seems like the futures guys are getting in bed more with firstly the brokers who are regulated there, and also with the actual regulator. And some of them are becoming, regulated IBs and things like that. And my impression about the US is always that it's a much more hands-off and buyer beware mindset than other markets like UK, Europe, Australia. And I just wonder, I don't know what it would be, but I would be interested if something happens there, because it seems like there's more of a connection between regulated players, the regulator, and props, compared to, let's say, the UK or Europe.
Maybe that goes back to, sorry, but maybe that's a reflection on how the regulator, both here in SciSec and the UK, is, and this is going to be controversial, are no longer relevant.
Yeah, well, I don't know about that, but I mean, I think the European regulators have successfully basically killed the CFD model, which explains why prop is kind of successful, and also why I don't want them to regulate prop, because they'll just do the same thing. But I don't think the US regulators.
You highlighted that. Sorry.
So, look, it's gone offshore, as in the primary cardinal industry. Back to the US, the CME kind of permitted prop to exist. They said, if you're paying the fees, and even if it's in a simulated environment, we, and I quote, don't care. And it's pretty much the same approach with predictive markets, although there are lawsuits flying around everywhere. In regards to crypto market, begging your pardon, predictive markets in the US, but I lived in the US. Justin lives in the US. Everyone gets sued. So, it's just part of doing business, unfortunately. But the market will self-regulate, because you're either going to get business or you're not. So that's where prop is. And again, everyone has become a broker, or vice versa, be it in onshore or offshore. So if that's regulation, that's what we have, right?
David, you mentioned in the newsletter there about the launch of Slay Markets, Tradeify with Ninja Trader, was it? I think I'm correct in saying that. And you were just commenting on the IB sort of play that there is there. Is that something you think?
Well, I mean, I don't know what will happen more broadly in the industry, but my point is more that I think it reflects the fact that there's players in the US who offer futures. They have a model to kind of have a license to some extent. And I guess the point I'm trying to make is that regulators in the US and the exchanges as well, if they feel that they are profiting from the business activity, they seem much more content to let it be and not restrict it. I think that's why they went against OTC FX so hard, because they were not really making any money from that. And so, whereas, I guess my point is that I think it would be interesting, and I don't know what will happen, if there is something that sort of takes place in the US where basically there is maybe some kind of regulation and it's actually positive, because I think they would be more friendly to the industry. Whereas if I contrast that to, say, here, I'm in London, if I think about any European regulator or Australia, they will just, as Brian says, they will kill the industry. They will do a terrible job at it. I don't think that will happen in the US, but I'm just interested to see what will happen. I obviously don't know if that's the case.
Yeah, I was asked the other day if the FCA have been in touch with me. I can't remember who was asking. Doesn't matter. I said no, haven't heard anything at all. We're here in London. We put the banners up, hire buildings for 2 days, and we're thousands of people coming through for the expo, learning about prop trading. I've not heard anything at all. I would have been surprised if someone wasn't there from the regulators to have a look to see what's going on. But I just don't think they really understand what to do, where to regulate. So, at the moment, long may it continue. But I'm like you, maybe some sort of gentle regulation might help to clean up the market a little bit, and might be a positive thing. So we'll see. Watch this space. However, I've kept you guys for more than our allotted hour. Anything we'd like to say as we sort of wrap up? Javier, maybe we can go to you first of all. Tell us a bit more about Propinder. I know it's just launching recently, but are the early signs that it's being adopted favorably by the prop firms and the traders as well?
Well, the prop firm adoption has been great. We have already like 25 props in the platform, and we are launching now the futures. So on that side, it has been great, and on the trader side, also it has been a great launch. Of course, we are backed by FX Street audience, so we are right now leveraging that audience and targeting that to Propinder, and the ratios of the profiling feature, that is our main value proposition, are quite good. So people are looking for more clarity, more options in order to select the next challenge or the first challenge. So the early signs of the platform has been great, and we know now that Profit Match is about to launch this more or less the same feature. So it's always good to see how competitors are moving in the same direction that we do. So
fantastic.
Well so far so good.
Well done. Well, congratulations on that. Brian, I'm going to see you in Cyprus. FX, you'll be there. David, are you making the trip to Cyprus in June?
I will be there. Yeah.
Oh, you'll be there too. Oh, fantastic! Right, this time we must organise better so we can get a coffee rather than just meeting in the aisles. And Justin, I don't think you're coming over for this one, but
No,
we'll see you in
I
London.
would like to be there, but it's my mother's 70th birthday, and so she won that battle of wills. But
You could have just
I'll
brought
have
her with you.
yeah, that's just what she
She would
wants,
have
is
loved
to go to
it.
an expo. But
Studying wicked
yeah, but we'll have I think we have 5 people from our team that'll be there, and then I'll definitely see you in October for the London Prop Trading Expo.
Fantastic. Well, my thanks to you all for joining me on the panel. I think some great stuff come out there. There's a lot of talking going on. Industry's in a phase of evolving all the time. So we'll just keep reading David's Friday newsletter to let us know where it's heading. But thank you all for your time. Really appreciate it, and wish you well. And we'll keep in touch. Thank you very much.
Thank you, Campbell. Bye, guys.
Bye.
Bye.
Okay, we're live. Great. If you are here in the room, still live, congratulations. You've done a long day already, as I have, but it's great to have you here. I'm joined with Dan Mundy now, our next speaker, Dan Mundy from the 3% Club. You may have seen Dan. You're most active on LinkedIn, Dan, is it? Your sort of preferred...
LinkedIn, YouTube. Yeah, I've got a YouTube channel, LinkedIn, Instagram here and there, but not very often. But yeah, predominantly LinkedIn, mate.
It's been great. We've known each other a few years now. Last year, the Prop Expo, you managed to fill 300 seats by 9 o'clock in the morning. You had the first session. I thought, well, I don't know, maybe you're going to have a room full at 9 o'clock in the morning. Nope, it was standing room only, so fantastic. And a lot of your fans were there as well. You run a private members group called the 3% Club. Clearly the 3% as opposed to the 95% that don't make money trading. Is that where...
Yeah, it's like 97% don't make it, so let's call ourselves the 3% that do. Yeah, that was the branding idea years ago when I started 2021 through COVID in lockdown. Had a couple of friends ask me if I could teach them to trade, because I've been trading for myself since 2016 and then managing a MAM account as well for a company. And then naturally that spiraled into them having a couple of friends, having a couple more. And before you know it, I had like a community of about 20 of us, and now we're about between 80 to 90 traders strong in there.
The word of mouth, that's the best marketing you can get, is someone else saying, oh, come and join Dan's group because I'm doing well from it.
Absolutely.
When they see that. Fantastic.
Yeah.
Now, we are looking at prop trading. Clearly, I know you've been looking more closely at prop trading in the last 6 to 9 months as well. You've taken a lot of prop challenges. You've worked with quite a few prop companies, so you know the business from both sides. And you help people to pass challenges, and you help them to stay funded as well. And you've got a presentation which I think is kind of a look at the guts of the industry and make a comparison. If you're in the process of trading a live account or a prop account and you want to sort of try and understand what's best suited for you, this might help you. So we've got half an hour. So let me pass over to you. You take the mic, and we'll come back in 20 minutes. And if there's any questions throughout this, don't hold back, I guess, to ask any questions live in the chat box, and we'll try and attend to these as we go through. So Dan, take it away.
Perfect. Thanks, Simon. So trading prop. So there's one thing that I would always say you have to ask yourself before we dive into any of this, which is, are you profitable? Do you have an edge? Now, it doesn't matter if you want to take prop firm evaluations in futures, CFDs, you want to manage your own money, you want to manage capital for someone else, you want to build a MAM account, any of that stuff, you have to have an edge. You have to have a proven, tried and tested method that makes money. And when I first started trading, I learned an edge. I was taught by someone called Robert Dunn, who's an ex-CME Goldman Sachs trader. taught me basic supply and demand principles, but gave me an edge that I just needed to follow consistently and I would make money. But for 4 or 5 years, I just messed around with that edge like we all do. And I looked for that holy grail system. I tweaked things. I tried to optimize parameters. Why, I don't know, but it's something I think we all have to go through as traders. And I found my edge again. I was taught this edge. I found my edge. I found my niche with it. I was able to execute it, start making money. But then I was trading the London Open quite commonly through the Brexit negotiations, so 2016 on to about 2019. And there was a lot of volatility at that London Open. And as London Open would kick off, you would commonly see like 60 to 80 pip swings on pairs like cable, pound yen, those kind of currency pairs based on what was happening with Brexit. And then in 2019, obviously all that news completely died. And what happened was my edge just diminished. So that London Open edge that I was using, that I'd formulated myself based on a lot of what Robert Dunn taught me, just completely disappeared. And I had nowhere to go. And nobody really talks about in trading edge decay or just losing your edge entirely, because edges can expire. They naturally will, because if they didn't, we'd all be trading the turtle soup edge that worked in the 1980s or 90s, right? So that led me down a different path, which was just purely collecting data, a data-driven path. So I'm very data heavy as a trader. I've heard other people speak about that today in here as well. But collecting data, working out max favorable excursion, max adverse excursion, so how much trades are going against you or how much they're going without you once you've closed, what times of day you trade better, what instruments you trade better, what sessions, all these things. And I collect a lot of data on all that stuff. But obviously edge, most important thing. So you have to have an edge, obviously, to make money. So be real with yourself. I always say to people, do you have an edge? Realistically, they think in their head they do. But if you actually get them to start journaling or logging stuff or putting it through some sort of like MyFX book or some sort of software that's breaking it down, you actually look at their account, they don't really have an edge. And there's actually people within the prop space that are making money in prop firms, and they don't necessarily have an edge. They may be just a 50-50 trader, and I'll get onto that in a minute. But it has to be backed by data. Everything that we do has to be backed by things I talked about before a minute ago, max favorable or max adverse excursion, how much drawdown on average your trades are doing, what sessions you're trading better than others, and so on. The data is hugely important. Bear with me, I made this on Keynote, but I'm on Windows, so it's a bit laggy. So the landscape today, and this is a bit now looking at prop firms themselves, we've got this massive influx of retail prop firms. So as you guys are aware, there is just prop firms popping up now week by week. The barrier to entry is so low. The amount even that you need to start a prop firm is minimal. So this business model is taking off. But 90% of funded accounts, and this is CFDs, by the way, so the data I've got here is based on CFDs, not futures. I'll talk a bit about futures as well in this. But 90% of funded accounts are blown in the first 30 to 60 days. So CFDs, obviously having a little bit higher targets, the accounts can take a little bit longer. The futures is certainly a space that's gamified a lot heavier, and I would say that number is probably lower. So the 90% maybe 85, I don't know, it's just an estimation, but people are blowing accounts on the first day, the second day, the third day, less so in the 30 to 60 days, which is more common in the CFD space. And only 4% secure funded accounts that take the evaluation, that buy a prop firm challenge. Then 1% on average. This is data, by the way, that's pulled up from various prop firms last year, so it might have changed a little bit in 2026, because this is exactly what I presented at the expo. But 1% maintain their funding over the long term. So the figures are pretty terrible. They're against us. But the question has to be why. And I think the reason why is because too many traders are looking at this, or aspiring traders are looking at this as a get-rich-quick scheme, when they don't have what that first slide talked about, a clearly defined edge backed by data. Like I said to you guys, data is everything. And what does this tell us? Well, this tells us that the majority of traders are losing, which we already know. Now, obviously, we can trade our own funds or we can trade prop. And I think there are advantages to each. There are obviously disadvantages to each as well. And I am all for prop. So before I go into this, I I'm for trading prop firms. I have a number of my mentees that are making a lot of money from prop firms. They're recycling them through a method that I teach, which is a method of making money through prop firms by using multiple accounts at one time. I'm happy to go into that in more detail. I've also got a YouTube video that goes into that. So find me on YouTube. I break that model down. But I'm actually going to go into that at this year's Prop Expo as well and show the two different ways of trading prop. One, recycling, rotating accounts, so gamifying, which you would have seen from a lot of the traders that have been on this today, or trading it as a trader that's come from managing funds and wants to make steady, consistent returns on prop. And in that space, or in that regard, it requires a different way of trading. So it's really important to understand that trading real money, trading live funds, managing capital is completely different to trading prop, in my opinion. And I'll explain why. So trading your own funds, the advantages of doing so, obviously you have full freedom. You haven't got anything, targets you have to hit, drawdown parameters, etc. And all the profit is yours. There's no profit split at the end of the month. You just take home what you've made, right? Then there's no evaluation. So you don't have to sit through that process of trying to hit a certain target without getting paid before you even get to a point where you have a funded account. And there's no limit on scaling. You know, the more money in your account, the bigger 1% is, the more you make, essentially. But the major pitfalls with trading your own funds versus prop is obviously capital, one of them. Now, most people I teach to trade now don't have 25, 50,000 pounds to chuck into a trade account, but they can go on to a futures prop firm and buy $50,000 worth of capital for $70, you know, which is 50 GBP here at the moment. So the barrier to entry is super, super low. And you guys will all be aware of that. The psychology as well. So the psychology of managing your own money. I manage my own money. It's different. You've got more skin in the game. I actually think it is a pitfall, but it's also a benefit because it makes you a better trader, because then you're more selective. You wait for A+ setups rather than just gambling and taking silly risks. And there's no safety net. So of course, we could blow our account. We could make a fat finger error. We could misplace a stop loss. We could go in too big with our contract size, lot size, and we could potentially blow our account. So what about trading prop? Well, trading prop eliminates some of these things through various advantages. One of them, obviously, barrier to entry. Like I just said, you need $70 to buy a $50,000 prop Lucid Flex account or Funded Next Flex account, you know? So the barrier to entry is so low. Now, the rules I actually think are an advantage because they teach new traders good habits. Some of them, you have to understand that prop is designed for you to fail. So CEOs of prop firms are creating these models. The prop firm exists to gamify you as the trader because they're looking at you in large sample sizes to figure out how that business is viable to make money. But we can use those rules to actually give ourselves more discipline, to be more disciplined traders. So I think that's a benefit, not necessarily a negative. The ability to scale is obviously huge. If you make 3 or 4% on your own personal account in the month, then you've only made that 3 or 4%. If you buy 2 prop firm accounts, then you recycle the money that you made and you buy another 2, then you could have 100% more capital to play with the next month. So your ability to scale is obviously huge. And recycling, again, is a big thing with that I talk about. That's making money from prop, recycling it back in, buying multiple accounts, and then extending your drawdown thresholds. Now, earning potential is obviously huge. And I've earned from prop firms. I have mentees earning huge figures from prop firms that they would definitely not be able to earn on their own capital because they didn't have their own capital to start with. The pitfalls, evaluation pressure, you know, this gets to a lot of people. So a lot of traders struggle with the evaluation because they feel like they've got to hit the target. It's all or nothing. You know, this is the be all and end all of their life. I've had some people tell me in the past, like, if I can get $200,000 of funding, then I could change my parents' life. You know, that's huge pressure. So putting that pressure on yourself as a trader never leads to particularly good results. And I've been there, I've done that myself. Profit split. So you don't take 100% of the profit, obvious one. Shady firms. Now, obviously there are tons of terrible prop firms out there, and you guys will know this. I'm sure many of you have had experience with them. payout denials, ridiculous rules that you didn't read in the small print. The rules aren't easy to find. You've got to go on the FAQ section of the website, dig right into that small print to find out, oh, you can't weekend hold on one of the CFD accounts that you're taking a swing trade on, or you traded 5 minutes either side of a news event that didn't even come up on your news calendar, or whatever it might be. Then obviously there's payout denials, firms that are denying payouts. And obviously within the prop space, I think that there's only two ways for a firm to exist. One is that they have huge traffic, huge volume, but if they don't have huge volume and traffic, the only way they can exist is by not paying out the traders. And that's an obvious one. But you've got to do your due diligence and research. And obviously these firms, these challenges, they are designed to fail. They're not designed for you to succeed and to pass. And that's why you have to approach them as a business and gamify them. Now, another huge benefit of prop firms, and this is something I've done a lot of over the last few years, is that I collect so much data rather than just putting, let's say $10,000 into an account or $5,000 into an account and trading it, because I like to live test. I'm not a back tester. Live testing for me is the better way to figure out your edge and build data. Real-time conditions, there's psychological elements that come in, of course, but the data collection process, you can do that on a prop account. You can buy a $10,000 account with FTMO for 89 euros, I think it is, or something like that. So your capital to put into that data collection, the downside risk to you is 89 euros, which is nothing, right? So there's a massive benefit there. And you can test strategies, you can test ideas. Essentially, to test a whole strategy on $10,000 is costing you 89 euros. It's nothing, you know, it's less than you would put on a trade in your own account, no doubt. So there's a big benefit there, and I've used it a lot for that myself. And you don't need an edge to make money. So this is something that I dived into a bit at the expo. You could make money through prop firms with a 50-50 win rate at 1-to-1. Now, that is not a profitable system. That's obviously a break-even system, and then minus commissions and spreads and so on. It's actually a losing system. But if you buy enough accounts and you rotate enough accounts, you will come out net positive. So you don't need an edge to make money in prop. Now, do I recommend going into prop without an edge? No, of course not. Like the first slide I said, you need to find your edge, stack the odds in your favor, and you need to treat this like a business. But there is this kind of gray area within prop, and we see it a lot with traders on X or various traders that only seem to ever win. The reason they only seem to ever win is because they're constantly rotating accounts. You know, I saw a trader slip up the other day and post the number of accounts he had with a certain firm. It's 149, just for reference. So, you know, yes, it looks like he's making 50,000, 60,000 a month, but he's had 149 accounts so far with just one firm. How many other firms is he also trading with? So not everything is as it seems, but if you buy a large enough volume of accounts, you rotate those accounts, then you can make money. And the way that works is, if say you have a system with a 70% win rate, and you work out what your potential consecutive losses are. So for me, I trade commonly at over 70% win rate based on the data I've got over 3 years. And that tells me that I'm likely on average to hit 5.9 losses in a row. So I could see 5.9 R of drawdown, not just consecutive losses, because that could be a cumulative R of drawdown. So I could hit that 6 R of drawdown at any one time across 500 trades, experimented 500 times. And that tells me that if my drawdown threshold on a firm is, say, $2,000, then if I take $250 risk a trade, I can lose 8 times before I hit that threshold, before I hit that minus 8R. So I'm unlikely to fail it that way. But if you then buy multiple accounts, so if I bought 5 accounts and I took trades on one account on one day until I lost, as soon as I lost, I moved to the next account. Mathematically, that extends my drawdown threshold massively, because every time I lose a trade, I'm rotating onto another account. And this is a way that traders are making money in prop with not necessarily a very high win rate or risk reward, and not really a profitable system. So it's something to really be aware of. Again, that's in a couple of YouTube videos, so have a look at my channel if you want to see that. Trading and simulated prop trading. I call it simulated prop trading because we all know we're trading simulated capital, right? It's not prop. This is not actual prop trading. This is retail simulated prop trading. And they're two different things. This is trading gamified. So why do so many fail if it's that easy? So I just talked about there, you know, you don't even need an edge. So that makes you think, well, surely I should be making money then on prop, or most people should be. But the reality is they're not. And I think it's because of this. It's because they don't understand what I just told you, which is the distribution of max consecutive losses, their average R in drawdown. And again, it goes back to that first slide of data. They don't have their data. They don't know their system intricately enough to apply it to prop firms. And if you look at a system here that's got 50% win rate, the max losses there on Monte Carlo simulations in a row was 22. Now, the average is 9.3. So a 50% win rate, a lot of traders are trading with that, with positive risk reward, 50%. But are they prepared to hit 9.3 losses on average in a row or more? You know, it could go up to 13, 10 plus, right? The answer is no. Most retail traders are not. As soon as they hit losses like that, they tweak the system, they strategy hop, they look for a new mentor, they think they're being scammed by the one they're trading with. The reality is the one they're trading with, maybe they do have a system that is profitable over 12 months, but they're going through that period of drawdown. Every trader has to go through drawdown. And because they don't know that data, naturally they fail the prop challenge. And I believe that's why the pass rate is so low, because they don't factor in what their average R of drawdown is or their max consecutive losses are, which is a huge factor. So it's data. Again, data is everything. And the vast majority don't know their data, right? There's also this thing of like traders coming in and obviously thinking it's going to change their lives, and they're just speculating. They're trading very discretionary strategies. You know, I'm very data focused, so trading a discretionary subjective edge takes years. There are fantastic traders I know, 30-year veterans, that are really good at just telling you where the market is going to be by 12 o'clock that day or where it's likely to close. But that's from experience. They've been in the markets for 30 years. So data is where we as newer traders, you know, I've been trading since 2012, so I still consider myself a newer trader. But that's where we have to get our conviction from. That's where we have to get our confidence from, is those numbers to back it up, because we don't have that time in the game. We don't have that experience of just looking at markets and being able to make judgment calls and subjective plays. So win rate. So this is really important as well with prop, and this will help you guys succeed if you are struggling or you're struggling to pass evaluations. But your correlation between your win rate and your consecutive losses and how you position size in the challenge is really important. So I talked a minute ago just about how with say like a 50K eval with a $2,000 loss limit, I would naturally do max loss limit divided by 8, because I know that I'm unlikely to hit 8 losses in a row. And that's how I would approach it. Now, lots of traders are obviously gamifying and they're doing max loss limit divided by 2, really pushing it hard. But if they're doing that, they're accepting they're going to lose X number of accounts, they're going to pass X number, and at the end of the month, they're going to be positive in by X amount, right? They've worked out their data in that sense as well. So some traders I know trade with a 30% win rate. I'm not sure if anyone in here does, but a risk reward of 1 to 5 at a 30% win rate. If you took 10 trades a month, 12 months, 120 trades, fixed risk per trade, 0.5% risk, you'd make 48% return. So you are an elite trader at that point. You are making a considerable return on the year. You are in the top 0.1 percentile of traders. But your distribution of max consecutive losses, your average is 17. So a minute ago, we talked about a system that generates 10. How does that translate to a prop firm? Well, I know traders that trade systems like that, and they manage family offices or small funds, and they would fail most prop firm challenges they took, because they would hit huge drawdown periods and losing streaks, and they would naturally go over the drawdown threshold. So a system like that isn't necessarily the way to approach prop, even though it's profitable, even though it's 0.1% of traders, you know? Now, the other side of that is 75% win rate. So now this is more common to my strategy and how I trade. Each win 1.5R, each loss minus 1R. Now the return on the year is pretty much the same. It's around that 50% mark, give or take. Exactly the same number of trades, no compounding, 0.5% risk. But why does higher win rate, lower risk reward translate better to prop? It's because of the drawdown thresholds that you're not allowed to hit. So that first trader, yeah, they might hit 20% drawdown on the year. That would fail a prop challenge, but they'd make 50% on real money. This trader, they're not going to hit that, because look at their consecutive losses, 4.7. Average consecutive losses 4.7. I know that 75% win rate system generates around a 6R max drawdown. So you might lose, say, 4 trades, win 2, lose another 3, win 1, so you can hit that higher drawdown. But naturally, that just fits prop so much better than the low win rate, high risk reward. So high win rate. Although all the textbooks tell you not to trade that way, that's not the best way for prop. Absolutely it is. And it's also great on your psychology. So how does it look on a prop firm? 75% win rate, 30%. It's these phases here that become difficult. So it's this area here. It's this area here. These are the areas that are failed prop evaluations or blown accounts. So that's it, guys. I'm just talking realistically with you all about this industry and how to approach it. You have to gamify it if you want to make big money. You have to rotate accounts. The guys pulling 50 to 100K a month out of this are rotating, they're gamifying, and I'm going to go through that at the expo in October and show you guys how to do it. But if you are a consistent trader with an edge, you just have to apply that edge, work out what your drawdown threshold is, work out what potential R you could hit of losses on the month, or not on the month, but strings of losses in a row, and then divide that number by the max loss limit. So then you're not going over that max loss limit with consecutive losses and blowing the challenges. It's just about knowing that data.
It's a numbers game. It is a numbers game.
Yeah, absolutely, mate. Yeah, it is. It's about volume of accounts if you're gamifying, and then if not, it's about data and knowing your stats, knowing your system.
Does anybody have any questions? Matthew, I love reasoned. Oh, okay, so yes, Oliver Mayer is coming to talk in just a few minutes. Matthew, I think we referred to reasoned trading. Now, you've done some bits with Oliver on reasoned, haven't you? So people might.
Yeah, I don't know where he stands with that, but I put some content out for him in terms of like how I trade. So I'm sure he'll present that to his traders at the university.
Fantastic. Yeah.
Shout out to Dan Fuller as well. He's one of my guys, one of my traders. I see him pop up in the chat there.
Fantastic. Okay, Dan, thank you again for coming on. It's been a long day. We'll do one of these again, I think, in July. So maybe we'll see you there, or you might be away. We'll see how the dates work out. But we know we're going to be seeing you in October at the Prop Trading Expo at Billingsgate, which will be fantastic.
Yeah, I'll try and drop some bombs that the prop CEOs won't like there. That'd be good.
I'm sure it will. Well, this is what makes it fun. So everybody's just looking for a way to make a bit of money out of the market. So you found a way that works. So congratulations to that. Where do people find you? Obviously, the LinkedIn channel.
Yeah, LinkedIn predominantly. If not YouTube, just search Dan Monday Trader. You'll find me. Find my channel. But yeah, LinkedIn is the easiest way. If not, I have also got the 3% club.co.uk. So you guys can find me there as well. 3%.
Oh, great! We'll just leave it up for a minute. So
I think that still works. That's the one I used back at the expo. I don't think the QR code expires, but if not, just search the website.
It does still work.
It does. Good.
It does still work. Fantastic. Great. Fantastic. Well, thank you, Dan. We're going to, where we are, just a couple of minutes. We'll move over to our next session with Oliver Mayer. So, our student trader. Thank you for your time, Dan. Keep in touch.
Thanks, Simon. Thanks for having me.
Pleasure.
in ourselves, not just trading, but also understanding us as an individual. As we're still young, prop firms are a great way to understand kind of your emotional, how you work. And this is a really positive way if you're even going to it for a job, because then it can much more target where you want to go into. And performance under pressure, as a student, you've kind of not really had much pressure on you apart from exams. A place where you have to make kind of last minute decisions is a really key way to testing your trading skills, whereas paper money is a lot more chilled out. You don't get that opportunity. So prop firms are that next level after paper trading in someone's journey. Now, so far, everything sounds great, and we've really not seen any problems at all, and you would think everything is all glow and happy. However, there were some problems I kept seeing. Not just one, but 4 main problems in the prop world. Well, not even just prop world, but prop world for students. And these problems were: one is about access to education, as we've already seen. 2 is about finding the industry people. A student doesn't really have access to a network of people around them. You can't just message one of these top traders on the world and just be like, hi, I'm having a problem with my strategy. Please, can you help me with advice? Or you can't really see what other people do and learn. Everything's kind of online. I think in today's age, there's a real thing of kind of what is real and what is fake. I think students as well are some of the most vulnerable people to this, as we're all young and we're starting to grow our journey and trying to find where we want to end up in our life. And we often get caught up in this kind of trap of falling down the wrong holes. And when students are always trying to build a track record, you're always trying to grow your CV. Everyone's done this in life, not just students, but everyone's been through that same process. CVs are great. However, how can you prove to a finance firm or anyone about your actual trading skills? Everyone can say, I'm passionate about trading, but not everyone can execute that. And that's where we can see prop firms being a great opportunity for creating a track record and a report to share to employers. Finally, so these problems we kept seeing, should we look at what we built? We built a company with 3 pillars: learn, compete, and get hired. Let's start with pillar 1. This is all about learning. Anyone at all. It doesn't just have to be students. Anyone at home, if you want to learn trading education for free, we offer that for you. And it's taught by industry experts. We have our in-house team that can teach amazing trading knowledge. However, what's better than the first ever lady to trade on the London Stock Exchange floor, or someone who runs their own trading community? Not a hype one, but a small, focused trading community. Some of our educators you've already seen on today's amazing Round the Clock Trader show. The guy that was on earlier before us, he is one of our educators, and you can learn much more. We cover everything from risk management, technical analysis, fundamentals, and our education is now growing to a whole new level, and we'll be teaching everything you need, even looking at quant from the next year. Competing. Who isn't going to love a trading competition? You've applied your education now. When you learn to drive a car, you're not just going to sit a theory test. The roads would be mayhem if you do. What you need to do is you need to get behind the wheel and actually learn and apply. That's where our competitions come in. You compete on Trade Locker, a platform that uses TradingView so you're familiar with it. And you can compete against students from 4 continents. And top performers, they get visible. We've had hedge funds reach out to us and investment funds asking for our students to perform with. And massive prize pools. In our last competition, we had 2.5 million of trading challenges provided by Finitive Funding, which is absolutely amazing. The next pillar, get hired. September 2026, this year, this is what's launching. A new recruitment system built for finance. Firms can search not by just your CV, but also your track record. They can see what you've been up to. They can see your trades. They can see your investments. This really can show them who's valuable to them and not just any person. These are people that have actually put in the hard work. So where are we today? As much as this sounds great and we've seen the 3 pillars, where do we currently sit? Well, I'm pleased to say we're across 4 continents and we're in 26 universities. This is absolutely incredible. And the key thing, we've managed to keep it free for every student. We do not charge you 1 penny because opportunity should be defined by what you have. It should be made by hard work and what you're after. So I'm really proud of that. And we've hosted our first trading competition, which I can say successfully went amazing. The top 3 people generated over 200% return in just 2 months, with first place making 100% in just 1 month. That is really something they should be proud of. And that is exactly what you can get if you use our education at Reasoned. And also, we're led by social goals. The Reason Pledge, we're going to return a portion of our profit back into unis, because the platform only works if we can get unis and students behind us, and they're the people that are going to lead us to the most success. Finally, built entirely by students. This is something that I'm the most proud of with Reasoned. Every one of our staff members is a student full-time at university. These are not people that have graduated uni. These are people in their first, second, third year, even master students who alongside their studies are always pushing and growing to create a nicer future for them, but also for all the students around them. Our first person we hired was a computer science student to make the tech. We've seen companies who have built trading tech. It may take years. We managed to make our systems within 6 months. And I think that really highlights where we stand. Students are the next lot of employees. They are the next people that are making the businesses. So why are we waiting until they get to 25 until we actually can use their talent? Why don't we use them now to create the future of the systems around us? And that is exactly where I stand in what we do. So you've heard it from me, and obviously I make this sound amazing because I'm one of the co-founders, but what are people actually saying about Reason Trading? Well, it's been absolutely incredible. The response from everyone, we've had so much love over the last few kind of months. We've had people saying the trading competitions have helped them improve their analysis, their clarity, and it's also improved their risk management, which is really hard to do when you're paper trading. Our competitions actually create some psychological toll if you don't perform well. Second, we've seen people kind of really just praise us in a good way, which has been great. For our first attempt, we competed against these big companies that have been doing this for many years. For our first attempt, we managed to create a full seamless solution that is continuously to grow, and the next competition will be even bigger. And finally, I think the key thing that everyone is going to like is the people in our trading competitions aren't just people that are going to gamble. You are not people that are going to full port their account, not people that are going to rush for profit. These are actual real traders that are testing their skills. Our competitions have rules similar to prop firms, a bit more lenient because we understand people are learning as they go on their journey. But this means that people are going to keep within their risk rules and keep trading an actual portfolio and not just gamble. And overall, 100% of people want to compete again in our next competition. So anyone watching, you should also compete. Where are we going in the future? Well, by the end of this summer, we're aiming for 50 plus unis and 10,000 students while keeping this all free. We're always going to keep the education and competition free. Next, one of the pillars we're working on is an industry shift. We've been working with people inside the industry already, people that have been in the industry for 40, 50 years. We've heard from them, we've saw the problems, and now we're actively working with them to change. And this is the main change around the recruitment pillar, which will be launched in September. You guys employ a performance metric and a track record. Even if you can show your prop firm results of you trading for the last year, that's more valuable than just a CV alone. 2, competitions. Everyone loves competitions, and so far we've only done one. What did we hear back from our first one? We heard, it's great you've done a big competitions, but can we do smaller in-the-day competitions? We're going to be launching weekend competitions where it's just crypto focused. We're going to be doing random Wednesday competitions, and what I am most looking forward to, trading varsity. How many universities out there have sport varsity events and competitions, but now we're bringing it to the finance world. University 1 against University 2, whoever wins progresses to the next round. What university will end up on top? Make sure you follow our socials, and this will be launching in September. Finally, education. This is a pillar that always returns us back to our roots. In the prop firm world, many people are very successful traders, but they wouldn't be here without the education. And we're told about education, what did it cost them to get that education? Well, if you go through us, it's totally free. And that's what we're doing. We continue to onboard educators so everyone has an equal access to the trading industry. So that's our future. And I hope you guys can get behind us and support us. If you want to find us on any social media, then please scan the QR code below on this slide. And we appreciate anyone wants to join. We've got competitions that will be launching very soon. There's education on the website now. If you've been inspired by all of these prop firm traders before me, I know you spoke to Zamco, Zaki, all these amazing people, then make sure to use the education, and maybe in a year or two, this could be you, sat on a call like this. So any students out there, you don't need to be doing this full time to turn this into a successful journey. You can do this in your mornings before school. London Open is before university. You can do it then. If you want to do it in the evenings, because that's when you've got more time, there's always the Asian session. So prop firms are a really great way to create a side income, but also help you grow into your career in trading. So yeah, that's what I'd like to leave you guys with. And please check us out at Reason Trading. And thank you. And we'll be there in London in October to meet all of you in person. And we cannot wait. Thank you, Simon.
Well done, Ollie. Fantastic. We got there. I'm sorry you had the technical snafu at the start, but we got there. That's amazing. Running through the phone, holding it close to the microphone. We made it work. It's great what you've done. Honestly, I think it's fantastic. I mean, we only met last year, and you're so much energy, and I can see you're definitely going the right way to build this platform to educate more traders and more students, particularly. I always thought it was a great thing that you could do to earn a little bit of extra beer money for the student union. Is great. Obviously, just cautious that you don't take too much time off building this, and make sure you get through your exams first. How are they going, by the way? I know you've got one tomorrow.
Yeah, the exams are going well. I've had 3 so far, got 1 more left, and they've been good, but we had to hold a little bit of growing this company at the rate I want to grow. I'm very determined to grow at a quick rate, so we've taken a step back.
Yes, good. You've just got to get the exams out of the way first, and then you'll have the rest of your life, as they say. I'm sure you've heard that before. Well,
100%.
Thank you so much for putting that together. And obviously, this is recorded, so we'll be able to share this through the channels, and hopefully you can share it through the platform as well. But great stuff, good. And I don't know if Charlie's there with you, but he's been at your side building this as well. So you both put a lot of effort in, and I hope you get the rewards from it as well. So we'll keep in touch. We'll stop the recording there, and we're going to go over to the next presenter in just a few minutes' time. So take care, guys.
Perfect. Thank you, Simon.
pin that. We're in business. Either
All right.
the webinar platform's tired, or I'm tired, or both, or something. But anyway, we
You've
sorted
been
it.
doing this all day, so
Thank you. We got there in the end, which is great. Thanks for coming back.
yeah.
We've just had a nice session in between with the student traders who are launching their reason trading and doing very well with that. We've talked about all sorts of things today, one of which is launching prop firms. And of course, you guys are the leaders in the market for offering white label prop firm technology through properhand.com. So I thought I'd ask you back just to talk us through the steps. If there's anybody here or watching this on replay who has, let's say, a trading community, lots of people now are coaching traders or building up a group, a trading community. It's now possible to set up your own prop firm. As we know, the barriers are quite low, but what does prop account, why should people probably, I guess, look at prop account over other suppliers?
Yeah, great question, and happy to answer that one, obviously. We've been building prop technology for prop firms for over 6 years as the first and the largest tech provider in the prop space. But for the last 5+ years, we've had Prop Account, which is our white label brand, where we've essentially created a prop firm that's completely unbranded and unmarketed by us, that's backed by our tech, our infrastructure, our capital, but fully branded in the name and colors of the white label partner that we have. And 5 years ago, this was more of an afterthought for most people entering the space because they wanted to start their own prop firm. The barriers to entry were quite low. And it was a lot easier then to sort of bootstrap the entire experience, where if you had a little bit of money behind you, you could more or less make money from the start of your operation and cover all of your expenses sort of as they came up. That has changed. And so over the past 18 months or so, with all of the competition coming into the space and all the new uh, prop firm operators, it is marginalizing the industry. It's driving down prices. It's making the conditions easier, which adds more risk to the back end of the operation. Costs of client acquisition have gone up. People competing for keywords is obviously more competitive now. And so what took firms a very short period of time to gain critical mass and success years ago is taking much longer, costing much more. And the overall cost of that infrastructure, the upfront cost, the fixed monthly fees for payment processing platforms, liquidity, capital, margin, etc., are now having the effect of bleeding out a lot of firms before they actually reach that critical mass where they are successful. And we've actually seen a lot of well-established, longer firms, older firms, that have even failed in recent months. What's unique about propaccount.com and what we do is we basically create economies of scale by using one common set of infrastructure and pool of capital across, at this point, I think it's around 150 active white label partners. So you don't have any upfront costs, you don't have any fixed monthly fees, you don't have any monthly fees of any kind other than marketing and however you drive your clients through. And we're doing it in FX, on exchange futures, on exchange crypto, on exchange equities. And we just launched prediction markets for prop as well. So we cover all the 5 major asset classes and provide everything. You just have to provide the audience.
So you don't have to get involved in the back end tech much at all. You don't have to have any technical expertise. You could even be someone like me.
Or me.
Here, but that's the essence of it, is because we all hear these scare stories about people who started platforms, like say even the big ones. If there's a lot of work goes on behind the scenes in a platform, isn't there, to make it profitable, to make it viable and consistent. It can make sure it pays out its payouts for the traders that win and all this. That all needs to be very carefully managed and calculated. So if you want to shortcut all that work, I guess it's outsourced to you. But it must give you certain advantages over independent prop firms as well, because you are dealing with hundreds. So you can see data and patterns come in that must be useful. Is that what you mentioned just there in terms of the sharing having
Well,
the
we
insight?
definitely see a lot of data coming through, which helps to inform our risk management teams, which make sure that all the programs that we're running are sustainable and scalable, and where all the traders get paid out. And it does clue us into some of the abuses or toxic flow or gamification that happens and often bleeds out other prop firms that don't have that level of insight or don't have a risk team and risk tools built out the way that we do. So there's that economy of scale on the risk side, but then it's literally everything else that people just don't think about. But if you're running your own firm, it's fixed monthly costs on your payment processing, it's fixed monthly minimums on your platforms and market access liquidity. It's having to maintain your own web developers, platform developers, back end engineers to fix issues and so on. It's having operations personnel that's handling actual payouts, customer service requests, et cetera, that you don't have to expense now. You just get to save all that money, put it towards marketing. And we have the team and the scale behind us and behind you to execute on the business model.
Can I ask a question? I don't think I've asked you this before. Is there a certain size, say you have a group of traders that follow, you're trading the market or you're giving courses, what kind of size of following would you need? Or is there a
I mean, we have a very wide spectrum. We have firms that do millions of dollars, and then we have firms that do hundreds of dollars that are running through the white label program at Prop Account. From our perspective, we don't really care as long as you're pushing your own agenda and pushing your brand and trying to grow your business. We don't put any minimums on you as the operator. And in terms of what kind of critical mass or audience you have to have for it to make sense, it really just comes down to your marketing efficiency. So if you were a trading educator, for example, with a relatively small following, either through database or social influence, it really costs you nothing to market to those people because you already have their contact information or they're already following your posts. And so you can just add this into your rotation of content that you publish and you'll get some conversion from it and monetize those relationships and extract a little bit more lifetime value from that client relationship than you otherwise would at no real cost. If you're obviously looking to build a much larger enterprise and you're going to be spending hundreds of thousands of dollars on marketing, yeah, you have to know what your marketing edge is and achieve some return on ad spend to justify the cost. But it really just depends on how big your appetite is and how good your marketing is.
I've seen several people coming through that have training, education, trading businesses. They have students that they're using prop firms to train the students through, rather than just teaching them all the theory. They're saying, let's get started, let's get you into a sort of a challenge or evaluation setup, and then they can train and mentor them from there. They can access all the details of how these students are trading as well. That's a plus point, isn't it, for maybe having a white label, and then people can use the white label to maybe sort of subsidize the cost of the education for the student. There's all sorts of ways that it can be used, which makes sense.
Yeah, I've always felt that for trading educators in particular, having a prop firm makes a lot of sense, because if you think about your basic goals and objective as the educator is to improve people's trading activity and then hope that they go and apply that value somewhere. Now, 5, 6 years ago, applying that value meant pretty much only going to a brokerage account. And
Yeah.
in that context, usually the trading educator couldn't monetize that relationship once the student went and opened up the brokerage account, unless they were operating as an affiliate or an IB, but they lost the client relationship through that process, because now they're pushing a third party company and building a relationship between the student and that third party company. With running a prop firm as an extension of your education business, you get the best of both worlds, in the sense that you teach people how to trade, and then they apply that value in an environment that you provide, that you get to monetize. And you can do a lot of creative things with it. You can put prop trading on the back end of the education service that you're offering. So if you buy my course, you get a challenge account at the end to demonstrate how well you've done. But interestingly, on the other side of it is that all of our licensees have an admin CRM portal that shows every bit of detail about each trader's performance, every account, every trade, every payout request, everything that they've done. So if you have a student that's come through the prop program and, say, failed 10 challenges in a row, it's an opportunity to reach out and say, hey, maybe you would benefit from some one-on-one mentoring, or maybe it would make sense for you to take this class that we're offering that helps with risk management and setting good discipline and behaviors that you're clearly not exhibiting through your actual trading. And because you have that visibility, you can provide a more bespoke or customized offering to help that student.
Fantastic. I mean, it's great to hear about how the various uses there are for it, but of course, it's a very profitable business itself as a prop firm owner. We've just spent all day with various prop firm CEOs and traders, and one thing we can take away for it is this is an industry that's evolving very quickly. It's growing very fast, so it's a profitable sector to be getting into. And I see a lot of educators that come through, and they teach good stuff, but they're just not monetizing what they do. And this, to me, seems like one very sensible way to start to monetize without bringing or forcing your clients to take on risk. So that from that point of view, from the education point of view, we talked about this on the panel. I would love to see prop trading become the accepted pathway, gateway into trading the live financial markets. It's a great place for people to learn and hone their craft and learn and understand about risk and understand things. But equally, go in and become a prop firm owner yourself and start to make some revenue from the business, not just as an end user trader, but actually get yourself inserted as a prop firm owner. Can you tell us anything about what it takes behind the scenes at Prop Account? And I mean, it must be a huge job to manage all these white labels. How do you sort of keep on top of all that?
I employ a lot of people smarter than me. So we've got some brilliant developers and engineers, great operating team, and we've really built our operations both back end that the operators and the traders never see, but also the operators admin CRM portal as well as the trader journey to be as automated and scalable as possible. And it's just this sort of big, beautiful machine that runs, and we handle and supervise and maintain all the unsexy stuff in the background that allows other people to push their brand, get their face out there, grow their audience, grow their revenue. But everyone more or less brings to the table what they do best, and we provide complementary skill sets and subject matter expertise, and it all works.
How many versions of a prop firm are there? You say you've got stocks and indices and CFDs and futures. Can you tailor and customize your prop firm? Can you focus on one asset alone, or offer? Or does it have to be all?
No, it's a menu. It's an a la carte menu that the operator can choose what they want to offer. So we make everything available all for the same one-time price with no monthly fees. And you can choose to launch with, say, just FX, and then 3 months later, if you want to add futures or prediction markets, you can just submit a ticket and we'll go and build it out. It'll typically take maybe a day to outfit you for those other asset classes or challenge types or additional platforms that you might want to make available, and then it's just part of the offering. So it's very painless, and it allows for what I'll call natural evolutions of the business, because you start out thinking your audience wants one thing, but maybe the industry shifts on you, or maybe you find success in marketing yourself a certain way, and now you want to deliver a product that matches what that audience is looking for or expecting. And we have a vested interest in your success, so we want to make that available as quickly as possible.
Where are the new places where you're seeing a lot of growth coming from? I mean, obviously, America's your home turf, but I know there's lots in the UK, Middle East, and Europe. Any other jurisdictions that are becoming more popular?
Brazil has been very big for a long time, but we're now starting to see more of Spanish-speaking Latin America adopt prop trading. Definitely more and more parts of Africa. Still waiting for China to come online fully. China is such a huge market in the OTC space, but it hasn't quite happened yet for prop. But that's starting to happen. It's just by no means fully tapped or saturated at this point.
You should have been on the plane a couple of weeks ago to Beijing, maybe with Elon, and I think maybe you've got.
Yeah, I appreciate the sentiment. I don't think I belong quite with that crowd yet, but
okay.
Yeah,
But it's,
I'm sure they were quite influential in those meetings. Yeah.
When it does come on board, I imagine China will just run away with itself, because it's a natural space that for the business there. I mean, it's fantastic. Congratulations. I know you stand behind quite a lot of the big brands in the business, and probably a lot of people don't realize that you're there. Are you ever tempted to launch a direct to end of user brand, or
No, we're pretty self-aware. We know what we're good at. We know what we're not good at, and our lane is the B2B space, and we want to enable the other B in that relationship to connect with the C. And so it's a B2C model. We're not trying to be all things to the marketplace, and we are building out more and more tools every day to help our licensees connect more with their intended audience through marketing creatives and user experiences, and obviously new platforms, new asset classes to trade, new challenge types. We just launched paid entry trading competitions recently, which is something we think will catch on pretty quickly. So no, I don't have any delusions that I think I'll be running the next biggest, largest prop firm. I think we'll stay in our space and continue to pursue operational excellence and let other people take the credit.
Fantastic. Well, Justin Hertzberg, CEO of Proper Count, thank you so much for joining us again. We'll see you in London in October, but I know the team are going to be at the IFX in Cyprus next month. I'll be there as well, which will be great. Anywhere else that we can catch the Proper Count team live?
We'll be in Dubai at the end of September at the Forex Expo.
Sure.
And then again with you in January in Miami.
Miami, I know. Fantastic. Very exciting indeed. Where do people go? I mean, clearly propercount.com is the website, social media channels as well. But you can just get in touch with you, and you'll get through to a live person to speak if you're interested in finding out more about how to get started. It's quite a simple process, but you've got somebody at the other end of the line that would be able to talk you through it.
Yeah, we're real people that that you can reach and get a hold of, and we work very closely with our partners to help them grow their brands. And yeah, you can go to the website. You can feel free to share my information, Simon, and hopefully someone out there is interested in learning more and would be happy to connect.
Will do. Fantastic. Wilson, thank you for your second input today to the show. It's been a great event all in all. We've had plenty of people through live watching us, and of course we got the replays and the content now. So there's lots of people who might be watching this on replay, but all the links will be live. So I'll let you go, as I know you've got a busy day over there in the office, and it's been a pleasure to have you on the show again, and hopefully we can do it again in the future.
Sounds good. Thanks for having me as always. Appreciate it.
Give my regards to everyone. Thanks, Justin. Bye.
Bye.